Good morning. My name is Greg Lewis, and you are 2 minutes away from day 2 of the MetaStock Traders Conference. Today, we're sponsored by MetaStock, TechnoTrader, CMT Association, and Stocks and Commodities Magazine. I have notes. So again, we start here in about 2 minutes. Don't forget to like and subscribe and ring that bell. That way you'll be notified when events like this happen, and they happen quite a bit. Speakers. Today's speakers. Oh, let's look at that really quick. I believe we're... Oh, that's the wrong... No, that's the right button. So today we're going to be headed up with Daniel Sinnig. And then we'll have Martha Stokes, John Thomas, Kelly Clement, our very own Kelly Clement, Jake Bernstein, and Oscar Carboni, and Tushar Chande, and John Seville. Okay. Whoop. So, a couple things before we start. Make sure to participate, say hello, comment, make questions, be crazy, be happy, be sober. All we ask is that you be nice to and respectful to our speakers and your co-watchers. And also, if you would like to receive or be eligible for the door prizes that Jeff Gibby is going to be offering throughout the day, make sure to register. Just go to metastock.com and click the banner at the top, and you can go to metastock.com/traders-conference and register. Okay, we're going to be starting here in about 11 seconds. I'm going to let you listen to some jazzy music till we begin. Thank you so much, and successful trading.
Hey, good morning, everybody. Welcome to day 2 of the Traders Conference. We're so excited to have you here. Thanks for joining us. If you're joining us on the GoToWebinar side, welcome. And also on the YouTube side, we do have both sides of the presentation going. So welcome to all of you. We're excited to have you here. We're excited for another great day of education and learning. My name is Kelly Clement. I'll be helping kick off this morning. I'll also be one of your presenters later today. So I'm excited for that. But first, let's welcome you to the conference. Now, as we go throughout the day, one of the things I always like to say at the beginning of a conference is make sure you're asking questions. You're here to learn. You're here to understand what's going on in the markets, better your trading. What better way to do that? By asking questions throughout the day. So make sure you're asking questions. Make sure you're involved. It helps a great deal for you and for our presenters to be able to give you more information around what you want to learn. So make sure you're asking those questions throughout the day. Now, the second thing I get to talk about is a disclaimer. So this is the big thing that we start with. This demonstration is designed to instruct you on using MetaStock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software or with anything in conjunction with the company. Now, the other thing is we don't endorse the purchase of any security. We're not here to tell you to purchase anything. We're not paid for promotion of any security. We're not compensated for the promotion of any security. So definitely don't take any trades based off of the information provided today. It is for informational use only. Now, as we kick off the conference, one of the things that we'd like to do is actually thank our sponsors. We have 3 different sponsors who are, well, 4 different sponsors actually, who are giving a sponsorship of the conference and helping us provide this awesome conference. The first one is Stocks and Commodities Magazine. Stocks and Commodities Magazine has been around a long time. I'm going to take off my headset because I can hear myself talk. Stocks and Commodities has been around for a long time, providing great information to traders about different indicators, different information about trading and ways that you can trade better. And they've provided information since 1982, with over 17,000 articles provided in their archives and over 1.3 million subscribers. Great sponsor. We love working with Stocks and Commodities Magazine. If you haven't seen it, go check them out. The next sponsor we'd like to thank is the CMT, that's the Certified Market Technicians Association. This is an organization that can help traders really understand the depth of the market. They provide awesome education around how to actually understand the depth, and then they will help you take tests to make sure that you understand what's going on and help you get certified to get a CMT designation. If you're looking to further your career or help your trading, CMT organization is a great organization to do that. They help you learn about risk management, quantitative system development, portfolio management, and applied behavioral finance. Lots of great information from CMT. You can check them out at cmtassociation.org. And then also our newest sponsor to this conference is TechnoTrader. So TechnoTrader has been a long-term partner of ours, providing great market education and how to trade. TechnoTrader has a lead technician. Her name is Martha Stokes, excuse me. And Martha has been, again, a great partner. People love the way that she teaches about the market and the way that she helps people understand the market. You can visit and learn more about them at technotrader.com. But here you can see they talk about a lot of different things. They talk about all-encompassing comprehensive methodology for all styles for short-term to long-term trading, taught by market professionals for more than 25 years. Martha is actually one of those CMTs that we were just talking about with the CMT organization. She teaches you how to learn and identify dark pool activity on charts and have so many positive reviews over the year. It's amazing. Okay, you can visit and get more information about TechnoTrader at technotrader.courses/pages/metastock-conferences. So if you go to that URL, you can learn more about TechnoTrader and what they offer. They offer some great trading courses. They have their Elite Trading Methodology Course Plus that you can go through that offers over 20 and a half hours of video and takes you through all this great information on the markets. So feel free to check out that course. And you can see here a great example of all the different tools that they offer in MetaStock that can help you understand the markets, what's going on, understanding that dark pool activity, and the different ways of trading. And you'll hear more from Martha throughout the conference and talking about dark pools, what they are, how to trade them effectively, and how they can actually influence your trading. So it's great information to check out. We, of course, are MetaStock. We are the hosts and one of the main sponsors of the event. You'll be hearing more about MetaStock a little bit later today through my presentation. But MetaStock allows you to scan the markets, focus on opportunities, test your trading ideas across all markets, forecast, get real-time alerts, commentary, signals, and all that starts at $59 a month. You can get an extended trial of MetaStock at metastock.com/conf-promo, or visit us at metastock.com/sales-chat, or give us a call at 800-882-3040. Now, let's actually talk about our first presenter this morning. And our first presenter this morning is Daniel Sinnig. It's actually awesome. I actually got to spend a couple of days traveling around with Daniel this last weekend. We were up in Toronto and Montreal together, and we were attending some conferences together. We were doing some dual presentations, and it was great to sit with Daniel and listen to kind of in this intimate setting and talk about the markets with Daniel. He has such a great understanding of the markets and such a unique way of looking at the markets and understanding them. So I'm excited to be able to listen to Daniel once again and get his take on the market. He always has some great things that he's going to talk about, some little tips and tricks about the market. So Daniel, let's go ahead and bring you on. Are you there?
Yes. Hey, Kelly. How's it going?
It's good.
Everyone, greetings once again. Nice to see you. It feels like we've been spending quite a bit of time as of late.
Hey, it's quality time. It's quality time.
It was fun. Yeah, we did the MetaStock Toronto and Montreal event. along with some socializing with nice dinners and beers. So it's been
It
fun.
was. It was a good time. It was a good time.
So let me
Let's see.
quickly put on my camera if I can find the right one. Let me see. There we go. All right. Hey guys, how's it going?
Yep, I can see you. You look good. Let me make you the presenter here.
Perfect. Okay, so I'm just going to zoom in the camera also. Give me 1 second. Okay. I guess it's fine like this. All right, so let me go ahead and share my screen, and then let's get started.
Okay, I'll let you know when I can see your screen.
Perfect. It should be visible now.
Okay, I do see your screen. I see you. You look good.
All right.
Get out of your way.
Perfect. So, well, welcome everyone. Also from my side, my name is Daniel, and I am with tradingindicators.com. I'm going to talk about our company in just a bit, but before I get started, I would like to point out that, I'm greeting you guys from our headquarters here in Montreal, from our trading desk. And, I spent the last weekend with Kelly, and we had the MetaStock event here in Montreal. And it's been one more time proven to me how useful MetaStock is to identify quality trade ideas and setups. And you know what? I typically have my setup plan for or my presentation planned out, but I decided to change it up a little bit today, and I want to make it as hands-on as possible, because I'm going to show you what I have done step by step yesterday evening after the market closed to find out what is my trade for today. It's only 3 steps, and best of all, everyone will be able to follow along. And I've done this using MetaStock and using our trading indicators. One is called Divergence Cloud, and the other one is called Trend Radar. And especially Divergence Cloud is an indicator which is powered by artificial intelligence technology. There are 2 things which are driven by AI. One is our odds prediction technique, which will allow you to estimate the odds of your next trade before taking it. And the second AI feature that we've integrated is called an auto optimization feature, which will find the best parameters for you based on the symbol and time frame at hand. All right, so let's get into this. And let me give you an example first. So, how would you trade if you would know the odds of having a successful trade before taking that trade? And I guess the answer is fairly easy. So if you knew, okay, the odds of winning my next trade is at 73%, let's say, the chances are, okay, that seems pretty good. You may consider taking that trade. But if on the other hand, perhaps the odds of winning your next trade are only 40%, I guess it would be quite the opposite, that you would stay on the sidelines. And oftentimes I say to our clients and our community, sometimes not taking a trade is the best trade advice that you can get. All right, so we are trading indicators. We believe that putting our money where our mouth is, and I've been with MetaStock many times, and most recently I was at the MetaStock GOAT event on April 29th, and during that event I called out a trade which looked pretty promising at that time. I used the exact same technique as I will show you today. And I called out a long trade of Motorola Solutions, MSI, because that stock was in a healthy uptrend. We just had a nice pullback, which is the best friend if you're a trend trader, because that's when you want to pay attention. And most importantly, we did have an entry signal as per our Divergence Cloud indicator. I'm going to talk about this indicator in just a bit. So I called out this trade, took along at 350.50. Target just at the upper end of this trend channel, and the stop loss just below this swing low here. And as chance would have it, this trade just hit its target last Thursday. So this uptrend did continue as predicted, and we did hit our target last Thursday, making this a winning trade. So this was something that worked out very nicely, and we called out this trade on April 29th. Now, I'm going to do the exact same thing today. I'm going to call out yet another trade idea. And in this case, it's going to be another long trade. And Long Marriott International is stock in the S&P 500. in the consumer discretionary sector. And the idea here is to go long via a stop buy entry at level 242, this blue line here. Our stop loss just below this recent swing low at 229.50, and our target just below this recent all-time high at 259.50. All right, so, and in this presentation, I'm going to focus on how I picked this trade and why. And best of all, everyone will be able to follow these steps because they're very simple. They're actually quite mechanical. You don't need to be you don't need to have a PhD in finance to be able to follow these steps. So this is my objective. And of course, should you have any questions, guys, by all means, ask those questions, put them into the chat box or in the questions panel, and Nicholas or Kelly or myself will look out for these questions and answer those as I go through this presentation. All right, so, but before we get into all of this, let me introduce myself properly. So my name is Daniel Sinnig, and I am a managing partner at tradingindicators.com, which is our online store where we offer our flagship trading indicators. But before we talk about this store, let me give you a bit of background information, because my background is actually a bit different perhaps from the typical background of the speakers that you may encounter at these kind of events. My background is in software engineering, and for the longest time, my career objective was to become a professor in software engineering. So I jumped through all the hoops. I did my master's, my PhD, my postdoc. I taught at various universities around and in Montreal. But you know what? At the same time, I was always fascinated by the world of finance and trading. So I started trading on the side. But as you start out as a trader, typically you don't get everything right. And I also made a lot of mistakes when I started off. I overtraded. I traded when market conditions were not proper. I took too much risk, and so on. And after donating quite a bit of money to the markets, I came to the hard realization, oh man, trading is not easy and I need help. And for me, as a software engineer, needing help meant I need better tools which will help me make better trading decisions. So I rolled up my sleeves and I started coding. And the first tools that I've written were tools which were for my own purpose. But then I realized, man, if these tools help me make better trading decisions, perhaps they will help others as well. And this is really how the story behind trading indicators started, because all of the tools in our online store, they have been written foremost for our own purposes. And only once we've vetted them as useful and helpful, we then put them out into the public on our online store. All right, but enough about me. Let's get into today's topics. How did I identify this Marriott trade idea? And of course, a quick reminder that this is a trade idea and is for informational purposes only. And of course, if you trade, keep in mind that trading does contain substantial risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is capital that you can actually afford to lose. When it comes to hypothetical or backtest performance, keep in mind that this is not necessarily indicative of future performance. But with this out of the way, let's get into it. So this is today's trade, a long trade of Marriott International. Ticker symbol MAR. Now, how did I find this trade using MetaStock? Well, actually, it is quite simple. It's only a 3-step process. What we're going to do right now is we're going to repeat this process step by step so you guys can follow along. All right, so step number 1, I ran a scan in MetaStock, and perhaps the best feature, there are many good features in MetaStock, but perhaps the most influential feature of MetaStock is its scanning capability. It is so powerful. All right, so step number 1, run a divergence cloud scan. Now, divergence cloud is one of our indicators. I'm going to explain how this indicator works in just a second. But let's start the scan so we can let it run in the background while I explain what this indicator is all about. So I'm going to switch over to MetaStock. There we go. I'm just going to drag it in. And the first thing I'm going to do is I'm going to open up the power panel. All right. And by the way, with MetaStock 19, there have so many nice, cool features have been introduced into the platform, which makes this process even easier. All right, so in the Power Panel, I then went down to the Explorer tab here, and I've chosen our Divergence Cloud AO Signal Scanner. I'm going to explain a bit more what this scanner does in just a bit. So I selected this one, and I also decided to scan through the S&P 500 symbols, just to keep it fast. Because the more symbols you select, the longer this scan will run. Because we have only limited time in this presentation, I decided to only focus on the S&P 500s. All right, and I'm running the scan on the daily chart. All right, so I'm going to start the exploration, and this will open up a new window. And after a couple of seconds, you will see that, you know, the scanner is running, and it's super fast. Look at this one. We're almost done through 50 symbols, and I'm telling you, after 1 minute or a bit more, this scan is going to be completed. But instead of waiting, let me go back to my slides and explain to you what are we actually scanning for here. All right, so back to my slides, and we are running a scan for entry signals of our Divergence Cloud indicator. Now, if you are familiar with the concept of divergence, you may know that divergence signals a disagreement in the market, a disagreement between a price may move up or down, and an underlying indicator. And if these are forecasting two different things, there's a disagreement. And oftentimes, this can be a telltale sign that, hey, something is up. Something may be changing. Perhaps an uptrend may come to an end and reverse to a downtrend, or vice versa, a downtrend may reverse into an uptrend. Now, there are many forms of divergence out there. Some popular ones are MACD divergence, stochastics divergence, RSI divergence, and so forth. But what we've done at Trading Indicators, we have developed our own notion of divergence, which we call volatility momentum divergence, which contrasts price move with underlying volatility. And you know, if they disagree, then it will either forecast a bullish divergence scenario or a bearish one. And oftentimes this can be very telling that something is about to change. As you can see here in green, we've also equipped this indicator with our AI technology. And when this comes into this whole thing, we're going to see in a second. So let me quickly go back to MetaStock to see if that scan has completed. And in fact, it did. So we now run the scan through all 503 symbols of the S&P 500. So you can see here, this only took 1 minute and 11 seconds. So it was super, super fast. All right, so we have our results here. We can see that we have 10 symbols, you can see it here, which either have a long entry signal or a short entry signal. So you can see here stocks of long entry signals. If this column here, the long SIG column, has a number 1 written in here. So we have 7, if you scroll down here, 7 long entry signals, and if I sort by this one, 3 short entry signals. But you know, as stock traders or stock investors, typically what most people do is they will focus on the long direction. We're going to do the same thing here. So let's focus on our long trades. So now we have 7 stocks with long entry sequence on the most recent bar. All right. Now, we only ran this scan through the last 500 or through 503 symbols. That's not a lot. Usually when I ran the scan, I ran through thousands of symbols. I included the NASDAQ 100, the mid caps, the Dow Jones, some foreign stocks, some Canadian stocks, and so forth. So I would easily scan through perhaps 2,000 or 3,000 symbols. And you can imagine if you scan through this many symbols, you will get way more results or way more stocks with entry signals. But now the question is, because you know this may take quite a while to go through all of these, wouldn't it be nice if there was a way to rank my signals by their quality directly in your scan results window? And this is exactly what we have developed. Because with each signal that you see here, with each long signal, let's see, in the scan results, you can see directly what are the estimated odds of winning this trade, of making this trade a successful trade. You can see this here in this column. It's called long IET. So long IET stands for the estimated win rate for my next long signal. So in this case, it would be 74% for this stock. For Delta, 73%. For Energy Inc., 75%, and so forth. So what I've done is I then simply sort my signals by this percentage by simply clicking on this column. I'm sorting it from highest to lowest. And we can see here that the highest rank signal is this very first one, SVC enter, followed by Marriott, followed by Genuine Parts, and so forth. All right, so this is the first step of this process. I'm scanning for entry signals and I am ranking these entry signals by their quality. And this is possible. And let me go back to my slides one more time. This is possible because we have developed a completely new generation of signal scanning, which exceeds plain old scanning by quite a bit. Because you may have run your scan on your own, and typically when you run your scan, you get some entry signals for buy signals, for sell signals, but there's no way to distinguish of which signals have the highest quality. You can't rank them. This is where generation 2 scanning comes in, because now with MetaStock, we can not only scan for signals, but also rank them, sort them by their quality, and focus on the ones which have the highest chances of succeeding. A huge time saver. But we decided to push it one step further. We call this generation 3 scanning, because what MetaStock is doing in the background, or what the scanner is doing in the background, it will use optimized parameters for each symbol it scans through. How this works, we're going to see in a bit. But instead of using the same settings for every symbol, we are using customized and optimized settings on a per symbol basis, which can make all the difference. We're going to revisit this topic in just a bit. Now, back to my scan results. Actually, before I do this, step 2 is check out the charts. It's so easy. So back to my scan results. All right. And we can see here that this is our highest ranked stock. So let's open it up. So I click on this symbol here on the right, which will open up this stock on the price chart. Let me just drag this over a little bit so we can see what's going on the price chart. And after a couple of seconds, oops, what's going on here? Charting error. Let me reload it, perhaps. And maybe I am not connected on this one. That's a bit odd. Let me just quickly see what's going on here. Oh, I'm offline. Perhaps I lost my connection. Let me just reconnect real quick. Go online to see if I can re-sign in, and then hopefully we'll be able, oh boy, unable to authenticate. Okay, well, that's the beauty of having a live demonstration. Let's see what's going on. In the worst case, I will simply restart MetaStock. Let me try it one more time to see if I can get in. All right. Nope. So I'm just going to restart my MetaStock. This can happen sometimes because I just changed locations. Perhaps MetaStock went offline, and I'm just going to restart it real quick. This should just take a second or so. Yes, go ahead.
I was just going to say, down in the, if you still have your...
Oh, say that again? Yeah, I'm pretty sure. Yeah, it's perfect. And if there are any questions, let me quickly see if there are any questions coming in at this point while MetaStock is restarting. Yeah, this is the beauty of having a live presentation. Yes, go ahead, please. Yeah. This has to do, and this is actually a great question. I think it's maybe a bit premature to answer it. It has to do with our optimization. Oh boy, if I still get this message, unable to log in. Okay.
Okay, here's what I want you to do, Daniel. I'm sorry, this is Kelly. So down in the bottom right-hand corner of your taskbar,
yeah,
I want you to click on that, and you should see the icon.
For Refinitiv, huh?
For Refinitiv. So close down MetaStock, and then right-click on that, and shut that down completely.
Okay.
And then,
all right.
yeah, so shut down MetaStock 2, and then make sure that that was still closed down.
All right. That's
And
good.
now,
Some live debugging.
Yeah, we're good times.
Let me just drag this in here. And Jeffrey, if you have that question while I'm doing all these steps about the YouTube user, please, by all means. Oh yeah. Oh, that's true. That's true. I completely forgot about that. It goes that fast. Yeah, this has to do with our optimization routine. So by default, our optimizer optimizes over the last 1,000 bars to find the best settings. So what we do is we like to give the scanner just a few more bars to load so the optimizer can do its work. So rule of thumb is 1/4 on top of what the optimization period is. That's why it's 1,250. But this is directly correlated to over how many bars you want to optimize the settings. And this is a setting actually in the parameters of our indicators where you can choose this. So you can choose maybe 500 bars, 1,000 bars, 2,000 bars. But if you do, you just simply increase or decrease the number of bars to be loaded in the Explorer. All right, perfect. So let me see. It's looking better. So MetaStock is starting up. Excellent. Great tip about the Refinitiv. That did the trick. Perfect. All right. So now this is loading. And let's go back to the Power Console. And let me just, I probably have saved my reports. I'm going to go down to my scan. And some of the beauty things about MetaStock is that it will save in all likelihood, the report. I can see it here, this little R icon. It means there is a report present. So right click, I'm gonna go to my report. And with any luck, we should now see the exact same list of 10 symbols which we picked up. And then we sorted them by the long win rate. And the first one was this symbol here. So I'm gonna open this up on the chart right now, and there we go. Perfect. All right. A bit of a detour, but it all worked out nicely. Now, okay, so it's great. So we have the chart open, and the first thing that we can see is that indeed, when the market closed yesterday, you can see it here, we did indeed have a long entry signal because that's exactly the scan we are running. I was running the scan last night when the market was closed down. So perfect, we have our long entry signal here. And if we go to our expert commentary, just open it up right here, we can also see that the win rate, the predicted win rate for winning this trade is indeed, if I scroll down here, is indeed 82%, just like what we had in here, 82.75%. So this matches, which is great. Perfect. So this matches, but there's one more thing to be considering. Of course, you could follow the signal blindly, which is one way to do it. And we've back tested this by quite a bit. And over time, the odds will be in your favor. So this is one way to do it. But there's one more thing I would like to do, or I like to do, to push the odds even further in our favor. This is what I call is a bit of due diligence. So if I go back to my slides here, I recommend to take each signal of our indicators, and in fact of any indicator that you may use, with a bit of grain of salt. You know, second guess it at least a little bit to make sure that you actually take into account the current market conditions, that this signal actually fits into the current market conditions. So let's do this. So what do I mean by this? So if I go back to the chart here, we can see for this symbol, especially if I zoom out a little bit, I mean, you don't need a PhD in finance to see this has been, I mean, if I see a good example of a sideways move, this would be one of them. Would you agree? I mean, this stock has been ranging between 50 and 75, let's say, for years. It's very much range bound. There's no directionality, at least not in the long term, for this stock whatsoever. All right, this doesn't take a PhD. It's very much range bound. It is very sideways. But now we do have this long entry signal, and it's long. Okay, it has a good win rate of 82%, but we are trading right towards this upper end of the sideways channel. And historically speaking, these channels often act as levels of resistance. We're trading right into this area of resistance. To me, this is not an ideal scenario, because what happens oftentimes at these levels, well, you may see a bit of a bounce back, a retracement. And since this stock has been sideways in this channel, it's been caught in this channel for years now, I personally do not like this signal too much, despite the fact that it has a very high win rate. But that's not a big deal. So personally, I don't like it. And if I don't like it personally, I will not take the trade. I never force a trade. A trade needs to come to me. It needs to make sense to me. So let's move on. Let's go to the next symbol. And now in MetaStock 19, you can simply click on this little arrow here, the arrow facing to the right-hand side, to open up the next symbol in our scan results. And this is Marriott International. You probably remember Marriott from the very beginning of this presentation. Now here, it is quite a bit different, especially if I zoom in a little bit. You probably agree with me. Let me just hide the expert commentary for a second. You probably agree with me that this stock has been trending up. It's not caught in a sideways move. It's caught in an uptrend. And if something is trending up, what I like to do is to draw something that's called a trend channel. So I can draw this trend channel like this. It's not rocket science. It doesn't have to be completely exact, but just to understand a little bit of what's going on. And Kelly actually showed me another trick when we had our event in Montreal yesterday or the day before. If you do a right click on this trend line, you can actually select create parallel trend line, which gives me another trend line right here. Can adjust it. And if I just put this trend channel here, I can see one thing. We are, first of all, in an uptrend, a very beautiful uptrend. It's almost the higher highs and the higher lows are running almost in parallel to each other, which is a very good sign. And as a trend trader, something very interesting is happening. We just had a pullback. And the pullbacks are our best friends as trend traders, because what we don't want to do is to enter at the upper end of this trend channel, because oftentimes a retracement is imminent. You can see it here, it went up, it retraced. It went up to the towards the upper end of the trend channel and it retraced. Instead, what you want to do is you want to enter at the lower end of this trend channel, just around here, or even further down here. But this is not bad. At least it's not in the upper half of it. All right, so this checks my boxes. But there's one more thing which I always consider when identifying trades. I look at this heat map down here. This is our trend radar indicator, which will show you at a glance what is my long-term trend doing. This green row at the very bottom here. What is my medium-term trend doing? These middle rows, and what is my short-term trend doing? And we can see here that in the long run, this green color all the way at the bottom is green. So we have been bullish pretty much consistently since, I don't know, November 2022 for a very long time. But of course, every once in a while, we do see these red areas here in the short-term and medium-term trend. And these is what we call healthy pullbacks in an uptrend. Again, your best friend is a trend trader. And trend radar is designed to signal exactly this. So right now also we have these reddish area in an overall long-term bullish scenario. Once again, this is a healthy pullback, a great opportunity to enter into this trend trade, especially when combined with an entry signal of divergence cloud, basically signaling that this pullback, this bearish move, short and medium term, is coming to an end. Something is not lining up, and it may reverse into a bullish move again. Basically, forecasting a continuation of the overall uptrend. And if you look historically, we had exactly the same thing here. Look at this red area here, this nice pullback, followed by an entry signal of divergence cloud and a nice follow through afterwards. And something similar is happening right now. This is exactly why I have picked this stock as my trade for today. And in fact, if you look at the today's price action, if I zoom in a little bit, we can see that we've probably got filled already. The high price is at 241.22. And in my trade idea, if I just go back a little bit, where is it? Oh, it's at 242. So yeah, we did get our fill. Did we? Oh, not yet. Not yet. We're 80 cents shy of our fill. So I did want to see a bit of a follow through above this recent swing high. So if we go back to MetaStock, we can see that, we do have this swing high. I wanted price to, because it bounced off twice here, to, go above this level, then enter into this trade as extra confirmation. Hey, this bearish pullback is coming to an end. Now the bulls are taking over, and hopefully this overall uptrend will resume. And as my stop loss, I like to take these trades as aggressive as possible. I could put my stop loss at the lower end of this trend channel, but I was thinking in this case, let's just put it at the below these swing lows, because price has retraced or tested this low twice, once here and once here. Let's put our stop loss just a little bit below these two swing downs, and our target just a bit below the recent all-time high. Why is that? Are two reasons. First of all, when an all-time high is approached, oftentimes we do see a bit of a retracement, because some people are trying to take profits at this point, and we also do have a psychological number at 260 around this area. This is why I called out my profit target at 259.50. All right, so this brings me to step 3 of our process, which is plan out your trade. So what I've done just quickly right now is to decide where is my entry. I would like to see a bit of a follow through above this level to avoid further sideways action. Once I see this follow through, we're going to enter into this trade via a buy stop order. Our target just below these recent swing, our stop loss just below these recent swing lows, and our target just below the all-time high of 260. And it's as easy as this, but it's important to plan out your trade, because you need to understand what is my reward risk ratio. Let me just go back one more time, because I like trades where the reward risk ratio is at least above 1, meaning that what I can gain from my trade is bigger, is higher than what I would lose if I get stopped out. So in this case, my reward risk is at 1.4. So meaning that my winner is about 4 times higher than what I can lose with that trade. All right. So I hope this clarifies how I identify this trade using MetaStock. It actually was quite a simple process. Now, let me go back to my slides and talk a little bit about our trend radar indicator. So this indicator is designed to show you what are the current market conditions all about. You don't need to do a trend analysis or anything or drawing trend lines. All you need to do is to simply look at this heat map down here. For example, here we can see for this symbol, once again, we are in a long-term uptrend. You can see it right here. The last row is greenish. But we did just recently have a pullback into this uptrend. Once again, for this symbol, it would be for the S&P 500, it would be a nice opportunity to consider a long entry. All right, so back to my slides, and let's contrast this picture of trend radar, which is predominantly green, with what we have seen on our previous symbol, the one that I disqualified because it was too sideways. Look how it looks. It's like red, green, all over the place, clearly showing you, hey, this is a sideways move. And if you're a trend trader, you want to avoid these sideways moving or ranging stocks because they're not moving. And chances are, even if you took this long entry signal here, we may see a pullback at this level of resistance. So by simply consulting what is trend radar doing in terms of coloring and how does the overall chart look like, I can make a very quick decision of whether I like this symbol for a long entry, for a trend trade, or whether I do not like it. So in this case, you probably would agree with me that this is a much more solid setup for a long entry, for a trend entry than the previous one. All right, so this is our trend radar indicator, and I showed you already how I planned out this trade. Now, to recap just a little bit, our divergence cloud indicator is giving you entry signals. You've seen this, but it will also give you exit signals. I didn't talk about this yet. So let's have a quick look at how this will look like. Now, if I zoom in a little bit, you can see here, for example, for this long entry signal, which was a beautiful signal, we have 1, 2, 3, 4 smaller arrows in the opposite direction. These are exit suggestions, because entering to a trade is one thing, but once you're in a trade, what do you need to do? You need to manage your trade. You need to get out of the trade. There's one story I like to tell to our community or to our new members, is that that's an anecdote. So two traders are meeting in their trading room at 9:30 in the morning to trade the let's say the E-mini futures. Trader Tom decides, okay, I'm going to go long the E-minis at 9:40, and trader Daniel decides, hey, I'm going to go short, also at 9:40. But at the end of the day, both trades worked out profitably. How is that possible? Well, the answer is it's all about the exits. Both traders timed the exits perfectly. And most people only focus, or traders only focus on the entry, but timing your exit is just as important. This is why we've equipped our divergence cloud indicator also with exit suggestions. Regardless of what your technical analysis may say or what your trade planning, the indicator will also give you some signs. Hey, things are changing. Maybe it's slow. Things are slowing down. Perhaps think about taking profits and taking some risk off the market. I can see this with these little arrows in the opposite direction of the entry signal. And the same thing holds true for shorts. So here we had a short entry signal, and shortly after, because things were slowing down, we see one exit suggestion here, another one here, and another one here. And then we close out the trade when a signal in the opposite direction came along. So Divergence Cloud will give you both entry signals and exit signals. Now, I've shown this trade on the daily time frame, but Divergence Cloud and our indicators in general, they are not limited to this time frame. You can use them on intraday time frames, be it the 1 minute, the 5 minute, the 50 minute, or whatever it may be. You can use it on tick charts, on range charts, and so forth. You're also not limited to stocks only. You can use our indicators on any asset class, futures, ETFs, FX, cryptos, and so forth. We've seen that Divergence Cloud will give us our real-time statistics, our predictions based on AI technology, using AI technology. What is the estimated win rate of winning my next long trade? So let me recap this real quick with Marriott. So with MetaStock, all you need to do is you go to Expert Advisor, Commentary. This will open up a new panel. And down here, I just drag this up a little bit, you can see that as of today, as of May 21st, which is today, we can see that the odds of winning our next long signal, the signal right here, are at 81%. And for short signals, it's only at 61%. So quite a bit of a difference. And yet another telltale sign that this stock is performing better in the long direction, which is not very surprising because it's a very bullish stock. Yeah? What you can do as a trader is you can use these numbers to further filter your signals and only focus on these signals which have the highest odds of being successful. And if you pair this with some basic chart analysis, what I've just done here, you can really push the odds even further into your favor. All right, so all our indicators come with these real-time statistics, and something I didn't talk about yet is our auto optimization feature. Now, if you have used indicators before, you may know that, hey, an RSI indicator comes with a period parameter. A MACD indicator comes with several parameters, and so forth. But how do we know which setting, which parameter is best for the symbol and time frame at hand? Well, in fact, it changes. It depends really on the symbol and how the price chart looks like to find the best settings. So what you could do, of course, as a trader is you could manually play around with these settings. But that's very tedious and time-consuming. As a trader, we don't want to be consumed with this kind of work. Because as a trader, what you need to focus on is on the final decision of whether this trade makes sense for me or perhaps not. This is what you should focus your energy on, not on fiddling around with parameters. This is why we have equipped our Divergence Cloud indicator with an auto-optimization feature based on AI, which will test, in this case, hundreds of configurations or settings to find the best ones for this particular symbol. Marry it on the daily chart. Look at these settings here. It's not important what they mean in this context. So ATR period of 10, divergence look back of 14, min move of 100. Guess what happens if I change symbols or time frames? So let me change the time frame, perhaps from the daily to the 10-minute time frame, and observe what happens to these settings, 10, 14, 100. So I change to the 10-minute. It's recalculating. And now the best settings for this time frame are 15, 28, and 175. Why? Because on the 10-minute, things look very different. Yeah, different from the daily chart. And the indicator is smart enough to adjust its settings based on this new chart, the 10-minute chart. This re-optimization happens whenever you change time frame or whenever you change symbol. So you are always guaranteed to use the best settings for this particular chart. One of the features that we've integrated into all our indicators. All right, so this is what we mean by auto-optimization. Now, if you're wondering, are these indicators something I could use? Let me help you a little bit. It doesn't matter, really, whether you're a day trader, a scalper, a swing trader, or investor. These indicators, they will work on all time frames and chart types. So not just the daily chart, on everything. It also doesn't matter whether you trade stocks or FX or futures or cryptos or whatever. You can use our indicators, Trend Radar and Divergence Cloud, on all these asset classes. And of course, we do support MetaStock, and our indicators are fully compatible with the brand new and shiny MetaStock 19, which has a lot of awesome improvements over MetaStock 18. But we also offer our indicators for MetaTrader, NinjaTrader, TradingView, Thinkorswim, TradeStation, ModifWave, and so forth. So you can really pick what you prefer in terms of platform as well. Now, and if you're a little bit like an engineer like me who believes in that tools can make your life easier and good trading tools can make your trading life easier, then these indicators are definitely for you because they will do most of the heavy lifting for you. They will show you the win rates so you can focus on the signals which have the best chance of succeeding first, saving you a lot of time, and they auto-optimize, finding the best settings for you automatically so you don't have to do it manually. And just by having this taken away from your task list will help you to channel your energy and your focus on actually what matters the most, on whether I should take this trade or perhaps stay on the sidelines, because this is what you want to focus on as a trader. Now, we do have put together a special offer as a big thank you for all attendees for spending this morning hour with me. We call this the Trading Indicators Welcome Package. Basically a package which brings you not only into our trading community for life, but will also give you lifetime access to the two indicators which I've shown you in this presentation. So you will get our Divergence Cloud indicator, which comes with our AI-assisted odds prediction technology and auto-optimization. And this is for life. So you never have to pay a single penny again. We're going to supplement this offer with a couple of bonuses. So most importantly, you will become, or you will get access to our exclusive members-only live market sessions, which take place every Tuesday at noon Eastern. So exactly in 1 hour from now, we will have our next session. Of course, these are all recorded. Should you miss one, no problem. You will also be invited to our members-only Discord channel, where you can learn about tips and tricks about our indicators, ask questions to get instant help, and so forth. So we typically offer this membership for $9.97 a year. But if you come on board today, we're going to include this membership in your purchase price of this welcome package, so you don't have to pay this. And you will also get, on top of this, our Trend Radar indicator. If you remember, this is the indicator below the price chart, which will allow you to see at a glance what are the current market conditions all about. Are we in an uptrend and have a healthy pullback? Are things all over the place and ranging? Are we in a downtrend? And so forth. And we're also going to give you access to our Divergence Cloud ebook and our ebook on mastering trends with patterns. Now, if you want to take advantage of this offer, all you need to do is go to tradingindicators.com/MetaStock. And perhaps Kelly or Nicholas, please post this link also into the chat so everybody can see it. All right, so this is our special offer for today's presentation. Now, I do see that we still have a bit of time. Perhaps we can look at some symbols together while, or perhaps answer some questions. So let's see if there are any questions in here. Let me quickly see. All right, so I do see some questions. A bit long-winded. Rec wants to know, and I hope I'm getting this right, on the Apple chart, the long signal. Okay, so he's questioning why the signals were generated the way they were on the Apple chart. So let me quickly go back, and I believe you picked up on the Apple chart because it was open at some point on my MetaStock. Okay, so let's open this up, and let me apply our indicator to it. So what I do actually is I have created a template for this. So apply template. All right, I'm gonna go to my Divergence Cloud and Trend Radar template. We're just gonna apply Divergence Cloud to this chart. And once applied, all right, we can now see Divergence Cloud applied. And let's do a quick analysis of this chart. This is once again a daily chart. So the first thing I like to see is for this Apple daily chart, what are my win rates all about? So as of today, May 21st, the win rates, or the estimated win rates for winning my next long trade, is actually at 94%, which is amazing, and 60% for my next short trade. Great. And let me just zoom in a little bit. We actually can see, this is just a coincidence, that we do have a long entry signal. Of course, the market is not closed yet, so this may go away if things reverse, but we do have a long entry signal on the most recent bar of Apple. Nice pickup. All right, perfect. All right, so this is one thing, but the second thing I see now, and of course, this is always my due diligence, is what are the overall market conditions all about? So we can see here, and once again, you don't need a PhD in finance to see that Apple has been, to some degree, ranging between this level and this level, at least in recent history. So we did have a bit of an uptrend here, which then came down to a full-blown long-term downtrend. And now just recently, we have reversed one more time into an uptrend. Now, if you zoom back a little bit, just to give me a bit more context, we can see that Apple has been struggling. I mean, not struggling, but it's been ranging a bit, and we are approaching once again this top. So Apple went up here, bounced back, went up here again, bounced back. Now once again we are approaching this level. Even though I do like the win rates of 92%, I don't like the fact that once again we are approaching this level where price has bounced off a few times in the past. But by all means, if you consider this trade, what I would do is I would put my target fairly nearby, perhaps just below these recent swing highs, so that if we bounce back, we still capitalize a little bit on this perhaps short-term up move before potentially a retracement will follow suit once again. But yeah, great example. And what a coincidence, Apple having a long entry signal on the last current bar. Of course, this may go away until the bar is closed. So this last signal, as you get new intraday data coming in, may go away. But as it stands right now, if prices, the market closes with this value, with this price, this long entry signal will persist, and potentially a nice scalp trade in the long direction for Apple. All right, let's see if there are any other questions.
Daniel, we have a chart request.
Yep.
For the symbol VRT. Apparently it's in an uptrend, and they want to know, is there a pullback happening on this uptrend?
Oh, let's have a look. VRT. Okay, so go to my power panel chart. Okay, VRT. Oh, there we go. Just popped up on a different monitor. Okay, there we go. Let me open it up. on the daily time frame. Open chart, and let's see what's happening. So this chart is opening. Oh, yeah. I mean, once again, you don't need a rocket science of a PhD in finance to see this price has been moving up very nicely. And if you look at trend radar, I mean, this is not a bullish stock. I don't know what is. So this stock has been moving up since for more than a year across the board. And let's see what's happening in recent price actions. If I draw the trend channel here, and again, I'm just gonna make this very fast, perhaps another trend channel here. We do see that we did have a bit of a pullback, which is always something I like to see and once again, we have a long entry signal. The nice pullback. Trend radar turned red a little bit. Ideally, I'd like to see a pullback maybe for 2 or 3 levels like what we had here, which will just give you even better entry price. But a bit of a pullback here, perhaps yet another good opportunity to enter long into this stock. I mean, I really like the fact that this stock has been trending upwards for such a long time without a break, with very shallow pullbacks across the board. Now, we did have another pullback here, a long entry signal. Chances are that price will continue its upside move. So yet another great idea. Thanks for pointing this out, whoever that was. Okay. Oh, somebody's saying the purchase link seems to be cut off. All right, let me quickly go back. So it's tradingindicators.com/metastock. And I will also put this link into the, or Nicholas, perhaps you can do it one more time. Please put this link. Okay, so if this is cut off, it's trading indicators. Actually, let me just drag this in real quick, make this a bit easier. If I go here, so you probably can see it now better. So tradingindicators.com/metastock. All right, so this is the purchase link to take advantage of this lifetime deal. And perhaps real quick, I know my time is running out, or is just about to run out. This includes our Divergence Cloud indicator. It will also include access to our exclusive live market sessions, which take place every Tuesday at noon Eastern. So the next one in about 1 hour from now, I'm going to be back talking about what's going on in the live markets right now, featuring all our flagship indicators. But they take place every Tuesday. So like clockwork, Tuesday at noon Eastern, and they're all recorded. You also get access to our Discord channel, which is exclusive to our members, to get your questions answered right away. And we also going to throw in as a bonus our trend radar indicator. So all this for live at tradingindicators.com/metastock. All right, guys. So this concludes this presentation. If you want to come on board, you're more than welcome to. It would be exciting to have you. And so if not, I still hope that you found this presentation useful, and hopefully see you guys next time here at MetaStock.
Okay. All right. Thanks, Daniel.
Yeah.
Appreciate you. Let me go ahead. The link for that again is tradingindicators.com/metastock. Daniel, it's great to see you. Good job. Thanks for kicking us off today.
Perfect. Yeah. Have a nice conference, guys. Nice trading day. See you guys next time. Bye-bye.
All right. Go ahead and kind of make a few changes here. I'm going to go ahead and do this. Go ahead and do this. All right. And then I'm going to make myself the presenter. How's everybody doing today? Make presenter. Okay. Show my screen. Okay. Do this. Cool. All right. We're all going. Robert says, great presentation. Thank you. I appreciate that. Daniel does such a great job. We like to kick it off with him because he does such an amazing job. I love the tools that he actually puts together for MetaStock. I think they add such a value to what's going. So if you are interested in kind of getting those, go to MetaStock or tradingindicators.com/metastock. As I'll remind you, we're MetaStock. We've been rated #1 in our price category 31 years in a row. And we do have a special offer that we're doing. If you're interested in trying out MetaStock, finding out why it's been rated #1 31 years in a row, maybe you're using another platform and you're not very happy with the data delivery or kind of the way that it works. Maybe it's an online platform and just need to get some pretty serious tools. What we're doing here is we have 2 versions of the program.
We have a real-time and an end-of-day version. If you want to do the end-of-day version, it's like $69 a month. The real-time starts at about $210 a month. If you buy a month, we'll give you the second and third month for free. So great way to try it. During that time, we're going to set you down with one of our support reps. They're going to walk you through the software. They're going to show you everything. We'll give you training, unlimited access to our support, who does a phenomenal job. So, and in fact, I think it's one of the best things that they offer is the support. These guys are awesome over here. So you can get on board with this if you want to at metastock.com/conf-promo. You can give us a call at 800-882-3040, or you can give us a call, or you can chat online with us at metastock.com/saleschat. So in any case, my name is Jeff. I want to say thank you real quick to Kelly for kicking us off this morning. Great job. Let's go ahead and kind of transition to our next guest. And while I do that, I want to kind of talk a little bit about them because they're a sponsor of the event today. So TechnoTrader with Martha. Martha's going to come up and she's going to talk to us. TechnoTrader has been a great educator. They've been doing it for over 25 years. They've always, well, at least every time I've checked, they've always had an A+ reputation with the Better Business Bureau. I've gone over there. I've talked to Martha over the years. I've learned a lot from her. She's a certified, chartered market technician. I always, when I start to say chartered, I think CMT in my head. So, but anyway, she does a super great job. Appreciate them sponsoring the event. They do offer some courses that are available. And what I'm going to do now is I'm just going to really quickly put this in here as a link you can go to in the chat. So, because what I want you to do is, one of the things that Martha offers is some really good, this is a little bit different. Oh, wait, over here. Okay. Kelly sets it up a little bit different than I am, so I just kind of get it reorganized so it works well for me. But if you go there, there's some mini courses that you can kind of get into. It's an easy way to kind of get a feel for whether it works or not, or for what works for you. So there's a link. Of course, they've done tons of video courses over the years. And they've also developed some really cool tools into MetaStock over the years as well. So let's go ahead and kind of get Martha started. Martha, great technician. Fascinating when she talks about the market. I like when she talks about stocks and stuff like that. So let's go ahead and get you started. Martha, how are you doing?
I'm doing well. Can you hear me?
I can hear you, yeah.
All right, we're going to get share a screen here.
Yep, it's coming through, or it should be. All right, cool.
Okay.
I can see your screen. Yep.
Okay,
And
you can see me?
I can't see you yet.
Okay, so yeah, let's get that on. Okay, can you see me now?
You're good. I can see you. I can hear you.
All right. Hey,
And I'm going to get out of the way.
Background from Merrill Lynch that I bought from Merrill Lynch years ago, and we're ready to go and rock and roll. All right, today we're talking about the missing data in your stock trading. And this is important because a lot of you don't realize what you are missing in your trading that causes problems. I'm an educator. I could be a recommendation service, but I would rather that you learn to be able to choose your own stocks, because each of you is unique and each of you can develop your own way of trading, and that makes the market stronger. I've been retired for a long time. I retired in my late 30s, and then I became bored, and then my partner, Howard Johnson, said, oh, let's teach. And I said, are you crazy? And it took quite a while for him to convince me, over a year before we started. And then when I stood in my first ballroom full of people, stockbrokers and all kinds of people that were very educated, I turned to him, I said, we're going to be the laughing stock. We're going to have to refund everybody's money because they know this stuff. And he says, just do your stuff, Martha. Just do your stuff. You're a great teacher. So I started talking. And then all of a sudden I looked around the room and I'm going, you guys don't know this stuff, because it was super quiet. And they were so fixated. And I realized that I had suddenly found something that I could do in my retirement that would be fulfilling for me. So I educate, and everything is here is presented in that format. The missing data in your stock market. I am a CMT for a very long time, chartered market technician. I am a Series 86 approved, so I am approved to teach you and to research and analyze and tell you what I find. That is a new SEC regulation that SEC is slamming down on people, so you got to be careful that you work with credentialed people, because the SEC has been finding people all year long who are not credentialed. I wrote the cycle evolution theory, how to identify evolutionary cycle deviations, and I'm considered one of the top cycle theorists in the United States and the world. And I also wrote relational technical analysis, which has been incorporated into the CMT program as an advancement of the understanding of technical analysis in a relational format, and otherwise the human aspect of it and the different market participant groups and how they impact everything. So these are 2 professional doctoral theses that I have written, and I'm working on my 3rd. Missing information in your education causes chronic losses. You make a good trade, okay? Whatever, day trading or swing trading or momentum trading or position trading, whatever you're doing. And then you have a bunch of these losses, and then you make some more money, and then you try this, and then you go and experiment over here and over there, and you try all these different things. And then you make some money and you lose some money. You think, well, I made this money, I should be able to make it again. And then all of a sudden you're not. Today, we're going to cover the most common areas where traders are missing information or have been told misinformation, which causes losses in trading stocks. After 26 years, we're in our 26th year right now, of teaching new traders, professional level expert traders, I have assembled the most common problems that plague most retail trading and set you up for chronic inconsistency. So you're setting yourself up for a loss and you don't even realize it. My list will surprise most of you unless you are my student already. And I know I probably have a few students in this meeting because they just can't not attend my webinars. It is not self-discipline. It is not market makers out to get you intentionally. The missing information is not about a trading strategy. It is not about Wall Street versus Main Street. It is far more ambiguous. Missing information myth number 1. There are many myths that have been swirling around the stock market for years. Professional traders ignore the myths, but you believe them. Myth number 1, day trading can find whales using the level 2 screens. Wrong. Only 20% of the activity of the market is still on the public exchanges. In 2002, we switched from fractional pricing to decimal pricing, and that changed the whole world of the stock market. That one thing changed everything. It has made the market too efficient. It has made the market illiquid. It has moved 80% of all the huge lots, giant lots, off the market, off of the public exchanges into private exchanges. So saying that you can see all the activity is not true. When you're day trading or intraday trading, you only see 20% of the activity. That is missing information that you don't have during the day. That is causing more day traders to fail and more chronic losses, more brokers struggling with a whole lot of day traders with margin calls they can't collect on, putting brokers at risk. And the SEC is going, okay, we're going to go after this day trading stuff and get it controlled because it is harming the brokers, it's harming the stock market, and all these retail day traders are losing money. The reality is that professional traders use ATS venues. There's 50 of them. There's only 13 public exchanges in the US. There's 50 ATS venues. So you can imagine. And giant lots of 1 to 5 million shares and higher are the most common lot size, which you never see on a day trading level 2 system because they're not there. They're not trading there. They're trading on the ATS venues. What you are seeing are the new mid-sized lots of 50,000 to 100,000 shares that smaller funds trade. Now, any smaller fund that has less than $3 billion of assets under management is no longer a professional side. It's a retail side by the SEC ruling. They no longer have to put in their monthly reporting and so on and so forth because the SEC disregards them as unimportant. $3 billion of assets. So that's what you're trading against. You're trading against retail day traders, retail swing traders, and you're trading against small funds managers who are clueless. They're really nice people, and they're salespeople, and they tell you, oh, here's what you should invest in, and we have these funds and things, and we have these guys over here who are actively trading the account, and we're going to make you more money, and your return on investment is going to be higher, and so give us all your money. And they lose it all. Most of the time, day traders are not trading with professionals, but with one of the least educated market participant groups, the small fund managers. The small fund managers don't even know technical analysis. It's like, get your act together, guys, but they don't. And memes groups led by a guru who's taking advantage of people. And these people usually trade sometime between, it's spread across the lunchtime. So 11 my time, 12 mid, and 1 central, and 1 eastern is the times that they all get together and they all execute exactly at the same time, creating these huge surges in volumes and gaps and runs in the middle of the day. And yes, we have this. Now, pro traders versus memes groups. We have pro traders knowing that something is going to happen to GameStop, okay? So they're already way in here at this really bargain price. Yeah, and there's a few dark pools in here coming in here as well. And so they do a couple of little nudges, and then some selling goes on by smaller funds. And then all of a sudden this starts moving with momentum because we have the guru buying to push price up. So the guru is in there already. And then he announces, okay, everybody, now's the time in the middle of the day or before it starts. This one happened to start before the market opened because it's a gap up. Any gap up, write this down on your sticky notepad. Any gap up is HFTs. HFTs control the market open, always. They look and see. Retail brokers have to fill your orders. They have to like them before they fill them. Now, they can fill them one of two ways, and most of the time, they're not filling them out of their own inventory anymore like they used to before the pandemic. Now they're sending them to payment for order flow to all of the big money market makers that used to be banks or other big hedge funds and so on, and they fill your orders as market makers. So in milliseconds, they can shoot your order and it fills and comes back. And so a couple of seconds later, you go, oh, wow, I got a great fill. Well, not necessarily. You probably got hammered by that market maker, grabbing pennies off of a whole lot of retail broker orders. So they already know before the market opens what stocks you're interested in, overnight overflow and stuff. HFTs gap it up and then run it up. And then the memes group at lunchtime do these huge swing actions. And of course, when the stock gets to a certain point, the gurus are selling and the pro traders are selling and the HFTs are selling, and down it goes. So you buy up way here because you get a really bad fill and then it comes collapsing down. So you need to understand what's going on in the market, not just, oh, this is a run up. Oh, this is a run down. Oh, this is a red light, green light. Oh my goodness. Or, oh, this crossover on this indicator. Oh, you have to understand who is doing what. And then you can avoid getting in here and then waiting and, oh, it's got to go back up. It's got to go back up. Oh, it's got to go back up. It's got to go back up. Oh, it's got to go back up. It's got to go back. No, it doesn't. It's over. One big run up and that's done. Missing information myth number 2, trade every day. I love this myth. This is so cool. Myth number 2. Via misinformation and manipulation of your emotions, retail traders are told constantly that you need to trade, day trade, and that you need to trade every single day of the week. Trade, trade, trade. In fact, it would be great if the market was open 24 hours a day. It would be great if the market was open 7 days a week, 24 hours a day. So you could trade, 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 trade. Who's going to make money on all that? Is it you? No. It's your brokers. It's all the others who take advantage of you, HFTs and all kinds of gurus. Too many retail traders believe they can make profits by taking pennies on a trade or by setting a daily goal of perhaps $200. $200? Are you crazy? You can't even cover your expenses. You can't even cover the cost of the time that you're spending working on trading stocks with that measly amount of money a day. Let's get real. That's not an income you can live on. Such a low margin of profit means that you actually losing money even on your profitable trades, and you're losing even more money on your losing trades. You have expenses for trading. Some are hidden and some are expenses you do not consider, such as your time. How much are you worth if you were employed? How much do you believe that you are worth? That's your hourly wage, and you have to charge it just like a small business. Utilities, computers, internet, trade slippage, cost of your trading office, et cetera, et cetera, et cetera. There are so many hidden costs that you don't even think about. And you lose money. You're always losing money. If you're trading as a hobby, your costs skyrocket as you can't deduct anything from your profits for tax purposes, and you can't take a loss against other wages that you earned elsewhere, that the loss is on your trading as a hobby. You're a hobby trader if you're losing money on a consistent basis. Yeah, I did show yesterday a webinar on trading as a business, and if you're interested in that, you should watch that. They have it promoted. The other thing is that everybody says that day trading is the ultimate. Oh, it's the ultimate. Guess what, guys? I'm a day trader. Who cares? Day trading went out for professionals back in 2002 when we switched from fractions to decimals, because you can't make enough money on day trading. And with 80% of the activity off of the exchanges and the ATS venues, you only have 20% of the activity, and a lot of stocks, even big name stocks, are illiquid during the day. Have you ever seen a little dash on your intraday chart? Dash, dash. Do you know what that means? Nobody traded that minute. Nobody traded a whole minute. And your professionals are trading on the millisecond. Okay. So a lot of people want to trade, but they don't want to trade every day. They don't want to be stuck in the hole. They don't want to swing trade. They just want to get into a stock and over a few months' time, make a lot of money, or a few weeks' time. It's called platform position trading. I designed it because I discovered in 2003. Oh, now that the dark pools are pulling their money off the exchanges and going to these ATS venues, we have a completely different pattern. They're controlling their price to the penny, and it's called a platform. And it's a specific narrow range in which they buy. And then it slowly moves up. And they like to have, they accumulate what they want at that point in time. And then they kind of let everybody know, just like all the famous gurus and the TV celebrities. Oh, I bought this stock. I bought Apple. Everybody should buy Apple. Yeah. And of course, the guru or the famous TV person is brilliant, because the stocks always go up after they tell everybody that they own them. Okay, you get my drift. So they'll accumulate quietly, and then they let it know. HFTs will gap it up to the next level. Then they'll kind of hold for a while and wait and see. And then, okay, now the fundamentals. And what happens is these platforms follow the fundamentals. This probably was earnings news, and earnings improved. And so fundamental values were up here. So the buying started again, and the buying started again. So over time, it goes up. We have a lot of sideways action. If you're not aware of it, if you're not familiar what it is, and you don't realize this is a buy zone, you can get whipsawed out of a trade, swing trade, or other things you need to understand. And these are our indicators, most of our indicators for MetaStock, which confirm whether it's dark pools activity or smaller funds activity or HFTs. Huge spikes in volume is always HFTs. Huge gaps at open are always HFTs. Huge spikes on our quiet accumulation are always HFTs. Huge spikes here. So it tells you, oh, well, that's an HFT. It helps you a lot. Tools for consistently successful trading. You have to understand market condition analysis versus futures. Market condition analysis is what's going on over a broad period of time. And we have relational technical analysis, which tells you who is in control of price. We have 12 different market participant groups. I have also taught that. They're out there on webinars that I've had with MetaStock. So if you need to go there, any one of them will have it, and you can check it out and study that. I'm not going to repeat it here. Relational technical analysis is about who controls price. Most of the time you're looking at price and you're going, oh, is it going to go up? Is it going to go down? And this mathematical equation, we have this red light, green light, or we have this up and down. And so, but you're not thinking, okay, who is controlling, who's making that price pattern, and what pattern do they form on the charts when they're in control? Because at any given moment, one or two of those market participant groups of the 12 is going to be in control of price. When dark pools are in control of price, price just stays really tight. When professional traders are, it's even tighter. So you need to understand who's controlling price, because that tells you what's going to happen next. Trade management planner, you need to plan your whole month of trading, what price range you have, what capital you have, how many trades. It'll tell you how many trades you need per month to make this much money. It's really cool. Daily trading journal. If you want to be trading as a business, or if you want to get out of the slump of being a hobby trader and you want to be able to trade as a business, then you're going to need a daily trading journal. It also tells you what's going on over time, and you can compare. And so one of my students asked me, she said, I need to check and see when are the market condition analysis for price improvement shifted from very low to very high. Oh, I said, oh, May 9th. Because I could go back to my journal and see that. Charting software that includes scans and sorts. You want to have scans that are set up, and then you can customize them because you're unique. You need to start thinking about not trading as a herd mentality, not trading as a chat room buddy, not trading like that, but also trading independently on your own. You have your own capital base, you have your own risk tolerance, you have your own experience, you have your own expertise, your skills. You have to trade that way. Not every stock is going to be right for you. Hybrid leading indicators. The hybrid leading indicators reveal where dark pools are active, where professional traders are active before price moves. Once price has moved, you are in late because we're dealing with decimals. We're not dealing with fractions. We don't have 25 or 50 or 75 cent spreads. We have a penny spread. Professionals have a half penny spread. We need to know where they're triggering in there, and these indicators are able to identify large lots versus small lots and what's going on. What side of the market are they on? Controlled bracketed order types. You must always have a controlled order bracket type. Howard Johnson was my partner, and he developed a special order for our trading floor, and I was really excited about it and everything. And then he decided after I retired that he was going to, we should teach. So I was going along with this, and I come back into his office one day after I take a break because I love swing trading. I just let it go. And I came back, and here he is on the phone, laughing and talking. I said, what are you talking to? Oh, Herzog, the market maker. It's like, the market maker. Nobody talks to market makers, especially from the New York Stock Exchange. And he says, yeah. It was years and years ago. And he says, I wanted him to check out my order, make sure it was all right before we present it to our students. I want to make sure it's just perfect. And the market maker is the one to ask, right? And I'm looking at him like, he's talking to you. I almost had a heart attack. And he, and they talked for a long time, laughing and joking. And the market maker asked him if he could have permission to use this order type because he was so impressed with this order type and how brilliant it was that it actually controlled and minimized your any kind of risk with the entry at entry. And of course, Howard was very pleased that he wanted it. And today it's still out there, modified and changed for various market makers. So when you work with TechniTrader, you're working with professionals who have designed things that are totally unique to us that no one else has. Entry signals, buy entry signals and sell short entry signals. Reversal and continuation patterns were great for the 1600s of the Japanese rice commodities exchange, but our modern market is totally different. And you don't want to be using reversal or continuation patterns. You want to be using buy entry signals, the nudges, the pushes, the hurdles, the pole vaults that are all identified that I have developed, because these are the ones that are most consistent. The springboard pattern, the resting day candle pattern. Exit signals or trailing profit stops for taking profits. You must understand how to use those trailing profit stops, and exit signals are crucial to exiting at an appropriate time. Run gain potential calculation. Before you ever enter a stock, you need to go back in time and you need to see what is the run gains. Go back several times and you can see, okay, the run gain is shrinking. That means that the stock is going to be topping soon or having a short-term correction. Trade calculator for accurate risk analysis, stop loss placement, and entry price. Did you know that most of the problems with your orders is that you calculate your entries and your exits and your stop losses wrong manually? So we have this trade calculator that Howard created that's brilliant. And you just plug the stuff in and it automatically goes and tells you what the things are so that you enter your orders properly. Share lot size, price range, risk to profit ratio, estimated hold time, and exit point. You know all this stuff while using these calculators before you get into the stock, so you know how much risk you have, how much profit potential, that sort of thing. Missing information myth number 3. Stop losses don't work. Yes, they do. You just finished taking a training session with someone who claims to be a professional but has no credentials and has been teaching his day trading strategy, claiming it is a huge winner. You have been told to use either the 8 or 10% stop loss. The missing information is all of your orders are lit by your broker as you are typing in your order. All of your orders are routed via payment for order flow PFOF to one of many market makers like Citadel, who is now a designated market maker that buys retail orders from retail brokers and fills those orders to profit from the volume against a few pennies spread. I bet you didn't know that, did you? So that makes a difference. You have to have a controlled bracketed order, or that market maker is going to fill at whatever at market or limit order. You know, the limit order. Oh yeah, let's do the limit order. Yeah, you're buying into weakness. And all of a sudden the stock goes way down. Losses, because you don't understand what you shouldn't be doing. Since everyone on the professional side sees your orders, they can and do front run those orders. HFT see overnight order flow from the brokers early in the morning. I'm up at 4 my time, and they quickly fill the queues seconds ahead of the market open, which causes the automated computers to gap up or down the stock based on the quantity of HFT orders. You really want to avoid HFT gaps because they're very painful. You just set yourself up to have that stop loss hit, then the stock moves up without you. If you used stop losses as the professional traders use them, you would not have as many whipsaw losses and lost opportunities. How many of you have gotten into a stock, a stop loss get hit, and then this thing takes off? It's because you're not setting your stop losses properly. So stop loss placement is appropriate to the individual stock chart. A computer can't calculate the way a human brain can, and I know everybody wants it easy peasy, but this is easy because we have the trade calculator and tells you how to set it up. A little crooked line there. But you might be in a long candle like this, you might be using intraday stop loss support level, but you have to make the stop loss level appropriate to the particular chart you're using, not based on a percentage, because the percentage is probably going to be smack in the middle, and that's what gets you whipsawed out. So, of course, they are not able to, memes groups, gurus, TV celebrities, predicting the market. Every time I see the word predict, I just want to cringe. Of course, they're not able to predict the market. If the market could be predicted in any way, then the profits from the prediction would immediately disappear within milliseconds because the professional side are trading on the milliseconds. Get real. Fact, before the memes group's return was announced for GME, and the charts show clearly that weeks before this extreme buying was preceded by professional traders initiating a nudge strategy that works all the time. They have these little nudges, right? Little nudge prices, and then they sit and wait, and then HFTs take over. If you don't know what it looks like, and when the professional traders trigger HFTs, memes, and other huge prices and runs, you get in late, miss the huge profits, and often get whipsawed out into a big, huge loss. Learn how to identify pro traders' nudges before the price moves in huge speculative runs, and then learn to exit the pros as the pros are selling. There's signals on one of our indicators, just beautiful, the volume oscillator, and it peaks on the chart the day before pro traders start selling for profit. It's just amazingly beautiful. Understanding order flow. You think you want to be in a group of everybody. Oh yeah, let's get all, you get in a social media chat room or something, and yeah, everybody's talking. Well, high frequency trading firms use formulas to find anomalies in order flow. When cluster orders are identified by the quantitative analysis formula, it triggers automated electronic orders that can cause whipsaw action or extreme patterns. All high-frequency trading is done via computer-generated order. There are no humans trading at these computers. That's why they're pre-market and the first few minutes of the day, and then they're done. So if there's any other intraday gaps, it's memes or gurus. This can cause major price trend disruptions, mostly intraday. Retail day trading has become much harder because of the HFTs. So normal order flow is what you want. And this is what I teach my students. You want to make your own decisions and have all this figured out, and you get in here. So the HFTs have nothing to chase. Cluster orders are when you're in these little open chat rooms that are out there. Anybody can be part of the chat room. It's broad open. Social media, some other platforms as well. They have these open forums, and you can just join, and everybody's out there. Oh, we're all going to buy this stock. Woo! Yeah, well, HFTs hear about that before the market even opens. They fill the queues, and then they trade against you. And then a lot of you take losses, massive losses. Dark pools are off the exchanges. You can't see them. They're hidden. You will never be able to see them. It's been going on for 22 years. 22 years. Approved by the SEC. There is no difference in the dark pool execution. They strike the pennies. They don't get a better price than you do. They just get to strike the penny within the mid-range. If it goes below their buy zone, the TWAP automatically pauses. If it goes above, it automatically pauses. It has to be within this range. So their order flow and activity, I have to show the students how you find it, because it's right in the middle of this range. And so you'll be able to identify it and see it and use it as activity. Now, you can learn all kinds of strategies. You can learn all kinds of techniques. You can use all kinds of fancy dancy indicators. But if you're not aware of the dark pools and where they're accumulating and where the pro traders are going to nudge, you're always going to be in late, and you're going to lose a lot of money. Missing information, the best order type. Most of you have been told that a market order gives your broker total control over the price your order will be transacted in. And this is true. You haven't been told to use a limit order. You have been told to use a limit order instead. The problem with a simple limit order is that you are buying into weakness. That causes losses, especially since you are usually trading against the professional traders. So you're selling out because you buy into a limit order. Some may think the order type volume weighted price, VWAPs, is a great idea. I don't think so. VWAP is the most dangerous order to use. Did you know that a VWAP order caused the May 2010 flash crash that caused the entire stock market to collapse 80%? In a few seconds? It was reversed by the SEC, and everybody had to they had to adjust all the orders back because it was a fat-fingered fundamentalist on the E-minis selling E-minis with accidentally touching the V rather than the T. Time weighted at price is far superior to volume. Volume accelerates. So the more VWAP orders are, the more that's triggered, and it goes down quickly. And the SEC really tries to control that situation. And we have new control systems in place to stop that. TechnoTrader uses a controlled order type developed by Howard Johnson, and which was approved by a market maker who used that order for his floor traders. So you have a very special program that you're using. And so the best type of order is not a limit order. Missing information, market condition and trading conditions. How many market conditions are there? There are 6 major market conditions. What are the trading conditions? Trading conditions are who is in control of price, the momentum up or down, trend line patterns, trend line, not trends, trend line patterns. There's trends, up, down, sideways, and there's trend line patterns within each of those, and trading styles that work ideally. Futures only tell you how the market indexes will open. Futures do not tell you how the rest of the day will be in terms of momentum, velocity, volatility, and trading conditions. So there are 6 major market conditions. bottoming trading range, platform, moderately trending up or down, velocity up or down, and topping market conditions. So what market condition are we in right now? Anybody know? My students know because I'm constantly telling them every morning. We are in a moderately uptrending market that will last for a long time. We're just beginning a long bull market with 20 new technologies coming to market at various stages. AI is just the beginning. Robotics is just the beginning. It's going to be a huge market. It's going to be bigger than the 6 major new technologies that came in the late 80s, early 1990s. You have a great opportunity here, but all bull markets have minor to intermediate term corrections from time to time. Doesn't mean it's going into a bear. Market condition analysis tells you what to expect after the market opens and settles into its trading activity for that day. So after the shakeout of the first few minutes of the market, then it settles down to whatever market condition is there and what to expect for trading conditions. I have written the MCA scans that I wrote for my trading floor many years ago, are provided with any methodology course that we teach. So I share this with my students. It is not public because you have to understand how to use it, and it's sophisticated. It was written for professionals to use. Indexes only represent less than 8% of all the stocks available to trade. Often the broad base of stocks that are not components of one of the 3 big indexes, Dow, NASDAQ, S&P 500, are in a momentum mode while the indexes are stalled and sideways. That happened all last week. There's all this momentum going on in the broad base of stocks, and the indexes are just going, and so everybody's going, oh, the market's lousy, the market. No, it's not. There was all this strength pouring into dark pools are accumulating. You don't know this. You think the market's going into a bear market. So you're getting all ready to sell short. And then all of a sudden it reverses on you because you don't know what's going on. You can't tell what's going on just by looking at retail stock charts. You have to have all the information. So MCA scans for technical students are embedded in MetaStock. We designed these specifically for MetaStock so I could share my market condition analysis. So I say, how many stocks moved with momentum to the upside for momentum strength? How many moved to the downside for sell strength? And by comparing these two, I can tell whether the momentum is to the upside or downside. So that's the bias of the market for the following day. Institutional scan tells me where dark pools are accumulating, how much they're accumulating, because their activity is hidden. But I can pull it out with this specific scan that I wrote many, many years ago. Bottoming condition, how many stocks are in bottoming formations and how many are completing their bottoms? That tells us that dark pools are very heavy because they are bargain hunters. They never pay high prices for stocks. They never wait for the stock to go up. They're in it way before you. And if you're a long-term investor, you want to be in with them. Consolidation. We have the swing trading professionals. They don't day trade anymore. They haven't day traded in years. They are swinging 1 to 5 million, sometimes 10 million, huge share loss. And they buy it in the pennies, so the penny spread. So consolidations is where you find them. How active are they? Then we have the overbought, which is the 2 sell side in MCA scans, which tell me if we're at risk of having an intermediate to longer term correction. When these 2 rise in sync, then I know that a correction is about to occur. Then we have the strength of price over comparative over time. That tells us that stocks are starting to move with momentum out of bottoms, starting to move with momentums out of consolidation, starting to move with momentums out of all kinds of sideways activity, which May 9th, we started seeing that thing suddenly rise and go way above its average. That was really cool. So missing information, outdated indicators. The market trades on a penny spread. This means that in order to have high profits, you must enter the stock before price moves. Waiting on a price and time crossover is late. Most professionals have their own unique proprietary indicators. They do not use outdated indicators that were based on price and time. Professionals are always on the hunt to find dark pool hidden accumulation patterns, and they do. Finding dark pool buy zones for momentum swing trading requires more sophisticated indicators that differentiate between accumulation and smaller funds activity, all this and pro traders activity. These indicators are provided to Technotrader students for stock market charting software. These were written specifically and exclusively for MetaStock by me and my developers. So this is only on MetaStock. Missing information, reversal candlestick patterns. The candlesticks book written in the 1990s were about the middle candlestick patterns that were developed by the Japanese Rice Commodities Exchange of the 1600s. Rice was not only a commodity, it was also a form of currency. The beautiful candlesticks that they developed. When the stock market switched from fractions to decimals, wide spreads in price vanished. Penny spreads became the norm. Buy-side institutions moved off the public exchanges, and now all the transactions in ATS venues, there's 50 of them, hidden completely from the retail public exchanges until all the data is moved after the market closes, because they delay their orders and they move it to the clearing houses, and then it comes into the MetaStock charting software. The penny spread has changed candlestick charts forever for the markets. Now what you need to learn are the new buy entry signals or sell entry signals that form due to the penny spreads. And MetaStock charting software is awesome. I love the 2019 version, the 19 version. It's just amazing. This is a huge difference that most retail traders have not even considered. Oh, well, let's just do this little run thing. You have to understand what's going on in the chart. You have to read the chart like you would read a book or music or whatever is your favorite. Misinformation trading on retail news. Oh, this is my favorite misinformation. All retail news is ancient history. The professional side reacts on the millisecond. The retail side of the market receives the information after the professional side has known the information for a week or more. Why? Because they pay for it. I pay for it. I buy it. I get it early. I let my students know. Reacting to news by trading on news events causes more losses than most of the other misinformation. I try to convince my students not to pay much attention to it because it really isn't worth anything. Pros are active in stocks weeks ahead of earnings report dates because they already know what the earnings report is going to say. Pros know that what the chat room groups are talking about and what they are considering trading, because you can just go into the open chat rooms anywhere. If you're in an open chat room, the HFTs and pro traders can just pull that mega data out and sort it and figure out what's going on. HFTs follow social media, gathering information from posts and comments well ahead of market open. So HFTs gap and run while you chase a stock and find yourself in a major loss. I mean, nobody's lived through markets like these in more than a generation? I don't think so. No. Inflation's down, employment is up. Did you avoid a recession? The recession was never, ever going to happen. Retail news does create price momentum movement. By the time you hear about it, you are late. Everybody else is in it and they're selling against you. Okay. Missing information, options trading. Options trading. You are told that the more strategies and legs or different option strategies, the more money you can make. In fact, most options traders, retail traders, lose money regularly. In fact, the multi-leg complex strategies such as the Iron Condor, Iron Butterfly, etc., were never intended for the average retail options trader. Those were developed and intended for options market makers and require exceptional talent, expertise, and skill to make profit. Trading costs mount with more legs and lower your profit. Misinformation: when option puts are rising or high in numbers, then this means that the options market knows that the stock market is going to go down. That's my favorite misinformation of all. No, this is not. This is incorrect. It's promoted by those who profit most from your mistakes trading options. Fact: option puts are used by professional traders to mitigate or manage higher risk trades of millions of shares on a swing style trade. The option puts are an insurance policy, and the professional trader doesn't care if it expires worthless or if they sell it for you at a discount, because they make their money with the stock trade. The professional traders tend to just let these expire worthless, but at times can sell them to an unsuspecting retail option trader who is missing this information about option puts. Rising option puts doesn't mean that the market's going to go down. It means it's going to go up. In fact, those retail traders who make regular income trading options use simple long calls and puts. They never write the contracts. It's too risky. Missing information using free charting software, one of my favorites. Traders assume that everything should be for free. Professionals know that nothing is free when trading for high income and financial security. Free charts are designed and intended to distort and skew the trends and data. The aspect ratio must be set to the golden rectangle the Greeks developed years ago so that the data, trend lines, candlesticks, and indicators are not skewed to create an extremely hard to read chart. Free charts typically show charts that are impossible to read accurately and distort the trends to make the price appear far more volatile than it actually was. Oh, the market is volatile. Oh, the market is volatile. No, it's not. It's not at all. The lines are drawn in this chart are completely wrong and improperly drawn. This chart is impossible to study or interpret properly, and the lines are completely misleading as to what price will do next. First of all, if you're going to draw a trend line, it has to have 3 points that it hits on, a minimum of 3 points. It doesn't have 3. Second of all, that it actually should have started up here. Third of all, it's below these peaks, so what's it doing? And this is when it's saying right here, he's ignoring this whole thing, trying to force fit it so that he can say, oh, guess what? A breakout. A triangle. It's completely wrong, completely improperly. I know that he's not a technical analyst. I know that he's not a CMT. I know he's not certified in any way because this is all wrong. And this is skewed. It's squished data. These are years of data squished together. What good is that for trading? None at all. The golden rectangle is the easiest for your eyes to accept and read. You're able to respond and see what's going on. It also lays out the indicators properly so that you can see what's happening. It gives you the perfect way of interpreting the price action and seeing the consolidations of pro traders and seeing dark pool buy zones. This is what it should be. And MetaStock has just great charting software that lays it out, and its pricing is always just dead on accurate. Misinformation, choosing stocks to trade. You are told to join a social media group. You are told to join a chat room. You are encouraged to trade recommended stocks from some famous guru. You watch the retail news to see what stock is being discussed so you can buy it. Unfortunately, this is the best way to lose money trading stocks. The problem is that, first and foremost, recommended stocks are intended to make someone else, those promoting the stock, huge profits, not you. Secondly, you are unique. Your trading decisions will be uniquely yours. Following herd mentality is always going to be the ultimate disaster. The gurus do not know you. They do not know your risk tolerance or capital available to trade, nor your experience level, skills, technical expertise, risk tolerance, and much, much more. They do not know you as a person trading stocks. If you lack the confidence to select your own stocks to trade and lack the education and knowledge on how to analyze stocks, then just don't trade. Because all you're going to do is lose money. Then you're going to hate the stock market. Then everybody's going to go around saying, oh, the stock market's cheated me. It's a bad place. It's evil, blah, blah, blah. It's not. It's just the business of businesses. The business of businesses. That's all it is. Instead of chasing stocks in the news, there's a far better solution that is easier, exciting, and provides optimal stocks for your trading style. We have embedded all of our customized scans, and we have sorts on them. It makes it easy to find stocks to trade and with good buy entry signals that you can use. So you want those chart layouts there embedded in MetaStock. They come with our courses. Trading tools and resources. The final missing pieces for trading success are your trading journal, as this provides the written evidence of your activity trading as a business, which you should be striving to do. Watch my video on it. And also historical data to consider and compare over time. Your personal trade management planner that provides a monthly plan of your monthly trading goals, number of trades, capital required, stock price range, risk assessment, profit potential, and overall processes. This is your discipline. It's trade management planner. Trade calculators and other tools that streamline accuracy and execution. Get rid of those bad trades that you just added or multiplied wrong. Scans, sorts, layouts, and parameters for your trading styles and preferences. Trade simulator must be a real simulator, not a game and simulator. Market condition analysis scans that I provide in the courses. Controlled bracketed order types that we teach you. A broker account that is intended for trading as a business. You should have a real broker account. Robinhood is a nice, fun game. Morning market open reports that I provide to my students, tell them how the market's going to open and how it's going to do the rest of the day. I also have a daily market educator, discussion groups, and communities within the TechniTrader students only campus that is not public. The TechniTrader difference. Working with MetaStock charting software for more than 2 decades, we have been able to create highly sophisticated training and charting tools that not only are versatile, but can be also modified and adjusted to exactly what you need. Customizing your tools from TechniTrader is simple and easy. The tools, scans, indicators, etc., incorporated into MetaStock charting software eliminate the work and help you get started trading profitably or even trading as a business as soon as you complete your TechniTrader methodology course. What makes TechniTrader different? We are credentialed and certified with an SEC Series 86. There are 2 of us with the Series 86. We have an amazing student campus that creates a totally professional style learning environment. We offer the most comprehensive support and guidance available anywhere. Our courses are self-paced, which makes it easy for you to learn at your own pace within the time you have available to study, with ongoing answers to any questions you have while you are taking the course. And we're a boutique. I'm not looking to get millions of people. I'm looking for that special person who knows they can succeed if they have the right tools and education to do so. And they become very, very successful. Each course is modular, building upon the learning and knowledge of each module and presented in the most efficient way for individuals to learn complex subjects quickly and thoroughly. You're ready to simulate trade much faster. Howard and I are educators, and we put this together in a way that is the easiest to learn. Remember that you had teachers that were fantastic in high school or college, and you always remember them because they knew how to teach. This is a picture of our TechniTrader community groups. It's only to students, so no one else can get in. It has all kinds of activities and things, so you're not alone, but you also are your own person, your own trader. And these are another community groups that are going on, activities which are going on, and we have discussion groups as well. So let's summarize the TechniTrader difference. You are learning from professionals who have an educational background. We have been in business for 26 years. The TechniTrader staff continually updates and improves the quality of our education constantly. We keep our students up to date with all the new trading instruments, changes to the internal market structure, and how professionals are trading the market. So you're up current. Most of you are being taught stuff that was in the 90s. It doesn't work anymore. We have many communities and discussion groups where professional level students and beginners can share ideas. TechniTrader has the most extensive support, guidance, etc., with access to a vast library of help files, articles, and ongoing new information about the evolving market structure. I have written 3,000 articles. We offer 3 different courses designed around your individual training needs: a standard for beginners, premier for those with 2 to 5 years, and those who are more advanced, the elite course that makes you a semi-professional. Some students advance to the professional level and work for institutions. I have students who work for institutions. The course can be taken at your pace when you have time and when you're ready to learn. Our courses contain the body of knowledge, experience, and expertise of our founders. This foundational knowledge is taught nowhere else because there aren't any other professionals. Okay. So we have the free mini courses that you can take, and you just go to our website and choose which ones you want to watch. This is the professional trading plan, explains that more. I talked about that today. Swing trading for professionals, and trading the candlestick patterns that are new candlestick patterns with the mini courses. And we always give away a free gift when we're with MetaStock because they're such good partners with us, and we're proud sponsors of MetaStock's conferences. 24-hour claim on the free gift. You get to pick a $99 video training lesson for free. That's the place to type in. Jeff, if you can type that in for me. And I'll take any questions if I have
Already
any.
done. I got it in there. Yeah, so the coupon code is META0524. So I'll write that in here as well. We had quite a couple questions. Let's try and get through them pretty quickly. Robert wants to know, how do professionals set up stop losses?
Stop pauses.
Stop losses.
Stop losses. The stop losses are set under the appropriate support level for the type of trading they're doing. So if they're swing trading, it would be tighter. Sometimes it will be, if there's a long white candle and they still see that there's plenty of volume and there's still some push in the buying, they'll go intraday and they'll set a stop loss at an intraday support level. It's always slightly below the, you don't want to place it within the price. You have to think of stocks and candlesticks as breathing. And most of you set them within the range. You have to have it below the range. There's a variable, depending on the price of the stock, there's variables of how far below, how many pennies below you set it. And so it depends on the price. The higher price stocks have a lot slightly wider than the really inexpensive stocks. So, and it sets below. You never want to be in, not even a tail. You want to be below those tails. And that will keep you out of that whipsaw trade.
Robert wants to know how he can find your trading as a business video.
Okay,
Thanks
the
for the
trading
question,
as a
Robert.
business was presented yesterday for MetaStock. Jeff, can you help me with that?
Yeah, just go to youtube.com/metastock, click on day one, and I don't have any timestamps on it yet, but I think it was the 3rd hour. So just fast forward to hour 3, you'll be able to find it. If you go later today, I'll have timestamps on it, and you can just click on Martha's name. So yeah, youtube.com/metastock. And if you don't mind, Martha, while you're there, you should like and subscribe. Reg wants to know.
I think you should like and subscribe. MetaStock is our #1 partner. We're, again, extremely proud to be sponsoring. And I always love, Jeff, it's my favorite webinar to do. It is, bar none. I always have a great time.
We love having you here too. Let's see, Timothy. This one's a rather large question, so I'm going to try and read it as best as I can. Martha, you said the dark pools control their buying to the penny. Therefore, they must not only use time, as you've explained, but won't they be selling to hold the market in place to get their price at the exact level or range level? Meaning,
Go
yeah.
ahead.
I think what the question is, to summarize, is do dark pools spread out their buying so that they can get the appropriate levels that they want?
Yes, yes. Time weighted at specific price. So it's sitting there in open order, and it takes an average for the million shares, several million shares that they buy at a time, 10 minutes to fill an order. So they have these blocks. So they'll just, the SEC has been studying them for years, and it takes about average 10 minutes. Sometimes it can take much longer than that, but it averages 10 minutes to fill a large lot dark pool buy zone order, because it's going along. And when that price hits that penny spread, ping, and then it buys a certain, whatever shares are available, ping, whatever shares are available. Sometimes it has to go out of the dark pools, and they pull some orders in from the retail side to fill that order. But generally speaking, it's all dark pools. There's 50 venues. There's 20 to 25 giant institutions. There's about 200 large institutions, and they're all trading on that. Plus the professionals are trading there. And it's dark. They don't have a market or a market maker limit order book or anything like that. They just set that order out there and wait for the ping. So it's a time weighted at price, average price.
All right, very cool. Maverick says, thanks, Martha. Informative as always. MetaStock says, and this is Greg, but I agree with him. Martha's pretty dang awesome. So there you go.
Thank you very much. All right. Well,
I appreciate you. Thanks for coming in, and I'll talk to you again soon.
Thank you so much. Bye-bye.
Bye. Okay, let's do this. Okay. Ooh, I need to reorganize this so I can get this is set up a little bit different than the way I normally see it. So not a big deal at all. We're going to do a prize real quick. Let me go ahead and make me the presenter, and I'll go ahead and show my screen real quick. Again, I hope everybody's enjoying themselves. I hope you're having a good time. I hope you're learning something. So as we said, thanks TechnoTrader for sponsoring the event. There's a link on there. You can go ahead and get the free prize. Go ahead and do that while you can. And a big thanks. For the next prize, what I'm going to do is I'm going to give away this Around the Horn book. And because asking questions and participating and things like that are so important, especially if you're on YouTube, they really help us with the algorithm and that kind of stuff. I'm going to actually pick somebody that's made a comment. So a question, a comment, anything like that. And I'm going to give a book to you. So for this one, what I'm going to do is I'm going to look at just the GoToWebinar comments. For the next one, I'm going to look at just the YouTube comments. So if you have questions, if you want to tell me, well, anything, just kind of chime in. It's great to have you here. It's great to have questions, and it really does help. So let's go ahead and kind of look. I'm going to go ahead and just make sure this is set to show all the questions, including the answered ones. And the book that we're giving away, just so I don't forget that, is Around the Horn by Adrian Mantz. So I got some physical copies of this. He sent me a whole bunch of them, and I've just been trying to. They're great. Actually, it's no longer in print, and so you can get the digital version. But if you want to win the imprint version, well, you can comment on YouTube. So let's see. This is kind of just acting a little bit weird for me. Bear with me a second. Okay. Ooh. Okay. Here we go. All right, so I'm just going to scroll a little bit. I'm going to try not to look until we get to somewhere. I'm all the way to the top. I'm going to scroll a little bit. And the winner of the Around the Horn book is Dean. Deanie asked a question about the pricing of MetaStock. Dean, thanks for your interest in MetaStock. Because of that, you're going to get a free book. So here, I'll go ahead. I'll make a little bit of a note of that. And appreciate the question. Dean, also, okay, just to kind of talk a little bit about MetaStock. We are MetaStock. We've been rated #1 31 years in a row. We're going to have a session on it in just a minute. We are offering a special offer. If you buy a month, we'll give you the second and third month for free. So really super good offer. You can buy any of the offers that we have in our catalog at metastock.com/conf-promo. If you have questions, metastock.com/sales-chat. If you want to give us a call, we'd love to talk to you. 800-882-3040. So without further ado, John Thomas. I remember the first time we had John Thomas come in and talk at one of our MetaStock conferences. It was right after Donald Trump got elected. And I remember kind of like all the advice he was given in terms of what that meant, and kind of, it was a great presentation. And I've invited him back ever since. So John, how are you doing?
Can you hear me?
I can hear you, yes.
Hey, good. I wasn't sucked into the tricks that GoToMeeting is trying to do.
Oh,
can you see my screen?
I can see your screen.
Yeah, and you know what? I might have to do that again.
All right. Well, I'll do this. I'm gonna get.
Hello. I just lost you.
Oh yeah, because I was getting out of the way. We can totally see you though. We can hear you. I do see that. I do see your PowerPoint, but I don't see it in the expanded view yet. But I'm pretty sure you're going to do that next.
Yeah, don't make assumptions. What do you want me to do?
Well, so we can see your slideshow. Just make it full screen. Go slideshow. Start slideshow. So it takes a full screen.
Yeah, at my age, you have to remind me of this stuff.
Oh, just start your PowerPoint.
Yeah. Oh, I got to click on it first. Slideshow.
There you go.
Yeah, I remember.
Okay,
well, I had a portfolio set up assuming Hillary Clinton would win, because that's what the polls were showing. Shock and surprise, Donald Trump wins. So I spent the entire night awake constructing a new portfolio based on comments Trump had made in the run-up to the election, and we hit the opening the next morning with an all oil, all industrials portfolio, and we made an absolute fortune in the following 6 months. And then after that, things fell apart. But you know, you have to be. It really underlines an important part of trading. You have to assume that all things can happen at all time. And you can bet that Morgan Stanley, Goldman Sachs, all the heavy players in the market do have Biden and Trump portfolios already set up, ready to execute on a mouse click. So that is prepared trading. A prepared trader is a winning trader. Research in, money out. That's what I tell my people all day long. So I'm going to go ahead and get started. We're looking at a new American golden age. At least the stock market thinks we have a new American golden age. And we're going to go ahead and invest on that basis. This is John Thomas, the Mad Hedge Fund Trader from Silicon Valley in California, where it's all happening. So take out your pen and paper to take notes or start typing into your smartphone. What I'm about to tell you will blow you away and change your life. For I'm in the early retirement business, your early retirement. If you're wondering what that is, that's a World War II Supermarine Spitfire, which won the Battle of Britain. I fly it about once a year. Why listen to me? Well, I have 55 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, Marine Corps combat pilot, Desert Storm, they still call me up every once in a while, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, 16 years now publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern hedge fund industry who is still breathing. And by the way, if you have any questions on any of this, type it into the chat box. I will be presenting with my left eye and reading the comments with my right eye. Of course, there's another reason to listen to me. I've averaged 51.77% for the last 16 years. And for 12 years, we've been using artificial intelligence, which essentially doubled our performance over time. You can do the same. Of course, our secret is the Mad Hedge Profit Predictor, our market timing index. That's an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators all day long. It took a team of mathematicians 1,000 hours of calculations to create this, and it's modified constantly. It works like a charm. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. Does the work of a seasoned 100-man research department in seconds, runs real time and optimizes with the addition of every new data point far faster than any human can. Imagine a trading strategy that upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your trading profits. And these are the signals we get in a typical 3-year period. You get lots of buys at market bottoms, lots of sells at market tops, buy, sell, buy, sell. It's really a great tool to have at your disposal. I'm not the only one using algorithms. Some 80 to 90% of all current trading is algorithmic driven. And I was walking by the Miami waterfront a few years ago, saw this super yacht called Algorithm. How about that? It's obviously working for him. These are the last year and a half of market timing indicators. This is where we are today, right at 65, which is moderately overbought territory. Anything over 70 becomes extreme overbought territory. And you can see we often spend months in extreme overbought territory like we did from December all the way up until April this year. That was a 5-month run, 5-month top building process. Of course, then we go make a bottom, and strong buys are usually in the 20-30 range. So, ignore this at your own cost. There is a method to my madness. The market has seen the fastest 27% rise in market history. Fed is done raising interest rates. Markets are now discounting the first rate cut in September, and there may be more than one. Jay Powell has written in his own blood a promise to cut rates 3 times by the end of the year, and that kind of looks on track. All interest rate trades are back in play, including bonds, REITs, precious metals, financials, and foreign currencies. The bull market continues, but it's got to catch its breath first before we can make substantial new highs. Otherwise, we just make marginal new highs or new intermediate lows. Oil prices have sold off on a global slowdown. They're weak again today. Tech bull market is back and will continue for years. Time to go aggressively long stocks and bonds. So how to reliably pick an winning options trade? If you have a handle on whether the economy is growing or shrinking, you have a major advantage in the options market. In a growing economy, you only want to employ bullish strategies such as calls, call spreads, and short volatility plays. In a shrinking economy, you want to execute bearish plays such as puts, put spreads, and long volatility plays. Remember, the only thing that is really useful is a view on the economy is what's going to do next. We are all in the what happens next business. Government only publishes historical economic data, which for the most part is useless in predicting what is going to happen in the future. Look for great industry fundamentals. Do you want to give yourself another edge? There are more than 100 different industries listed on US stock markets. However, only about 5 or 10 are really growing decisively at any particular time. The rest are either going nowhere or are shrinking. In fact, you can find a handful of sectors that are booming while others are in outright recession. If you're a major hedge fund, institution, or government, you may want to cover all 100 of those industries. Good luck with that. If you're a small hedge fund or an individual working from home, you'll want to conserve your time and resources and skip most of the US industries and only focus on a handful. And of course, picking the right industries, we have Jensen Huang, of course, holding up his Blackwell chip, which is going to hit the market any day now. Micro picture is ideal. Once you have a handle on the economy and the best industries, it's time to go zero in on the best company to trade in or the micro selection. So it's great to find a good target to trade in because positions in single companies deliver double or triple the returns compared to stock indexes. It's because the market will pay a far higher implied volatility for a single company than a large basket of companies. Remember that you also are taking greater risk in taking on individual companies. One single stock is subject to far greater event risk than a basket. The earnings come through as expected, everything is hunky-dory. If they don't, troubled shares can drop by half in a heartbeat, and then there's guidance to worry about. So a lot of risks in individual stocks. The technicals line up. I've never been a huge fan of technical analysis. Most technical advice boils down to if it's gone up, it'll go up more, or if it's gone down, it'll go down more. Over time, the recommendations are accurate about 50% of the time or equal to a coin toss. However, the shorter the time frame, the more useful technical analysis becomes. If you analyze intraday trading, almost all very short-term movements can be explained in technical terms. This is entirely how day traders make their livings. It's a classic case of enough people believe something, it becomes true, no matter how dubious the underlying facts may be. So it does behoove us to pay some attention to the charts when executing your trades. The calendar is favorable. There is one more means of assuring your trades turn into winners. According to the data in the Stock Traders Almanac, $10,000 invested at the beginning of May and sold at the end of October every year since 1950 would be showing a loss today. Amazingly, $10,000 invested on every November 1st and sold at the end of April would today be worth $702,000, giving you a compound annual return of 7.1%. You can take that over 9% if you add in dividends. Of the 70 years under study, the market was down in 25 May-October periods, but negative in only 13 of the November-April periods, and down only 3 times in the past 20 years. There have been just 4 times when the good 6 months have lost more than 10%, 1969, 73, 2008, and 2020. And as you recall, those were all special event years. Pandemic, financial crisis, oil crisis, Vietnam War. and presidential election for that matter. So let me do the heavy lifting for you. You can spend 12 hours a day, 7 days a week, slaving in front of a computer, making sure all 5 of these criteria line up, or you can let the mad hedge fund trader do the heavy lifting for you for a year and spend just 5 minutes a day reading our trade alerts. Adopt these 5 simple disciplines and your success rate on trades jumps from a coin toss to 70, 80, or even 90%. In other words, you convert your trading losses from an endless series of frustrations to a reliable source of income. If a potential trade meets only 4 or 5 of these criteria, please do it with your money and not mine. Your chances of making money have just declined. And I bet a lot of you poor souls out there execute trades all the time that meet none of these 5 criteria. So let's talk about individual sectors. Precious metals, we absolutely love. There's a massive short squeeze going on where miners cannot get supplies to the futures market fast enough to make delivery, and that's forcing them to buy back their own shorts, driving prices up at an exponential rate. Demand for silver from the makers of solar PV panels, particularly those in China, is forecast to rise by 170% by 2030 to roughly 273 million ounces, or about 1/5 of total silver demand. That's a lot of silver. Global investment in solar PV manufacturing more than doubled last year to around 80 billion. And although Biden is banning Chinese solar panel imports, that doesn't affect the rest of the world. And it turns out that's where the high growth will be. Do you want to be selling to a country that's already largely built out in solar panels, or one that's starting from scratch? Miners are expanding their operations and ramping up production as prices for precious metals climb to decade highs or all-time highs. Central bank buying of gold is accelerating now, and they are joined by former retail speculators fleeing a collapsing real estate market. Gold should reach $2,000, silver $50 in 2025. So here's the gold chart. We're looking for 3,000. We've been trading it since last October when it was back here at 1,700. If you like gold, you'll like the world's largest gold miner, Barrick Gold, which is just breaking out on the charts. Silver has moved 3 times faster. Just in the last 2 months, it's gone from 22 for the SLV to 32. That is a 50% gain in the ETF in just 2 months. That is a heck of a move, and we're still buying dips. Wheaton Precious Metals mines both gold and silver and is a revenue stream royalty stock. They don't actually own any mines, but it is a leverage play on the gold and silver space. It's just moved from 38 to 57. Again, we're looking for $100 for Wheaton Precious Metals. Platinum has also gone ballistic. Buy that on dips. There's a 556,000 ounce shortage of production this year. Stocks, of course, a very important sector, up 11 out of 13 days on consistently slowing economic data means the soft landing is here and interest rate cuts to follow. Bull market has 5 more years to run, with the S&P 500 going earnings at 10% a year for the foreseeable future. Company share buybacks are surging as companies race to pick up their own stocks before they become even more expensive. Buyback should top $1.25 trillion this year. Lower interest rates means they buy back even more. Last year, the S&P 500 earnings was $222 a share. This year will be $250, then $270, then $300 by 2026. Profit margins are also expanding at all-time highs. Falling rates and a weak dollar will boost exports to recovering Europe and Japan. Inflation should hit the Fed's 2% target 2025 as AI chatbots replace workers at a breakneck rate. It all really sets up a new American golden age and a Goldilocks scenario for the markets. Buy everything on dips. Future is happening fast. So this is what was in the market last year. high inflation and oil shock, labor shortage, supply chain headaches, Fed interest rate rises, quantitative tightening, and poor earnings. What happens this year? Cheaper gasoline prices, rising commodity prices, a stabilizing supply chain, record low 3.9% unemployment, better than expected earnings, huge stock buybacks, falling interest rates, and a weak dollar. By the way, that's a longhorn steer I found wandering around in Fort Worth, Texas, right next to Billy Bob's. The trader's dilemma. Choice now is between 5 stocks that have gone up in a straight line for really 6 months now, or a dozen interest rate sensitive sectors that may be dead money for months, but may have the greater upside gains. Avoid the frustration trade, the trade you should have done on October 6th, 7 months ago. Wait for the ideal AI entry point, no matter how long it takes. Big chunk of 2024 performance was pulled forward into 23, and you've already made that money. The sole exception is energy, which is driven by demand from the Chinese economy, which has been weak. With markets at all-time highs, 90-day T-bills are still paying 5.4% if you want to whip out and stay out of the market. So we run barbell portfolios, 75% big technology, 25% domestic recovery, and of course, tech is 2% of the workforce, now 30% of the market cap, and 30% of US earnings. Domestic, oops, there we go. Let's go back here. Domestic recovery include railroads, airlines, cruise lines, couriers, steel companies, banks, commodities, construction, credit card companies, hotels, casinos, and online ticket sales. Here's the main index, NASDAQ, now at 16,686, looking for 20,000 by the end of the year, or a gain of about 20% from here. And of course, these blue boxes down here, they show signals from our market timing index, when to buy, when to sell. Right here, it showed a buy of Microsoft at 310. It's now at 425 on its way to 500. Meta, we bought down here at 290. Now at 470 way on its way to 700. Amazon, we bought down here at 120. Now at 184 on its way to 250. NVIDIA, we bought down here at 400. Believe it or not, we bought leaps, call spread calls. We bought everything we could find. Deep out of the money calls, long dated calls. Really got to be a pro in the NVIDIA instruments out there. Went from 400 to 950. We're looking for 400 by the 1400 by the end of the year. And Google knows everything you searched for the last 20 years. You think that's worth a lot of money? The market thinks so. We bought it down here, just above 120. It's hit 176. We're looking for 250. So Salesforce is another one. We got a signal to buy down here at 200. Went to 315. We're looking for 400 by the end of the year. Palo Alto Networks. Hacking never goes out of style, and 3 companies have a near monopoly, so customers have to buy all 3. We've been trading this stock actually for 10 years. Our last buy, 240, got as high as 380. Now back down now to 315. We're looking for 400 by the end of the year. Second half of the barbell bets on a global economic recovery to begin this year. Upside potential for stocks and domestic stocks is greater than it is for tech from here. Some of these things have not moved for 5 or 10 years. Focuses on economically sensitive cyclical industries, makes a great counterweight to high growth technology. We could spend the next years rotating between the 2 groups, tech and domestics. JP Morgan, of course, the premier bank in the United States. We got to buy back here in November at 135, hit 204. We're looking for 250. Visa, the touchless payment system, grows in line with internet sales and inflation. It's a great inflation bet. We bought them down at 230, made it up to 290, and we're looking for 400 by the end of the year. Union Pacific, any economic recovery means you have to move a lot of big stuff. We bought it down here at 200, hit 255. We're looking for 350 sometime next year. And Federal Express, you also have to move a lot of small stuff in an economic recovery. Just had a decent sell-off on weak guidance. You can buy it down here, and we're looking for $300 by the end of the year. Berkshire Hathaway is the one-stop barbell stock. They are the largest independent owners of Apple, and also are a major player in insurance and financials. We've been trading this literally forever. Bought it at 330 most recently, hit 416, and we're targeting 500. Bond market, another important asset class. They are stabilizing. Bond investors are making a killing, with the U.S. Treasury paying out $900 billion in interest payments last year. That's double the average annual cost of the past decade. Remember those coupons. It's another reason for the Fed to cut interest rates soon to lessen this backbreaking burden on the U.S. government. After being held hostage by zero-rate policies for almost 2 decades, Treasuries are finally reverting back to their traditional role in the economy. Bonds are becoming respectable again after a long winter. Buy the TLT on dips. And now the Treasury is back buying their own bonds back to smooth out liquidity in the market. This hasn't happened since 2000. So if you're buying bonds, chances are you're in competition with the government, who finally is getting into the buyback business. How about that? So here's the TLT. Was the short of the century, then became the long of the century. We got out here on this recent rally, been chopping down ever since. I think we're in the process of setting up a head and shoulders bottom right here as we start to discount the start of Fed interest rate cuts. So we've been buying down here, and we're looking for 110 by the end of the year, up from the current 91. Here's the 10-year Treasury yield. It peaked at 508. Back here, we're looking for 350 by the end of the year. Foreign currencies, a dollar top is in the process of putting itself in. Falling U.S. interest rates mean that a crashing U.S. dollar is inevitable. All foreign currencies will rally strongly. Buy the euro, the Australian dollar, the British pound, and even the Japanese yen, if someone holds a gun to your head. Soft Chinese economy will keep the yuan relatively weak. 40 years of one-child policy created a shortage of consumers and home buyers today, causing a financial crisis. Strong currencies will also deliver major bull markets in emerging market stocks like the EEM. Australian dollar is our #1 favor. We got a buy signal back here at 62. We're looking for 1-to-1 to the Aussie dollar over the long term. Japanese yen, of course, has been a disaster. It's at a 40-year low. Bank of Japan is tightening monetary conditions for the first time in 34 years. We're looking for a 20% gain somewhere. Euro also recovering here, looking for 20% there. And energy and commodities is the next important sector. It has been falling from 96 down to 78 as fears of a global economic slowdown continue. U.S. gasoline prices have hit a 3-month low on recession fears and replacement concerns by EVs, which are now 7% of the total new market. And by the way, they're offering 0% financing for EVs, something we haven't seen in that market for about 3 years or 4 years. Energy stocks are tracking the downside tick for tick, pulling down some other commodities. There is a buy setting up here somewhere, but probably not yet. And by the way, if you have any questions, just put them in the chat box on the right, and I'll address them at the end of the presentation. China's oil imports down 9 consecutive months, the world's largest importer. Natural gas is also bouncing back. Here is oil. We see a little bit more downside, maybe down to 72. After that is 95 once interest rates kick in. And of course, we think oil is in a long-term, very long-term downtrend. Eventually could hit the $10 we saw at the pandemic low. It is in the going out of business sale, but it may take 20 or 30 years before we actually change over to a carbon-free economy. So don't play with matches. You could probably do okay just buying all the stocks I mentioned and forgetting about them. However, the reality is that conditions for these companies change every day. They're all viciously competing, trying to put each other out of business. One day they'll announce a partnership with each other. The next day they'll sue each other for copyright infringement or something like that. If you don't get daily updates on the fundamentals, you could easily get wiped out. Today's big winner could instantly become tomorrow's loser. That's why you need somebody like me to guide you through the thicket to avoid an out of the blue blow up. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. And if you wonder why I'm smiling, trying as hard as I can to smile in this picture, it's because I'm sending you a trade alert from the coast of North Africa, where it's 120 degrees. The harsh truth is you really need my help. Majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easiest solution to that is to get educated. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why do dead people do so well? They never sell. Not a bad thing when the Dow is in the process of going from 600 to 40,000, which it has done during my career. And this is the last broker I talked to. I met in Northern Italy. His name was Pinocchio. You need a real pro to guide you through the market maze. The market is not monolithic, and 95% of it can be completely ignored. There are a few great sectors and a lot of awful ones. You can earn a 10x return on the great ones. We get wiped out by the losers. Let a 55-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. 51.57% average annualized return for 16 years versus 24.61% for the S&P 500. That's the orange chart down here. We're running at more than double the S&P 500 over a 16-year period. And when the market has giant sell-offs like it did here during the pandemic, we just stop out and go short and hold our positions, hold our performance level, then go right back up again. And this has been the pattern time after time, with the algo helping us at every stage. Richard made millions religiously following my trade alerts. He now spends his retirement restoring vintage aircraft and flying them from over the California coast. Sometimes he lets me fly them. Greg turned 100,000 into 3 million solely on my trade alerts. He bought a new home in Orange County, California, with Tesla solar panels, a Tesla Model 3, and still had enough money to send 3 kids to college. And here is another happy subscriber to Mad Hedge Fund Trader.
This is Bob. I live near Denver, Colorado, and I'm hiking on top of the Continental Divide. 9 months ago, I joined John's Global Dispatch Service and was so impressed with the profits I made that 2 weeks ago, while hiking in the Dolomites, I joined his concierge service. And in 2 weeks, it is 100% paid for it, and I couldn't be happier. Life is good. John really helps. The other day, I had a text message exchange with him regarding some concerns I had with TLT. Put spreads, he encouraged me to stay in. I did, and today they went out at 95% of maximum potential profits. And that's the way it works for me. I hope you all do well trading yourselves. Thank you.
So what do we do about all this? Well, stocks buy the next dip, bonds buy the next dip, commodities buy dips, energy buy dips, currencies buy foreign currency dips, precious metals especially, you want to buy dips. So if you're not up 51.77% in the past 12 months, as I was, you were reading the wrong newsletter or following the wrong trade mentoring service. And here's our service updated for the last year, 56.98%. And notice we never have any substantial downturns. We just keep trading and then stop out, go 100% cash when the conditions are no good. You get performance like that, you get to do things that other people can't do, like ride the Queen Mary in the owner's suite from New York to England. Once you get to England, you can take the Orient Express to Venice, Italy. And in Venice, you can go island hopping on your own private helicopter. This is the very long view, and here's where the big money will be made. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones, as the global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That will create an economic boom that will last another decade, and that started in October 2023. And that's me watching climbers on the Matterhorn from my home in Zermatt, Switzerland. So during from 1980 to 2000, the Dow average went up 20 times in 18 years. Are you ready for a replay? That's what happened the last time we had a demographic tailwind identical to the one we have now. Assuming the bottom is 2009, if we go up 20 times in 18 years, that takes us to 120,000 by 2030. Yeah, that sounds impossible, up, triple in 5 years, but we've already done 400% over the last 13 years. So if you think I'm crazy, look at where we are now. We've already done 2/3 of the work. We only have one more triple to go to get to 120,000. Except this time it's different. Now we have the AI technology turbocharger. Tech is hyper-accelerating on all fronts simultaneously, and the pandemic greatly sped up the rate of change. The development of functional quantum computers means that computational ability is about to increase 1 trillion-fold at no cost. The world's major computational challenges will certainly be solved, such as weather forecasting and cancer cures. All major human diseases will be cured within 10 years. Needless to say, barbell stocks dominate, and this scenario will account for the bulk of stock market gains in our lifetime. The 90s had cheaper computers, cheap operating software, and a new internet. The 2020s will have 10 times this number of new technology drivers. And this is a picture of a quantum computer, which is basically a giant freezer because it has to operate at minus 274 degrees zero. We'll show you how to play the next 90,000 Dow points. Sit with me, John Thomas, the Mad Hedge Fund Trader, in my Global Trading Dispatch. Discover how you can top into the top trade performing service in the industry, up 151.77% in a year. Follow my research and market beating trade alerts and you will rake the profits in. Let a Marine combat pilot steer you to big profits. We put out trade alerts on single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. And no, that is not the plane I flew in Desert Storm. That's a 1932 de Havilland Tiger Moth. Notice the design flaws. Gas tank directly over your head and no brakes. That's why we can only land on grass fields. This is a typical trading month for us. You can see we bought the S&P 500, made 16.3%, sold short US Treasuries, made 8%, bought the Russell 2000, bought Amazon, bought Apple. Oops, we bought Biogen, stopped out with a 21% loss. We stop out of losers quickly. It's easier to dig yourself out of a small hole than a big one. And then you can see the rest of the trades for the month made money. Just a matter of time before barbell stocks break out to new all-time highs. Watch this space melt up for the rest of 2024. get ready to start reeling in those whoppers with Global Trading Dispatch. Here's how it works. Our algorithm predicted another upside breakout for NVIDIA back in January, so we sent out a buy signal back when it was at 473 a share. And this is what it looks like. Buy NVIDIA at 480 or best. It's an opening trade. You put 10% of your portfolio in there, that means buying 21 shares for a $10,000 exposure. What happened? Well, NVIDIA made it up to 693, literally in weeks, up 45% in 22 trading days. So what did we do? We sent out a sell alert. Most services don't bother to take profits. They tell you what to buy all the time. And this is what the sell alert looks like. Sell NVIDIA at 695 or best. And on this trade, on a $10,000 investment, we made $4,515 in 22 days. So here's our 10-bagger Hall of Fame recommendations that we made where the stocks went up 10 times or more. Zoom went up 10 times after we bought it. Lam Research, we got a 10.6 gain. NVIDIA, we got an 18 times gain from our initial purchase. Square, we got a 25-time gain. Moderna is up 40 times. And Tesla, the granddaddy of them all, up 175 times from our initial average cost of $2.35. That's split adjusted. Tesla has split 12 times since the beginning. So with my service, you get instant trade alerts set out at market sweet spots, about 200 a year or averaging about one a day, and all the reasons to execute them. Live bi-weekly strategy webinars and an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons all around the world, more educational videos and webinars than you could consume in a lifetime, access to a 16-year database on investment ideas, searchable by names and ticker symbols. And I'll even give you the name of a surfing school in North Africa with a seniors division. Watch out, it's a lot harder than it looks. This is the one-stop shop. Learn all you need for every level. It's for individuals who want to understand what is happening in their retirement funds. It's for people who want to learn how to trade for a living, get the financial education of a lifetime. It's for smaller institutions and financial advisors who can't afford an in-house research department. Get in before the next melt-up begins. This is what you get, a newsletter in your inbox every morning before the market opens on every investment theme we're currently pursuing. We also give you Mad Hedge hot tips, the 5 most important things that happened today and what to do about them. This is what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay because I make them millions of dollars. And I'm not going to charge you $12,000. That's what I charge my concierge clients who get my personal cell phone number so I can be their investment 911. And this is what I'm not going to charge you. This is what we charge on our website, $3,500. It's the full price of what I'm offering you on my website. This is the real deal. Creating this product cost me millions of dollars. With the best customer service in the industry, running it cost me millions more. 6 months for just $997. That is a 71.5% discount to the website price. It's a limited time offer. We only take 25 new subscribers at a time, so we don't overwhelm the market with everybody piling in on our trade alerts all at once. So it's first come, first serve. I can't wait to make you a top drawer trader. Just click on the chat box on the right, and let's see if Jeffrey has got it in there. Not yet. They'll be there shortly. Let me make the money for you to pay for.
It's in there.
Just showed up. Yeah, there it is. MadHedgeFundTrader.com. Blah blah blah. You make the trades. Discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Just 6 months for $997. Okay, and buy now when you'll instantly receive a trade alert with an extremely high probability of success that you can execute immediately and make some of the most serious money in your life. Don't leave good money on the table. 90% of these trade alerts make money. And here's the chart for this secret trade alert. And it's so secret, I couldn't even put the chart up there. And what I'm not going to tell you is whether it's a buy or a sell. So while you're looking at the order page for my service, let me tell you who is John Thomas. You're going to spend the next few minutes with me and the next 6 months working with me. It's best to find out who I am. My family origins are very humble, growing up as the oldest of 7 children on a remote farm in Southern California. I lived the all-American childhood, playing Little League baseball and becoming an Eagle Scout. There wasn't much to do in California in the old days but hunting, so I picked up a job as a paper boy for the Los Angeles Herald Examiner. I found the stock pages, bought IBM at 20 and sold it at 30, suddenly found a far better way to make money than delivering newspapers on a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I visited more than 50 countries and spoke 4 languages. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see much of a future in that, so the government sent me to Southeast Asia for a few years of research, where I learned to fly and jump out of perfectly good airplanes. There I advised the militaries of America's Asian allies. As the war wound down, I became a foreign correspondent for The Economist. When they learned I had a math degree, they switched me to covering the Asian economy and the stock market. And back in those days, doing research meant carrying a .45 caliber stun gun everywhere you went, which was left over from World War II and used to jam all the time. And after a decade of government service, all I ended up was with this box of medals, which I tried out once a year on Veterans Day. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to India. As I figured out very quickly, you didn't have to be that smart to make money in the stock market. So I got into the industry, joining Morgan Stanley. After 10 years there, I started my own hedge fund. You can see there's the original ID card for me in 1983. Yes, the years have been cruel. And that's me losing the All Japan Karate Championships, never enter a karate final with a broken wrist. I rapidly became the top performing hedge fund in the 1990s, eventually bringing in 1,000% return in a decade. As the money really started to pour in, it's an understatement to say when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. You get to buy the latest hot car, fly your own private plane anywhere you want, go marlin fishing in Mexico, and collect vintage Rolls Royces, which, by the way, almost don't go up in price. They're not like vintage Ferraris. I now spend my first love pursuing my first love, finding winning trade alerts. But now I do it for my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There's far more satisfaction leveling the playing field for the average guy and teaching him how to trade, and that includes you. If I can take a $50,000 account and turn it into $500,000, there's more job satisfaction than I could get anywhere. In the little free time I have left, I love flying vintage aircraft. You see an old plane flying loops over San Francisco these days, it's probably me. The ultimate luxury course is to give to those who need it. I'm a major donor to Wounded Warriors. And when fires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. So this is my concierge member who collects Spitfires. And let's talk about him for a minute. When you make millions of dollars for your clients, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, free tickets to the Olympics, and dates with movie stars. So it was in that spirit that I traveled to the famed World War II fighter station at Biggin Hill in England to meet Mad Hedge concierge member Peter Monk. Peter was a poorly paid pilot for Ryanair when he first signed up for my global trading dispatch. After doubling his money in the first year, Peter upgraded to my concierge service. Then the money really started to pour in. Peter plowed his Mad Hedge trading profits into restoring a 1940 Battle of Britain veteran, a Supermarine Spitfire Mark IX, in his backyard, begging, borrowing, and trading for parts all over the world. He eventually built his fleet up to 16 flying aircraft, which are today worth over $65 million. When Peter invited me to fly one, I jumped at the chance. It was a mild, blustery day when we took off and headed for the English Channel. Even with the plane, it was 82 years old, we managed a brisk 250 miles an hour over the countryside. The Spitfire could outmaneuver any plane the German Air Force threw up against it. This particular plane is credited with shooting down 2 Messerschmitt Bf-109s during the Battle of Britain. We found a clear piece of sky over the White Cliffs of Dover between 2 big, fluffy cumulus clouds and commenced a full-on aerobatic flight test. Pilots always want to see what I can do in these old planes, and this time was no different. I executed multiple loops, barrel rolls, chandelles, lazy eights, Immelman turns, and wingovers, careful never to exceed 1G limitations, or the wings might fall off. Spitfires can dive like crazy. We dropped from 8,000 feet to 2,000 feet in seconds. Then it was back to Biggin Hill for a perfect 3-point landing and a pint of beer. Let me make millions of dollars for you as well, as I have done for thousands of followers over the last 16 years. I look forward to working with all of you. Okay, so here's the offer you can't refuse. 6 months for just $997. Let me show you, pages keep jumping. There it goes again. Let me show you how to make the money to pay for your own subscription. Just click on the chat box on the right. And if you have any more questions at all, just go ahead and shoot. The link is in the chat box on the right. And Jeffrey, that just about does it.
Do you have time to answer just a couple questions?
Absolutely.
Steve says, how long is your average holding period?
Well, if we do everything perfectly, it's a month. We put on a trade, we run it into expiration in the options market, and the trades expire at max profit. And that is what happens 90% of the time. 10% of the time, we stop out with small losses. So that could be anywhere from days to weeks. Remember, over trading makes your broker rich. It doesn't make you rich. So we try to keep our trading to a minimum, just get people a few high quality positions where they can then run for the month.
All right, cool. Barry wants to know, I don't use options here in England. I'm just buying and selling shares. Will this be helpful for me? Thanks for the question, Barry.
Yes, actually, only about a quarter of our subscribers do options. The rest don't have the time or the background to do it. And over time, every trade alert we send out has a stock, an option, or an ETF choice you can take. And over time, the people who buy the stocks make the most money. And I'll give the example of NVIDIA. Last October, we put out call spreads on NVIDIA, which made a nice 20% in a month. People who bought the stock made more than 100% in 4 months. And you often see that repeating itself over and over again, which is why we have so many 10 baggers, for the people who bought the stocks and got in early.
Cool. And then this one's more of a comment. Robert says, I'm ready for a replay. AI and quantum computing will be big players. Awesome and useful information. Thank you, John.
Well, he's been doing his research, and he will be rewarded. And who will be doing the rewarding? And that's Mr. Market. You do your research, make your bets in the right places, you will be richly rewarded. Is all I can say.
Very good. Thank you, John. I appreciate that. And Barry
Great.
says, thank you from England.
Okay, pleasure.
Very cool.
Pleasure.
All right. Really appreciate your coming in. Always enjoy having you. Thank you very much.
Catch you on the next one.
All right. Go ahead and do this. We're going to go ahead and we're going to move around a little bit. I'll go ahead and show my screen real quick. We're going to do another bit of a giveaway as I promised. Oh, let me turn on my camera for a second too. I do want to say thank you to one of our, well, all of our sponsors really. But this time, I'm actually going to talk more about Stocks and Commodities magazine. So if you're not familiar with Stocks and Commodities, it's been rated actually, it's rated as the best software enterprise category. Never mind what I just said. Great magazine. They've been publishing articles since 1982. A great supporter of the online trader summits that we do and the trading conferences that we do. 17,000 article trading archive, 1.3 million subscribers. You know, you already understand the value of being here and kind of learning and improving. And regardless of kind of where you're at on your trading journey, if you've been doing it for a while or if you haven't been doing it at all, it's useful to have information. It's usually, I don't think when you're trading or when you're doing much of anything in life, really, you spend a lot of time in neutral. You're either moving yourself forward or you're falling behind. And so one of the things I like about Stocks and Commodities, it's just a very regular subscription. You can kind of subscribe to it and you are going to get all kinds of really, really good ideas from it. So our big appreciation to them for sponsoring the event. If you're interested in finding out more about Stocks and Commodities, go to www.traders.com. And I'm going to type that out here too. You can subscribe there. Once you subscribe, they'll start sending you magazines every month, but they'll also give you access to their online portal, which has all of their articles, 17,000 plus that have been developed and created over the years. So there you go. Thank you again to them. Again, thanks to the CMT Association, and also thank you to Martha and TechnoTrader for sponsoring the events. We'll talk more about those as we go throughout today. I do want to do a prize. I promised a prize. So the prize I'm going to give away now is a book. This is a book by a friend of mine, a great technician. Taught me a lot about trading. Actually, kind of use a lot of the patterns that he uses that he used and that he taught in my own trading. And the gentleman's name is Steve Bigelow. The book's name is called High Profit Candlestick Patterns. And just love this book. The person I'm going to give this prize to is going to be, again, because of audience participation. So if you're watching this in YouTube and you've said something, I'm going to basically scroll through the comments from the start of the day, and I'm randomly going to stop on one, and we're going to give away a copy of this book to you. So let me go ahead and take a look here. I don't feel like I should. Let's see. We'll go. Oh, that's the very top. Okay. Now I'll just scroll down a little bit. Okay. Emily Jr., if you're still there. Emily Jr., if you're still there, what I want you to do is actually drop me an email. You can email me at jeffrey.gibby@metastock.com. Since you're not necessary, I don't know if you're registered. I don't have a way of actually getting in touch with you. You're going to have to get in touch with me. So drop me an email. Say, hey, I won the prize. I'll get this sent out to you. Now, for the rest of the day, the prizes that we're actually going to give away are going to be done based on registrations. So I'm going to pull up a list of all of the people that have registered for the event today. We'll basically kind of pick it by drawing numbers, and whoever matches that number will give a prize to. If you're watching us on YouTube, there's a couple things that I want you to do right now. Like the video, subscribe to the channel, but also go to our go and register for the event. So if you register for the event, you'll be in all of the prize drawings, and you can do that. MetaStock can go ahead and type. Oh, it's actually the pinned comments. So it's at the very top of the comments. It says register for today's event. You can go to metastock.com/traders-conference. Now, if you're watching this in GoToWebinar, you've already registered. Don't worry about it. You're already on the list. But if you're watching this on YouTube right now, that's how you get on the list. So very, very good. In any case, okay. Also, if you do want to take advantage of some of the offers that we had, we just had a massive upgrade on MetaStock. I was down in Washington and Washington, D.C. and Pennsylvania over the weekend. We were showing up. I wanted to go through all of the new stuff that we added and just show kind of the stuff that we'd added. It took me a good 2 hours just to get through that part of it. It's such a feature-packed upgrade. So if you've been using MetaStock for a while, thank you. If you should take a look at 19. Just so much stuff was actually added to it. If you're new to MetaStock, now is a great time to get started, because if you sign up now, you'll pay for a month. We'll give you the second and third month for free. Okay, gives you plenty of time to try it. During that 3 months, we're going to have somebody sit down with you and kind of show you, answer any questions you've got, show you around the software. If you want to use MetaStock to find better trades, we'll show you how to do the scanning. We'll show you how to do the testing. So we'll sit you down with for a new orientation called a white glove service appointment. But anytime you have questions, you can reach out to us. We'll give you some in-person trainings. And with the extended trial that we're doing, you could literally get started for $23 a month over the course of 3 months. So you pay basically, let me rephrase that. You pay $69 for your first month. You get your second and third month for free. And that means you'd be running it until August 21st, which is kind of crazy to think about. That's only 3 months away. We're going to be in the fall before you know it. So metastock.com/conf promo. MetaStock, for any of the offers that we're talking about today, metastock.com/sales chat. You can also give us a call, 800-882-3040. I'd trade MetaStock. I love it. Kelly and I were kind of discussing some trades we were doing the other day. By the way, you might wonder who Kelly is. He's this guy. He's our next speaker. And so to give an introduction to him, Kelly is just, his official title is the president of MetaStock. He's my boss, so if you have anything good to say now, would be a great time. But he does a really, really good job. He does tons of presentations. He's got a really good eye for system design. Every time we kind of do a new add-on here, he kind of looks at it and kind of gives some suggestions. He does a lot of things, but he's also going to do a presentation right now. How you doing, Kelly?
I am good, Jeff. And, I've got nothing but good things to say about you. Can I say those things?
Yeah, I mean, there is that saying, if you fish for a compliment, you're likely to get it. So let's do it.
Well played. Well played. Well played.
Right. We can see your screen. I don't see a webcam yet, but I can hear you. Oh, that's my fault. No, I still don't see a webcam.
I was going to say my webcam is on. So.
Okay, it's my setup. Sometimes when you're broadcasting for a while, it goes full screen, and yeah, I can't see you, but that's okay.
Yeah.
I'll get out of the way. Your turn.
Okay. Thank you, Jeff. Well, I am actually going to give Jeff some kudos, because one of the things that Jeff does is he does everything to put this MetaStock conference on. He does so much work to get all the presenters together, to get all the content together, and really spends a week running this conference for everybody, which is an amazing amount of work. So thank you, Jeff, for all your work, and also thank you to our marketing team for putting all the pages together, all that. It's a lot of work and effort that goes into this free education conference. So we thank you guys for all your hard work. So I am excited today to come in and talk to you a little bit about MetaStock, what MetaStock is, and how it can help you in your trading, because ultimately that is the goal. That's why everybody is here, is to maybe learn something that can help them in their trading. And that's my goal today, is to hopefully help you find something that's helpful in your trading. So before I get started, one of the things I would like to ask is, I would actually like to ask the audience to put in maybe your favorite indicator. What's your favorite indicator that you use? Now, sometimes people will put in an indicator, sometimes people will put in trend lines, people will put in different things. And I'd love to hear what your favorite indicator is that you use. So just put that into chat, what your favorite indicator is. I'd like to kind of get a feel for that as I get into my presentation, as I'll be talking about ways you can use your favorite indicators in MetaStocks. So that would be great to hear from you. Now, as always, as we get started with presentations, I do need to go through the disclaimer. So while you're putting in your favorite indicator, I will go ahead and read the disclaimer to you. So this demonstration is designed to instruct you on using MetaStock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Now, the most important part here is that MetaStock and its employees do not endorse the purchase of any security, nor is it paid for the promotion of any security. So no information contained in this presentation should be construed as an investment advice or solicitation to buy any security. So I think the thing is here, we're not here to tell you what to trade. And we need to talk about one of the big things with trading is that there is risk in trading. There's actually risk in just about everything we do. And that's kind of where I'd like to kind of start. So here's the situation I ran into last week. I went out, I went out golfing, was out having a great time. It's hitting my swings, doing the best I could on every swing. And every once in a while, what happens? You get a nasty slice. And this is what happened to me when I had a nasty slice. So you can be doing everything that you think is going right, and you can still you can still swing and miss and have something like this happen to you. There's risk in everything we do, and there's certainly risk in the market. Okay, so you've heard it several times before, but don't trade with money you can't afford to lose. Make it something that is something that if you're doing it for your money, make sure you're protecting your profits. Make sure you're capturing your things. Mitigate your risk, and that's a lot of what we're going to talk about today. Now, when Jeff did his presentation yesterday, he did a little quiz, and he asked people, hey, who do you think, what profession after they retire is the best, are the best traders? And this is the one that was the answer. It's pilots, okay? So I'd like to talk about this for just a moment, because when we're talking about trading, we're talking about risk. One of the big things that you want a pilot doing when you get on a plane in the morning or in the afternoon or evening, whatever it is you get in and you want those pilots sitting up there and you want them going through their checklist. And if they don't go through that checklist, something is bound to go wrong. Okay, I talk about this when I do my presentations often, but one of my favorite TV shows to watch is a show called Airplane Disasters. Now, and I travel a lot, so people always ask me, well, why as a traveler would you like a show called Airplane Disasters? Well, the reason why I like it is when they do the show, they will go back after a disaster and they will try to figure out what went wrong, what happened, what caused this problem. And if it was something that was mechanical, they figure out how to fix that. If it wasn't mechanical, it was often pilot error. And that pilot error often went back to the pilots weren't following their checklist. They weren't doing their steps. And that equates to our trading, right? We have steps that we need to do to make sure that we're getting into a trade correctly, and then we're getting out of that trade at the right time based off of our rules. And if we aren't following our rules, well, that's when things go wrong. So we're going to talk about that a little bit and how to actually get in and mitigate risk, follow rules, and identify opportunities, okay? Let's see, what am I getting here? So I'm getting the T-line, Bigelow's 8 EMA T-line, awesome. RSI, the squeeze, Bollinger Bands, the 50 EMA, MACD, the Mobius MACD. Okay, so we've got a lot of different indicators that people are putting out there as their favorites. So we'll talk about some of these. We'll use some of these as examples today and how we can identify opportunities and make sure that they actually work with what we want to do. So these are the 4 bullet points that I would like to talk about today and spend time analyzing today. So we're going to talk about how to find the best stocks to trade. Now, it doesn't necessarily need to be stocks. If you're a futures trader, we'll talk about how to find the best futures, Forex, whatever it may be, options, whatever it may be. We're going to talk about how to do some trade identification. Then we're going to talk about when should I get in and out of a trade, how to test your system before you spend your first trading dollar, how to know if it actually works, right? And then how to add clarity to your trading decisions. So these are my goals today, is to help you understand trade identification and ways to find trade opportunities that have the higher probability trades rather than ones that don't. Okay, so what we're going to talk about to start are different types of indicators. So there's really 4 main groupings of indicators. Okay, so we have trending indicators, things like, and we'll talk about some different indicators within these. So we have trending indicators, momentum indicators, volatility, and volume indicators. Okay, so those are our 4 main groups. And ones that fall into this would be indicators like this. So if we're talking about trending indicators, we're talking about indicators like the moving average or the MACD. If you're more into momentum, then we're going to be using indicators like stochastic or RSI. If we're into volatility, we'll be using things like Bollinger Bands or average true range. Those are big parts of volatility and measuring volatility. If you're a volume trader, you're using things like on balance volume or Chaikin money flow. Now, this isn't a full comprehensive list, obviously, of all the different indicators that are out there. This is just some examples of indicators that fall into this. Okay, so what we're going to start focusing on is trend first, and then maybe we'll look at some momentum using some of these different indicators that you guys are talking about as your favorite indicators and ways that we can use them. So I always like to start here, okay? We pull up a chart, we look at it, and if you have your favorite indicator, that's great. You put on your favorite indicator, you look at it, and you go, well, how do I know that this works? And we don't always know, but there are ways that we can mitigate our risk to identify if something is working. And that's what we're going to kind of talk about. Should I be using trend on this stock? Should I be using momentum? Should I be using volatility? Should I be using volume? So we're going to talk about that, how to actually identify these opportunities. So I'm going to talk about a couple different workflows within MetaStock to help you to use your preferred indicator, how to identify if it's working well on a stock, and then 2, maybe how we can find the best indicators to work on a specific stock. Okay, so there's some good things that we can do both ways to actually help us identify opportunities. Okay, so that's kind of the end of my PowerPoint. I just want to spend time looking at stocks and scanning and finding different things. Oh, hey, thanks for that, MetaStock over there in YouTube. Appreciate that. All right, let's come back over here. Okay, so we're just going to start with a chart example here. So let's just say I'm looking at Carnival Cruise Corp here, and let's say somebody mentioned the MACD. So let's take the MACD as an example to start. So let's say I put my MACD indicator on here. So we'll just grab the MACD and put it on my chart. Okay, so if I put on the MACD, okay, so we could look at the MACD. Now, if you're not familiar with the MACD, it's a very simple indicator. It's looking for, as we discussed, trend. And what we have is we have a signal line and a signal line crossover here. So when we have the MACD and the signal line. So when we have a cross of these lines, it triggers a buy or a sell. So for example, this would be a sell, this would be a buy, this would be a sell. Okay, now, again, if you're not familiar with things, one of the great things about MetaStock that I love is it's a great educational tool as well. So if you ever need help with something in MetaStock, simply right-click on it, go to the help, and it will actually show you what it is that you're talking about. We're looking at the MACD here. It gives me an overview of what it is. I can click on parameters and see how the parameters are calculated. I could look at interpretation, and it'll interpret things for me and help me understand what it's doing. But to take that even further, we have a great tool in MetaStock called the Expert Advisor. So the Expert Advisor does basically what you think it does. It gives some expert advice. So I'm going to search here. So this is a new feature in 19 where you can search for experts. And I'll just put on the MACD expert. Okay, we'll close this. And you'll see those MACD buy and sell signals come on just where those signal line crossovers happen to help you identify those trades. So you can actually use this to show you buy and sell signals based off of your favorite indicators. If I right click here too and go to Expert Advisor and Commentary, this will actually give me a commentary of what is actually happening here and what's going on with the MACD. Okay, so right now we don't have a current signal here. It's in a current trade, the MACD is, so you can see that back here. And if I click back here, it'll actually tell me, hey, this is what's going on with the MACD. The MACD can provide buy and sell indications in three ways. You have signal line crossovers, overbought, oversold, and divergences. Okay, so those are the three ways that we can identify opportunities with the MACD. Currently, the MACD is bullish since it traded above its signal line 0 periods ago, right here. Okay, so it'll walk you through that. So now what we're gonna do is we're gonna do one of the hardest things in trading, and that's find opportunities. Okay, so that is one of the hardest things to do. How do I know what to trade? When you sit down and you're ready to make a trade, how do you find the ones that are best? Okay, and you've actually seen this in some of the other presentations already today, but we're going to talk about the MetaStock Explorer. Okay, apologies, get Grammarly out of the way here. It tends to just take over my computer sometimes, and it's doing it now. And so apologies, Grammarly is just going to hang out right there and get in. Yeah. Oh, there he goes. All right. Thanks, Greg. Okay, so we're going to go into the Explorer here. So here I am on the Explorer. And what I'm going to do is I'm going to, since we started with the MACD, we'll talk about the MACD here for just a moment. So I'm going to have MetaStock go through and look for opportunities using the MACD. Now, there's a couple different ways that you can do this. One, it'll look for buy signals, it'll look for sell signals, and it'll look for overbought and oversold. So it's going to look for 4 things for us here. I'm going to have it look through the S&P 500. So instead of me looking at all 500 of these charts and trying to figure out what has a buy opportunity, it'll do it for me here. Now, all I have to do here is click Start Exploration, and it'll start going through the S&P 500 to identify opportunities. Now, this can be any indicator that you want. It doesn't have to be MACD, it can be RSI, it can be stochastics. It can even be what you want to program into it. So if you want to tell it what to look for, it can do that for you. It has its own formula language that you can write. We can even help you write formulas. There's a lot with it. So don't worry about formula writing. You don't have to do that. There's so many systems built into MetaStock. But if you have something specific, like, hey, you talked about the 50 EMA is your favorite. Well, if you want a cross of the EMA, great. We can help you program that in MetaStock to scan and look for the 50 EMA cross. So there's a lot of things that you can do with it. And while I've been rambling on here, it's already done looking through this list of stocks for us. Okay, so what I can do now is I can come down here and I have these different columns. I have buy, sell, OB, and OS. So OB is overbought, OS is oversold. If I rank by buy, you can see my first 4 here are buy signals. And then if I rank by sell, so let's see how many sells there are. So if I come down here and highlight that, I've got 25 sells out of the S&P 500 today, telling me that I have a MACD sell. So remember, MACD is a trending indicator, so that trend looks to be going down on those particular stocks. Okay, then I can rank overbought, and I have quite a number overbought and oversold. Okay, now I didn't actually have any oversold, so they were either buy, sell, or overbought. Let's go back to buy. Now I can just double click on this first one, and we could look at it. We could put the MACD indicator on the chart. We could put our expert advisor on. We could open up the second one by double clicking on this or just scrolling through it. And I could look at each of these charts, but how do I know out of 40 different results, which one is going to be the best opportunity to take? I mean, I could spend a lot of time analyzing 40 different charts and trying to figure it out, but we've got things to make that easier, okay? So we don't need to go through 40 charts, and we're not gonna do that. What we're gonna do is we're gonna do a personality test. Because if I went through all of these different stocks that were giving a MACD buy signal, it doesn't necessarily mean that they are trending stocks. It may be a momentum stock, it may be a volatile stock, and it doesn't match the personality of the MACD. So what we want to do is we want to do a personality test between the stock and the system to see if they match up. Think of it as a match.com for stocks, right? I'm going to pause for a quick question here. Michael in GoToWebinar is asking, What about combining indicators? Yeah, absolutely. You could combine indicators. So if you in the Explorer, and actually I'll show you a way to do that in the Explorer here that's really easy, or you could do it through formula language. So there's two different ways you can do it, and I'll show you how to do that towards the end of my presentation, Michael. That is a very great question, so thank you for that. Okay, so now that I've got my list of 40, what I'm going to do is do my personality test. And that's what we call back testing or system testing. So this system testing allows me to say, hypothetically, how would I have done if I had traded over time using a specific indicator, okay? So what I'm gonna do is, we had used the MACD, so I'm just gonna search in the system tester here for MACD. So I have my MACD expert system, and then I have down here my last exploration results. So those are my 40 stocks that I just looked at. So if I choose that, what I'm going to do now is say, okay, how did taking trades over the last 2 years, 3 years, 4 years, 1 year do if I'd traded these stocks? So we need to make sure that our personality test is kind of set up just right. We need to tell the system tester a little bit about us. So I'm just going to put in some information over here and show you how this works and how we can identify opportunities, okay? So the system tester will ask us, are you doing long trades? Are you doing short trades? Are you doing both? Well, in our scan that we did, we had both buy and sell signals, so I want to do both here. Then here it's going to say, how long do you want to go for? Do you want to do a year, 2 years, 3 years, 4 years? Well, here what we're doing is, I'm just going to do an example of 1 year. Let's see how this performed over the last year. Okay, so we're going to do that. I'm going to do this on a daily chart. Now you can scan on a, if you have MetaStock real time, a 5-minute, 10-minute, 30-minute, whatever it may be. Or if you have MetaStock end of day, you could do daily, weekly, monthly, quarterly. So I'm just going to go in the middle here. I have MetaStock RT, but I scanned on a daily bar, so I'm going to look at a daily. And then I'm just going to go into my trade options here. So if I go into my trade options, this is some of the information the system tester likes to know about me and how much things that I have in my trading, okay? So this reporting, don't worry about it, leave it alone, okay? This next one is really based off of what you trade, how much you trade, and what you do. So that's very important to tell the system tester this, because it can change your results based off of you, okay? So here, first of all, you have a points only test. Now, a points only test is for my futures traders. I was looking at the results of the survey over on YouTube. It looked like the majority of people were equity traders here, but if you are a futures trader, you would select points only and put that in, okay? Now, here, what you can say is how much money you have in your trading account or ways that you trade. So first option here is % of available equity. Now, what that means is, if I say I have $100,000 in my trading account as an example, and I'm willing to risk 15%, now I wouldn't recommend putting 15% of your trading account into a trade. That's all up to you, what you're willing to risk. But I'll put 15 here just so I can show you the math, okay? If I put in 15% of 100,000, that's $15,000, okay? That's how much I'm willing to risk in a trade. If my money goes up to 200,000, well, now I'm risking 30,000 because I'm risking 15% of that equity. Okay, so that's how that math works, and that's what the system tester would do. On the flip side, you can say, hey, I only ever trade $10,000 per share. That's what I always do. That's how I want to test it. You can do that with transaction cost. Or you can say I trade a certain number of units. So if I said I trade 15 shares at a time, 10,000 shares at a time, 1 million shares, whatever it is that you trade and the way that you trade. But I'm just going to do this % of available equity option here. Okay, so we set that. Broker, this is going to depend on where you are in the world. Okay, so if you pay per transaction, you'll want to put in how much you pay per transaction here, because that is a cost of trading, right? It definitely is. But for those of us here in the US, it's become a lot easier because we don't pay commissions on a lot of trades anymore. But maybe futures you do, you could put that in, you could calculate that in as part of it, okay? You could also put, if you trade on margin, what that is. And then finally, trade execution. So this is our last one, and this is a set it and forget it. If you always have the same settings that you want to use, you only have to do this once and then you're done, okay? So the first option here is what's called realistic market prices. Well, what in the world would realistic market prices be? What it is, it's simply put, is it is a way for the system tester to know when to get into the trade. Okay, so I just scanned and found opportunities on the MACD. Okay, we're mid-market on a daily chart. Okay, you could get in on the current bar, but most likely what you're going to do is you're going to wait for today to close and then make your trade on the next trading day. And that's what realistic market prices is. Is this just saying, hey, if you close today, get in on the next bar. That's the way the system tester does it. Now you can't change that to say, hey, wait a day, wait 2 days, wait 3 days. You can do that and change it. Most people just leave this alone and leave it as a default. You can also account for slippage. And slippage is basically saying, well, if I do get in on the next trading day, well, am I getting in right at the open? Maybe it moves just a little bit before I do. Maybe that accounts against me a little bit. So you can put that slippage in here because that's one of the risks of trading, right? Okay, so that's all you have to set in the system tester. That's all you have to tell it. Now we can run our personality test and see what works. So remember, we have 40 stocks. We're going to test to see which one works best on the MACD. Now, these may be a buy signal, a sell signal, overbought, or oversold. Any of those 4 are going into our system test. So let's go ahead and start our test. Now, it's going to crunch all those numbers for us very, very quickly there. It did all 40 of those stocks and found those opportunities very quickly. So if we click View Report, you'll see basically here a graphical representation of how our money did over the past year trading the MACD on these 40 stocks. So we can see that some worked here, some worked really well, some were kind of, and some didn't perform well at all. So let's take a look and let's figure out which one of these might be the best opportunity based off of our results here. Okay, so if I look at this, let's just spread these out here and talk about what information we're looking at. The very first one I have here is Moderna. Okay, and what it's telling me is over the last year, I would have made about $8,000 for 7.8% gain. It traded 51 times over the last year, had 25 winners, 26 losers. Okay, so it had more losing trades than it did winning trades. So that's really interesting, right? Well, how was it the best performing system, but it had more losing than more winning? Okay, and what's happening here is it's saying our winners are bigger than our losers, which helps us understand what's actually happening, okay? So what we're gonna do is we're gonna dive into this just a little bit more. If we look down at the next one, US Bank Corp, that one had 23 trades over that same period. 15 were winners, 8 were losers, okay? So more of a win ratio there than here. So let's actually just look at Moderna since it was our top one, just to get a feel for it, kind of understand what the personality test is telling us. Over that period, again, I had 51 trades, 25 total were winners. Let's see, 20 of those were long, 5 were short. My average profit was about $900, and my highest profit was $4,500, lowest profit $162. So it really breaks down this data for us. But let's look at our average profit here, $897, versus an average loss of $560. Now, one thing I really want to talk about here is the way that I tested this. And people will ask me all the time, well, I don't trade that way. That's not what I do. I don't buy it when it says, I buy it when it says buy, but then I may get out before something happens because you're using stops. And you can absolutely account for stops as part of this. Okay, so there's some advanced settings that you can get into and you can change and you can put in there. But the way that I've done this right here is just to say when it says MACD says buy it. When it says sell it. Now, why would I want to test that way? Well, it just gives me an understanding of how the system stands on its own. how it's doing, how it's performing on its own two legs, okay? So that's all we're doing right here. Now, what I like to do here is just go through the orders tab. This just shows you every bit of trade and every bit of information that was there. I never look at this tab personally. You can look at the position excursions, see how they all played out each individually. I don't look at this tab. If you like to look at that kind of information, deep dive into it, you're welcome to. It's all there for you. What I like to look at is this, because this just tells me very, very quickly how I can identify how my trades played out, okay? So what I'm looking at here is I'm looking at my equity over time. So this is what's called an equity line. And the equity line just tells me basically over this period of time, how did my money perform trading the MACD, okay? So my initial equity over here was 100,000, and then here's my year period. I have 250 bars, okay? So for the first 6 months, how did it do? If you're looking at that equity line going, how did that do? Well, it didn't do very well the first 6 months, did it? It lost money, it didn't perform well. And if I had, if I blocked out this half of the screen and only looked at this, it'd be something that I'd walk away from. But how have the last 6 months performed using the MACD on this indicator? And this is what we talk about with system testing and matching, okay? So it has been performing fairly well. It's been a pretty consistent upward tick in our trading and how it moved over time. So looking at this smooth equity line and seeing how it goes like that, it's actually pretty good. Now, overall, the picture's 50-50, but from here forward in the current market, it seems to be performing well. So it's something to consider. Let's look at our next one down. Okay, so now here's our next equity line. And this is what I do when I system test. I just quickly go from equity line to equity line to equity line to see which ones look the best to me. Now this one, I look at it and it looks really good over a long period of time, I would say. Okay, it was smooth and consistent, but I've been sitting kind of flat here the last few months. So it seems like a lot of my money was back here. So maybe not so much as the first one. Okay, then I can go down to equity. I don't like that one because it's bouncy, it hasn't performed well. It's not a good looking equity line. So I can just quickly go through these and pick out the select ones which look best to me. Now, look, here's one of the things we talk about when we talk about system testing and whenever we look at a chart. Anytime we do historical performance, what is it telling us? Well, it's telling us, yeah, hey, it has worked well right here, but does that mean that the next trade's going to be good? No, it doesn't. But what this does is it helps us increase our odds of success by knowing if something has been performing well, our odds are that it may perform well on the next trade. Now, we're not guaranteed to that, and that's why it's so important to have your risk mitigation in place. What is your rule for getting out of a trade if it goes against you? Okay, let's look at that. Okay, so here's my initial equity, and it has just been consistent losing. Now, is that what you want your money doing over time? It's just consistently losing? No. So you're going to really, when you're looking at this, you're just going to avoid the ones that are, you're just going to avoid these and kind of stay away from these and look and analyze these. Now, just because it's performed well on this screen, again, does not mean that it's performed well. So that's why it's so good to look at that equity line and see where that performance was. And if we were to look at this at over a bigger period, it may change how well it's performed. So system testing is something that you do based off of the way that you trade and you want to analyze. Now, what I did there, we're now going to do as a very quick workflow to show you how quickly you can do this. Okay, so what I'm going to do is go to Explore again. Now, let's see, another indicator somebody mentioned was RSI. Okay, let's do RSI. So I'm just going to choose RSI in the scanner. So we're going to scan the S&P 500 once again. And again, this could be any. Okay, I think, did it? Okay, I lost audio there for a second, so I'm back. So we're going to do the RSI. I'm going to go ahead and start my exploration, and I'm going to walk you through how quickly you can do this on your own. Okay, so if I scan the RSI, it's going to go through that list of stocks for me here very quickly. We'll see, it looks like we're rejecting out about 98%, so we're not going to have a lot to look at, which is okay as well. And we're going to see which one of these very quickly could be the best. Okay, so we have our results here. So we have 13 results here. Okay, it looks like we have one buy signal. Again, lots of sell signals. Then we have our RSI value, close, and volume. Okay, so I'm not even going to open up one of these charts. I am just going to go and I'm going to look at the system tester. So I'll just go to the system tester. We'll just search RSI. Okay, and we'll choose the RSI. We'll do our last exploration results. Everything else will stay the same. I'll start my system tester. We'll do view report. Maximize this for you. We'll rank here on net profit. So Palo Alto was my top performing one over the last year. It had 4 trades, 3 winners, 1 loser. Let's just click on it, go to our equity line. And then you can quickly look at the equity line and say, okay, this has been fairly bouncy. It wins, it loses. My wins are pretty big. It's been performing okay here. I don't love it. Okay, move on to the next one. Look at my equity line. Much better, more smooth and consistent. A little choppy here, so maybe taking it with some trepidation, but that could be one. We'll go to analog devices here. And then we have, so you can see how quickly I've gone from 500 stocks down to 13 stocks, down to about 2 or 3 stocks that may be my best one. So I didn't like that first one because it was all bouncy. My second one was pretty good, and then I can eliminate from there. So you can see how easy it can be to actually find opportunities that way and identify things that have a good match. Okay, so we're going to look at this in a different perspective, but first I wanted to go back and talk about Michael's question about combining indicators in the exploration. So let's say that I wanted both MACD and RSI, just as an example. So in the Explorer, let's go back to the Explorer here. So I have RSI selected, and I'm just going to also go and choose MACD. Okay, so if I do MACD by, so I have 2 selected. So you can see I have 2 selected searches right here. Now I have some options over here when I do that. This says use the results from the preceding exploration, use the selected instruments for all explorations, or use each exploration's previously selected instruments. So there's one main way to do what Michael's asking. So here, use the results from the preceding exploration. So what this would do, if I rank this, let's say I'm going to look for a MACD buy first. I selected a buy signal. I could do, let's actually do the expert. So we're doing both. Okay, so this will look for both buys and sells, overbought, oversold, and an RSI signal of some type. Okay, so what I'll do is scan MACD first and then RSI. So let's run that and see what kind of result we get. And this is a good way to combine indicators together to find opportunities. Now that doesn't have to be MACD and RSI. They're kind of counter to each other, a trend versus oscillation here. But this is an example of something that you could do if you wanted to, or if you wanted to look for a MACD and a crossing of a 50 EMA, or if you wanted to look for MACD with a volume spike, or MACD with a gap. You can do all that. The Explorer is very, very flexible in the way that it can actually identify opportunities for you. Okay, so here we have the MACD. It gave us 40 results, and then of those 40 results, we had 0 RSI, okay? which makes sense. But you can use the Explorer that way to help you find opportunities. Now, one of the things that you're going to hear as you attend the conference, and these presenters who are all amazing, using the Explorer, they're going to talk about it being one of their favorite features in MetaStock. Because the thing it does is it just saves so much time in identifying opportunities that match what you want to trade and how you want to trade. Okay, so for my next portion here, I would like you to tell me some symbols that you like to look at. And what we're going to do is we're going to do a little bit of a different workflow and see what indicators actually work best on those specific symbols. So if you could just pop into chat symbols that you want to look at, and we'll do a few different symbols and kind of analyze them and see what's going on with them. While you do that really quickly, I'm just going to take a quick drink of water. Thank you, apologies for that. And what I'm going to do here is just go back to my PowerPoint for just a second and talk about what we've done so far. Okay, so we've used our preferred indicator to identify opportunities. So that was scanning the market, finding opportunities, and then back testing them to see which ones work best. Okay, we've got a couple of symbols coming in. We've got XAU over in GoToWebinar. We've got AMD over in YouTube. That's what I was talking about. So let's start with those two and go from there. Okay, so what I'm going to do is I'm just going to close all my tab charts back here, okay, because we're going to focus on XAU for just a moment. So let's bring up our chart of XAU. So this is the MetaStock symbol for XAU. It's XAU equals. And because you could put in against different currency pairs. Zlato asked for XAU versus the USD, so this would be the root symbol for that. If you're doing, say, against the Australian dollar, it'd be XAU USD, AUD equals, so you can do that. Okay, so the question here is, looking at this chart, what system should we use to actually trade this? Okay, if you just, I love trading XAU, what system works well on it? And that's the approach we're going to kind of take here for just a second. So what I'm going to do is go back to just the system tester here. We already know what we want to look at. We want to look at XAU. So let's figure out what works with XAU. So we're just going to unselect this. And what we're going to do is type in our instrument up here. So XAU equals. And I can take, if I selected every system in MetaStock, I've got 128 different back tests built in right here that I could run it against, okay? But what I'm going to do is I'm just going to take a selection of them called the performance systems. So the performance systems, and I can just search PS here, are a collection of systems that come built into MetaStock that you can all have expert scans, everything built in with them. And there's great manuals about how each of these systems work. Some of them are things like combining the stochastic and the RSI together, or it may be a swing system, or the Stark band, or percentage crossover. So there's a lot of different things in here that it's testing. Now you could test whatever you wanted against it, but we're just going to say, hey, I'm going to trade this way. Okay, so we're going to take these 81 systems against XAU. We'll leave everything the same here. Let's actually maybe look over 1,000 bars, just to change it up here. And since we're looking at something like, we'll leave it daily, okay? I'll go ahead and start my test. And view my report. Okay, so in doing this, now remember, we know that things are either trending, they're volatile, they're momentum, or they're volume-based, right? So we're trying to match the personality of the system with this particular stock. So I'm just going to rank here on net profit. So instead of a list of symbols over here, now I have a list of systems over here. Okay, so the best performing one over a 4-year period here was this PS MACD histogram system. So it had a 7% gain, 23 trades, 15 winners, 8 losers. Let's look at our equity line. Okay, now remember, this is over a 4-year period. So how does this work over a 4-year period? Well, it looks like for about half of that period, it didn't work very well. You know, if we had looked at it right here, we would have been like, nope, it is not trending, it's not doing anything. But what's XAU doing currently? Look at that. It's been trading with this PS MACD histogram. It has just been trending and consistently working. Okay, so that's what we'd like to see in an equity line, is something like this. So now what I could do is I could go back to my chart here, and I could put on the expert advisor that matches this. So it's our PS MACD histogram 1 system. And I could put on the expert, and here you can see, okay, that's the latest trade right there. And it's been doing really, really well. Now, a caveat to the way this one works is I just tested it. I found the system that works the best, but I don't have a current opportunity because I didn't scan first. I'm just looking at this specific stock. But you can see it has been performing very well. Maybe you're trading it on a 5-minute or 240-minute. So you could trade those time frames to see what system works best, because it could trade differently on those different time frames. Okay, so let's see. Let's do AMD, and then we'll do crude. And we'll go back to our system tester. Let's actually bring up our chart here first. And one of the things here I love in MetaStock 19 is we've added in these tabbed charting views that you can do. And if you haven't seen the overview of MetaStock 19, if you are a current customer, I recommend going to watch the overviews of how to use all the tab charting, everything here. It just makes it so much easier to navigate your charts and move around different charts. Okay, so let's do AMD. We're going to go ahead and take that, go into the system tester. We'll do the same things, 4 years, leave everything as a default, do the same 81 systems, and we'll see what performs best here. And then we'll do crude after that. And as we're getting towards the end here, if you do have any other questions or other symbols, love to answer them and kind of take you through those. Okay, so let's rank here on percent gain. So very different results because it's different stock. And this is what I love about system testing, is that personality matching with the specific, everything specific that we're talking about here. So AMD cycle progression system. So this one is 46% gain over that period, 214 trades, 142 winners, 72 losers. And let's look at our equity line on it. Okay, pretty smooth, consistent over time. Hey, that's not too bad. I'll take that. Let's look at our next one down just to see. See, this is choppier, not performing so well in the current. This is why it's important to look at that equity line, excuse me, that equity line, and kind of understand what's going on with it. Okay, so this one, pretty good, but I like that cycle progression. That one looked pretty good. So let's go back over to our chart at AMD, and we're going to put on our expert. And let's look for cycle. And this is a great feature, is just to be able to search for the expert that you want. And then there's our signals that go along with that. And of course, these all come with expert commentaries as well. So you can look at the expert commentary to see what it's telling you. Okay, crude, let's look at crude. Got a couple requests for that one. So we're gonna go, let's open up the chart. Now, what I'm gonna do with crude is I'm gonna do the continuous contract, just so I can look over a period of time. If you're a futures trader, this is the continuous contract. I could do specific contracts if I wanted to. In this case, I'm just gonna do the continuous contract. Okay, let's go in, let's do our system test. Okay, we'll do our same 80. Now, if you wanted to do this against, say, the MACD, if that's all you trade, just take AMD and put it against the MACD. Take whatever you want to do. This is all very, very flexible. in the way that it lets you do this. Okay, so net profit here. Now this is always interesting to look at too. And this is something we didn't talk about before, but since it's our top ranked one here, I'd like to talk about it. So I back tested over a 4-year period, okay? This top ranked system here traded 2 times. One was a winner, one was a loser, okay? Is 2 trades over 4 years, is that how long you would hold a trade? Are you that type of trader? And that's an important thing to consider, is what type of trader that you are. Okay, so if you're long-term, hey, that probably matches your personality style. If you're a very short-term trader, well, hey, I don't want to sit around and wait for a trade for 3 years before I take it. I want something more active. So that's something to consider. So the first one was very, not very often, 2 trades over 4 years. Here we had 199 trades over that same period. So let's just look at our results here and see. Okay, so there's our first one. Okay, but that doesn't match my trading style. 2 trades over 4 years doesn't really match my style. So let's look at cycle progression. Okay, cycle progression here seemed to work fairly well. It's not super consistent in the way that it trades. We have a lot of downs, a lot of ups. So I may be a little iffy on it because I like to look for the smooth, consistent equity lines. Okay, no, I throw that one out. So you can see how just saying quickly, hey, I just want something that's going to quickly fit my bill, and probably the second one would be the one that would fit the bill. So that's how you can system test to find opportunities. Okay, so going back to our PowerPoint here. So the 2 workflows: use your preferred indicators, find the best indicators to work on a specific symbol. Now, I've covered a lot of information and gave you a lot of stuff that was very in-depth. So Jeff talked about this. When you get started with MetaStock, you don't have to know all this stuff. You're going to jump in, you're going to want to look for opportunities, you're going to want to use the expert advisor to help you understand indicators. You're going to get into system testing. And how do you learn all this stuff? Well, what you do is MetaStock is a program that will grow with you over time. You may start with, hey, I just want to scan. That's all I want to do. And then later you may want to start system testing, or you may want to start forecasting, which Scott will talk about tomorrow. All this is easily learned through videos that we offer, free technical support that we offer. I was out in Toronto and Montreal this last weekend, and one of the questions I can always ask in any room is, hey, who's contacted our support? What do you think of our support? And I'm not scared to ask that because we have world-class support. Our customers rank our support levels at between 95 to 100% consistently. We are very, very proud of our support and the work that they do and how they help customers. So when you first get started with MetaStock, we're going to have one of those support guys call you. We're going to have them help you get MetaStock set up. They'll ask you, hey, what do you want to do with MetaStock? And they'll show you how to do it. They'll show you, hey, here's how you can do what you want to do, get you set up, show you how to get started in the best ways. Now, the best way for you to actually get started is to actually go to this website. Go to metastock.com/conf-promo. So Jeff will give you that link again here in just a moment. But if you go to metastock.com/conf-promo, what it'll do is it has all the conference specials on it. Okay, so you can see here's all the conference specials that we have that are available for you to try. If you have a previous version of MetaStock, hey, you should upgrade to MetaStock 19. Here's the special offers that we have for upgrading as part of the conference specials. Take advantage of that if you have a previous version. It is an awesome upgrade. If you're new to MetaStock, you can try it for 3 months for the price of 1. So if you want to do end of day trading, you just select this MetaStock DC. It starts at $59 a month. If you're here in the US, it's $69 because it includes options data, but you get stocks, futures, indices for the markets that you want to trade. If you want to do MetaStock RT, that starts at $210 a month, and you get the same buy 1, get 2 free. Like Jeff said, that'll take you into August. It's pretty incredible that you can try it for 3 months and do that. Okay, so whatever type of trader you are, just select which version that you want, and it'll walk you through here, select your market, select what you want to do, 3-month opportunity. Now, if you're kind of, hey, well, I don't know which version is best for me, well, come down here to this little icon right here, and you can chat with one of our sales professionals who can walk you through what would work best for you. What is the best option? Talk to you about how you trade, your trading style, and they can point you in the right direction. They're awesome, just as good as our support, and can help walk you through what's the best. So just click on that little button, chat with sales, and they can help you out. And then if there's other products you were interested in, you could order these here, or you could talk with our sales department and figure out which one is best for you. But MetaStock is a fantastic product. There is so much you can do with it. It is so flexible. If you have ideas around how to trade, and what you want to do, contact us, talk to us. We'll talk to you about how MetaStock can help you in your everyday trading. That is our goal here at MetaStock, day to day, is help traders be more successful. And that's all I have. Jeff, let me pass it back on over to you.
I'm ready. Let's do it.
All right.
Here we go. I can actually just take it. Let me
Okay.
do this. All right. You should be able to see my screen. Thank you very much, Kelly. Appreciate that. One of the things we do like to brag about is the support team. Scott Boy said in chat, support staff is the best. I agree with you. I mean, one of the things that I absolutely love about MetaStock is the fact that we keep more people in sales, in support, than in sales and marketing put together. Though we have, it's such a great part of the company. It's not uncommon, literally, for them to kind of survey all of the users that have contacted support over the week and just get 100% satisfaction ratings. It happens all the time. And one of the things I think that's really, really helpful, if you do have MetaStock, is, of course, you do have the scanning, you have the testing, you have the tools. But if you have questions, you have people that can kind of help you. And that's kind of why we've taken such an aggressive stance on kind of helping out people, reaching out to them. It's pretty funny. A lot of times we'll bring on kind of a new partner and kind of get them up to speed with MetaStock. And we send them to do a white glove installation treatment. And they're like, well, that was really cool that they did that for me. And they're really, really surprised that we do that for every single customer that's new to MetaStock. Because we want you, one of the things that we're lucky with is a lot of our customers have been with us for literally decades, and that tells me a couple of things. One, they're pretty happy with it. Two, it's helping them, or they wouldn't keep subscribing. But I very, very much appreciate everybody. So I'm going to talk just for a second to remind you that, in case you forgot, MetaStock has been rated the #1 software program, and it's been rated that way 31 years in a row. So crazy. And for all of those of you that have been using MetaStock and voting MetaStock and all that kind of stuff, thank you. We appreciate that. We do have 2 versions of MetaStock. I'm going to kind of go through the pricing on it real quick. We have the real-time version. We've got the end-of-day version. If you want to get the real-time version, it comes with a data service. I lost my train of thought of where it's going. It comes with MetaStock, everything Kelly showed you. Also comes with a product that we call Zenith, which is literally a news program. They spent $1 billion on it. It's supported by 3,000 different reporters and about 300 different news bureaus. It has some of the best fundamentals. It's basically a competitor to Bloomberg, and it's included with MetaStock at $265 per month. So for $265 per month, you're going to get MetaStock. You're going to get that real-time data feed that's an actual institutional quality feed, and that's how you pay for it. You can also do the end-of-day version. The end-of-day version of MetaStock will be $69 a month. And the offer that we're doing right now is if you pay for a month, we'll give you the second month, third month for free, which means if you do the end-of-day version, you'll pay $23 a month for the next 3 months. Well, you'll pay $69, but over 3 months, that'll be about $23 a month. You can try the software that's been rated #1 for 31 years straight. You can go through that white glove service. You can go through the included training. And If you're not happy, if it's not helpful, if it's not something that you think is going to help you kind of improve your trading and take it to the next level, there's no additional requirement to keep it. So you can sign up for that. You can get that at you can give us a call at 800-882-3040. You can go to metastock.com/sales chat, or you can go to metastock.com/conf promo. So I'd recommend you give it a go. Of course, right? I do want to say thank you to all of our sponsors again: Task Magazine, Technical Analysis of Stocks and Commodities Magazine, TechnoTrader, and the CMT Association. CMT, Tyler's actually going to come in tomorrow, and he's going to talk about kind of some of the advantages. He does a really good class on technical analysis, but then he actually talks for a little bit about how having a CMT association might designation after your name might be helpful. And it's very, very interesting to me, like if you're managing money right now, if you want to manage money in the future, if that's something that you want to do, a CMT designation, he's going to go through the numbers tomorrow and exactly how helpful that can be. CMT is a hugely well-respected, well-reputed organization. I'm not sure reputed is a word, but I'm going to use it anyway. If you're interested in finding out more about CMT, go to cmtassociation.org. You can also call them at 646-652-3300. So very, very much appreciate them and all of our sponsors. So, and we talked about MetaStock. Our next guest, we have two. We have a 2-4 special on our guests, as well as our MetaStock program. Jake Bernstein, this gentleman right here on the left, big friend of mine, used to live with, not very far. He used to live not very far from my house, not with me, but not very far. We'd always go and do these options. We'd teach people about options in a group called the Trading Options for Profit, which is a great group. Brian has kind of made a really cool indicator. I call it the Swiss Army knife of indicators. It does so many different things that you can do, like measure long-term trends and short-term trends, and look for breakouts and look for divergences and look at support and look at resistance. It's super cool. I had a really good imagination with it. Like it's very well put together. To give you a little bit more background on Jake, he's, I think, traded his first futures contract in the 60s. And he's been publishing a trade newsletter. And I think that's since the 70s. So tons and tons of depth of knowledge for both of these individuals. Let's go ahead and get him started. How are you doing, Jake?
I'm doing good. How about you, Jeff?
I'm doing great. And then I do see Brian is joining us. Brian usually likes to share his screen, correct?
Yeah, I had a little throat surgery about 2 weeks ago to make an old man sound like a new man. And so my voice isn't what it should be. So Brian's going to take the bulk of the presentation today, but I do want to do a few words here and now, if you don't mind.
Hey, yeah, no problem.
So it is always a pleasure and an honor to be invited to speak at a MetaStock conference of any kind, because a couple of minutes ago, Jeff, you were complaining about being too aggressive. Well, you guys are the most unaggressive people I've ever met. You just let the customer do what they need to do, and you give them help along the way, which is truly impressive in this business where people are always trying to sell you something and pushing something down your throat that you might not really need. So your approach to all of this is certainly very inspiring and gives me faith in the business. But most of all, the technology that you guys have is truly phenomenal. Kelly did a super job, incredible. And I just want to add to that a couple of things. Since I have been trading since the summer of 1967, 52 years, I have learned a few things about trading. And one of the things that I've learned is that no matter what kind of software you have, no matter how powerful the machine is, no matter how many indicators you've got, it's all worthless if you don't know how to use it. And it's all worthless if you don't use it correctly, even if you do know how to use it. So it's great to have all those indicators, but most people flounder around because they don't have the indicators explained to them. So when you do something with MetaStock, it's just beautiful. They've got the expert advisor, which is part of the process of what we do with expansion contraction. Also, it's my privilege to be associated in this process with not only MetaStock, but with Brian Latta, who's going to do the bulk of the presentation here. I'm going to sit back and throw in my 2 cents here and there when I can. But the beauty of expansion contraction is this. If there is a trading system, a strategy, an indicator, a method, a system, whatever, I have tested it, traded it, or used it. And I've rejected most of them because the good news is there's a lot of stuff. The bad news is there's too much stuff. And so the average trader comes into the market and they say, oh my God, I'm overwhelmed. What do? I don't know what to do. So for me, what makes a difference is red light, green light, stop, go, long, short, no interpretation, purely 100% technical analysis. And that's what we do. That's what expansion contraction is designed to do. It's designed to get you in, get you out, give you your profit target, your stop, and you'll always know exactly where you stand, which is, for me, even though I've traded literally thousands and thousands of times, the thing that makes the difference is simplicity, objectivity, and clarity, and that's what you get here. So Brian and I got together a few years ago. I'll let him do the introductions, and we'll take it from there, and I'll jump in from time to time, Brian, if you don't mind.
Thank you for that, Jake. And again, thank you always for your support and educational prowess over a decade that I have known you. I am going to get right into the presentation here, as hopefully this will just move forward. As let's go run into the full disclaimer, absolutely required here. I'm not going to read through this. Obviously, you know this disclaimer, it is required. And we will be showing some results on the charts as well as run through some of the rules. So again, I'm not going to reread these things individually, but I did learn about the moving average channel from Jake over a decade ago, and working out some of what I was looking for to identify clearly strong trends up or down, and short-term moves, short-term swings up or down, based on the moving average channel, is actually how expansion contraction came to be. So I am going to still pop this up. You can read through what Jake has done. He is a veritable who's who of top names in the market, and been in this since the late 60s. So vastly more experience than I have, which I'll just pop up briefly here. I have been doing this since the early 2000s and been learning along the way. And as I said, in 2014, went to Jake because I was still interested in learning what to expect next with a higher degree of probability, and was very attracted to Jake's coding of systems. I am going to pop up the rules real quickly here. Again, you can take screenshots of these if you want to. I don't want to stay too strong or too long here on the rules, but rules to get in, rules to get out, add a gain or a loss on strong setups or weak setups. Ideally, we've got all that known in advance. I am
in for a second,
sorry,
Brian.
Go ahead, Jake.
Yeah. You know, the beauty of this methodology is this. If we talk about certain indicators that are very popular, I won't mention any names, you have to think about interpreting what they mean. So you can take 10 people looking at the same chart with an indicator, maybe, for example, the Elliott wave, and 7 of them will say bullish, 3 of them will say bearish, 2 of them will change their minds when the others are saying bearish or bullish, and it's confusing. The reason that MetaStock has been able to take our rules and put them on the chart clearly and explain them with the expert advisor is because of the rules are completely objective. So that there's no way 2 people, 5 people, 10 people, 15, 100 people can look at the same chart and reach different conclusions. For me, that's the most important thing in the world: clarity and specificity. And if it wasn't able to be completely exact and specific, the computer would not be able to be programmed with the rules. And that, of course, with the advent of artificial intelligence becoming a really serious matter, is able to mean that we can take the expansion contraction in its infant form, which it is now, and expand it with artificial intelligence into something that's even better than it already is. And I want to stress, for me, as you will see when you look at the charts, when the charts switch from green to red and from red to green, it indicates a change in trend, and that makes all the difference for me. It keeps it simple and makes my time much more valuable to me. And I'll give it back to you, Brian.
Thanks for that, Jake. Obviously, you and I have slightly different applications of the same processes. And of course, that's just due to individual characteristics being slightly different. And so if someone hears Jake's application, the rules are slightly different than mine, well, that suits Jake, and that's fully acceptable. And obviously, my rules suit me on that. Again, just want to run through some quick definitions on here. So let's run through with the laser pointer. I'm just popping up in the top left. We did talk about identifying long-term trend and trend strength. And so if we pop down to the bottom, expansion contraction is the indicator at the bottom that has two components. The short-term red and green line are measuring shorter-term price moves up or down through Jake's moving average channel. A strong move up through the moving average channel is going to be evidenced by the red and green line moving apart quickly or expanding. And typically, when we have a strong short-term expansion, in this case to the upside, it does lead to a trending pattern. We've got long-term uptrend with the cone or the cloud. Jake likes to call it the cone. I just call it the cloud. In the background is the long-term trend feature. So as long as the cloud remains bullish and does not turn bearish in this particular case or turn red, we do have a long-term trend in this case. That in this case you can see from back in the beginning of November, lasted all the way into mid-April. So we have a long-term trend and trend strength. By trend strength on that one, right, we would also take a look at where short-term swings of price back down in the range. Again, evidenced where short-term expansion, red line goes above the green line, or short-term we're bearish. We'll see here, although it's a bit subtle here, lighter green candles, which identify a weak uptrend. Currently, short-term prices bearish, long-term on the moving average channel and price still a defined uptrend on Jake's moving average channel rules. Also here on expansion contraction. And for those of you that may be wondering what this indicator, they're all labeled here. This is Williams accumulation distribution. Another indicator is part of Jake's moving average channel, and so it's included here. So again, I'm going to just pop over to the far right here where we have a short-term swing that turns stronger to the downside. We're starting to see red bars or candles. And again, red will be the stronger part of a move down. Light red for that will be weak down. So literally, we've got basically the four definitions of a long-term uptrend or a short-term upswing, and a long-term downtrend with the cloud expanding beyond 1 standard deviation and 2 standard deviation, which are just strength values. So again, just think of it as what's the normal range. If price breaks above that, where we've got the red arrow here showing we did break out strong down, trade to a price extreme, and the diamonds that are marked on here so well from MetaStock on there are a take a profit target rule on here. The outer bands, I'm always aware of where we are more than 3 times the average true range above or beyond a 20 simple moving average. So not a part of the moving average channel strategy, but I want to know where there are price extremes and technically expansion contraction is
For a second, Brian?
lightest part. Sure, Jake, go ahead.
I appreciate that. So in addition to that, again, you're getting 2 different perspectives on the same indicator, basically being used the same way. You will see a lot of, pardon the expression, BS on this chart. Here's a bunch of Bs right over here. And you can see the S's as well. So the Bs and the S's, of course, stand for buys and sells. We know that normal traders, whatever that is, can't sit on a profit for too long without it burning a hole in their pocket. They want to get out. They want to jump out. So fine. If it's a good methodology, it will get you out of the profit and give you an opportunity to get back in at the bottom of the channel, okay, which is support. So you can see the little B's over there. Those are all opportunities to buy the bottom of the moving average channel, knowing that traders are human and they will jump out. It's virtually impossible for anyone to get into a position when the cloud turns green and stay long for that entire period of time, because people just are not built that way psychologically. They're always wanting to get out or trailing stops that are too close. So for me, even though when you turn green from red, that's the beginning of the move, and the move ends when the green turns into red, that's the ideal situation. But we know along the way, we're human beings and we need to be able to get back in again because we got stopped out at a profit, or we got stopped out on a trailing stop, or we got stopped out because of fear or greed. So the method is very forgiving that way. It gives you opportunities to get back in again. I've said too much. I'll give it back to you, Brian.
No, not worries. Just jump in there anytime. In this particular chart, the Bs are the expansion contraction or JBXC's continuation trades. I will show a chart with Jake's moving average channel buy-ins on that. But just in this particular example, we've got initial trades, which are a reversal, and then smaller Bs, which are a continuation. When we have a short-term correction, drop pricing, weak down, and then both short-term, long-term expansion contraction turn strong up again. We'll plot the small B on this particular example as a continuation trade in a defined uptrend. We want to be a buyer at or near support or on some type of continuation trigger on that. So I have at least popped up the longer term trend, which basically follows the green cone or cloud in the background, expanding, contracting, expanding, contracting a bit, and so on and so on. You can see that the range of the cloud or the cone in the background does get smaller over time, and we can use that to our advantage with some clear setup. So we'll show a chart of divergence shortly again here. So I am marking everything that I can on this. The solid gray line up here is long-term, in this case, strong down, because the cloud is more than 2 standard deviations above the mean, or just above average a lot. So strong up is mathematically calculated. Is think of it, what's normal? It's above normal on this strong downtrend. We've got the small gray dashed lines, which are short-term. Strong down in this case because the red line pops above its normal range or 1 standard deviation. So when something is above normal, we would anticipate that we should see, in this case, further downside, or in this other case where we popped up and short term is gone strong up above its 1 standard deviation line with the green line here. We popped up strong up, and we do see some further upside. Did you have a comment, Jake?
Yes. Also, this is applicable to any time frame, Brian, right?
It is. I'm going to show some different time frames on here too. But just initially here, we got long-term trends and short-term moves up or down. I also personally wanted to know when buy on the dip was still a bull trend and a higher probability buy on the dip versus a buy on the dip where we sold off and did hit a price extreme, which again would be a profit target. So let's move on. At least range expansion and contraction. As I said before, I've labeled where the green cloud is generally expanding, even over a couple of swings. A swing up, a swing sideways to slightly lower, another swing up, a swing down, in this case being a strong swing down briefly. So I did want to label expanding markets are where we're getting range expansion, new highs, higher lows. That did continue for some time. And I also labeled over here, say range contraction was a consolidation in this point, marked out by when the cloud of the cone was generally getting smaller over time. And so as price starts to consolidate sideways and we start to see a contraction on the expansion contraction indicator, and everything falls inside these small gray dashed lines, really, we got to this point where we're not trending. If you look up at price, that's certainly been consolidating on this chart here for several periods, obviously. And so we can see range contraction may give us consolidation. That might also give us a reversal on that. So do want to pop up and start showing some trade examples. And in this particular case, we are looking at a daily chart of the Qs. And it did just pop back and start labeling some things. You do see the Bs, and there's another B. I've labeled that as a JBXC entry. And then the JB entries, these are Jake's swing trades when price comes back down to the moving average channel of a period of the low in a defined uptrend, then we've got a buy at basically the orange line of the previous bar. And I did want to show I'm willing to take whatever happens first. In this case, buy entry. I did label out the exact entry price on the get in on the close or market on close, and just get me in now at the end of a strong buy setup. And also labeled the stop loss, which will be plotted out on the rules plus in the expert advisor, and the take profit level, including when it happens. So we do want to just kind of get through some of these results pretty quickly.
Brian,
Yes, Jake?
just to be clear, these notations were put there by the computer, right?
This is all from the MetaStock charts. So
Correct.
I didn't label these out in PowerPoint. I took these using the tools in the vertical left bar in here to go ahead and mark out the trades. And to, certainly my background is not only retail currencies, but stock options. Even though I don't trade the stocks, I still track the results of what the stock trades would have done, for coaching and helping other people who do trade the stocks, but B, also validating that the stock trades are consistently profitable. This manual back testing is something I do help the individuals in coaching, and of the 4,000 plus that I've helped, those that are willing to go back and either mark up the trades or do automated back testing generally get this quicker and start following their plan. And of course, you might feel pretty silly if you had back-tested results that are consistently meeting your objectives, and then you're breaking the rules. I will have to at least admit at one point to doing that. So pretty quickly you find out, hey, I just got to follow the rules and I will be more consistent. So I'm going to just mark out the second trade right at the orange line here. This was after getting up and having a positive outcome and taking a profit, have no risk. The next setup was a Jake's swing trade from the moving average channel. So I marked out the results on that rule from the entry price to the stop and the take profit on that, and just marked out the results. As time moved forward, then there was a JBXC continuation entry. So I marked that with, again, the blue line and entry price right off of this platform, stop loss, take profit on that. And I'm just showing again, as these are hitting targets, what the results are. So there was a swing trade here. You can see that the blue arrow does point a little below the 8-period moving average of the low. That was due to a gap lower open, which gave this trade a better price. But in this case, right, price did trade lower for the next several days, making a stronger bearish correction by the red line of expansion contraction going above its 1 standard deviation, or just above normal to the downside. So yes, there will be lost trades. I put it at 2% here because that's my risk. I don't take more than 2% risk on any single trade, and I don't take more than 6 trades with 2% risk in any one market, in any one direction, at any one time, to keep my drawdown small. So in that case, we had a loss, and we'll just pop up real quickly. The next one is another JB continuation trade on expansion contraction. So I won't belabor these too long, just taking a look at the time frame. But as you can see, if we were willing to get back in, eventually 67 periods later on the reversal here on April 15th, that second trade had a big gain on the third leg. And of course, that's why we're seeing some better results here on a 2% risk. As price went up and the trader got to break even after taking profit at a target and a price extreme, here's the next setup. In this case is another buy the 8-period moving average of the low and another gap lower pricing to get a better open. This time the stop price for 1285 is not hit, and we go up and hit the first target labeled out there at the top of the band, and again saw price continue to trade higher and literally get up here. And although it's not got a diamond on this one, the highs on here did exceed the previous day's price extreme, so that's why I've labeled that as a profit target on here. Again, always identify the rules and whether or not we have automated markings that are perfect or not. Always follow your rules. And again, since that one got up and hit a profit target and profit target 2, profit target 3 going out on the reversal went another 52 days in this case, and of course finally went out at a gain. Another swing trade just hit the first target, and we see price drop back down quickly. So hit the first target, go to break even, and that trade on a 2% risk would have been a small gain. I'm marking out the next trade in this case, which is again a swing buy at support, the 8-period moving average of the low, and this trade went up, hit the profit target at the upper of the band, and then unfortunately did pull back and go out at break even, but did have an additional gain. So that did pop out an opportunity after getting in and getting up and going out to take the next swing trade. Again, since price towards the end here, where the cloud and the cone are starting to contract over time, we're getting divergence and some small add-on trades on this. And of course, if you look at the time over time, if we were willing to add to trades and we take a loss, what we're seeing is more winners, fewer losers. We're getting some bigger winners comparatively to the single loss out of this case. So again, just wanted to run through that off of the daily chart over the last 5 months, what had happened on the Qs. So popped up to a weekly chart, top left or bottom right, if you're wondering how to quickly tell those. W for a weekly chart with the same short-term, long-term expansion, contraction, bearish. We can go up to see the color coding, did plot an S that's automated. And of course, I just marked it with the chart setups here for clarity on that. We had a sell setup that lasted for a period of time on the weekly chart, and that had a buy setup back in February of 2023. And this has been a long-term trend on that too. I also included at least the EA that's available here that does show what the trend strength is, direction and strength, long-term, short-term, whether we're expanding or contracting on that, and even support resistance, as well as other information that are extremely beneficial. I did mark at the bottom, bearish expansion, contraction, short-term, long-term are expanding and are both red. Features out with a sell setup, and the red bars plot. We have strong down, weak down. Does create a sell setup here from the moving average channel, selling at the 10-period simple moving average of the high in a defined downtrend. I didn't mark that trade out here because I'm just doing some general setups. The range expanded lower, expansion contraction got bigger. Price pulled back a little bit and expansion contraction contracted, but we're still in a weak downtrend here, evidenced by the lighter red bars. We expanded down strongly again with a continuation trade setup to the downside, and the market expanded lower again. I will mark out this when we see expansion contraction expand widely, and then the next new low, expansion contraction expand less. On that, we could say that the first move down after a correction compared to the second move down, right, that we are losing momentum or starting to diverge as we make new lows in price, and expansion contraction is narrowing again. That's going to give us another divergence trade in here that we can always mark out. But
Yeah,
did want to go ahead, Jake.
Well, okay, sure. So look, bottom line is this. I've been trading for over half a century. The most important thing that you have as a trader is time. It's the only thing you cannot ever catch is more time. Maybe you can buy yourself a little bit of time with good health. But the bottom line is, I want to have my time and enjoy it and not sit in front of this stupid machine. So even though I wrote the 5 best-selling books on day trading from McGraw-Hill, that's really not for me. I don't enjoy it. And the only way you can really make good decisions with day trading is trading a large position for a small move. I have no problem with that, but it takes time. So as we move up in the time frame, you'll find that the weekly charts are more stable, give you bigger opportunities with less expenditure of time, a little bit more risk at the beginning of the move, but that's the beauty of expansion contraction. You can use it in any time frame. So if you're using it in the intraday time frame, the decisions are clear for me. I don't need to worry about expansion, contraction, or in terms of whether the chart is expanding or contracting, support, resistance. All I have to think about is the change for me from the red cone to the green cone and vice versa. That's the beauty of it for me. But as I become older, I realize that there's a lot to be said in terms of being a simple trader. I don't want to make too many decisions. The more decisions I have to make, the greater the probability that I will make a wrong decision. So as I say, expansion contraction is very useful no matter what time frame you trade in. And Brian is going through the details here because he wants to make sure that everyone understands the versatility of this methodology. And I promise I'm done for now.
Okay, thanks, Jake. That's absolutely right. I'm also at least going to highlight out a couple of things. We're in a downtrend and price pulls back up in the range. But used to have a problem with when to let the trade go and would certainly use trailing stops and get out prematurely and possibly miss another trade on here. So when we pull back up in the range and we're still in a defined downtrend, this is a sell at resistance type setup, and that is clearly defined in here. Also, as price pulls back up previously, we want to be a seller at or near resistance. And as we pop over into the uptrend, price expanded up quickly and pulled back throughout this period. We want to be a buyer at or near support. And that's, at least with expansion contraction, also helping us clearly identify when we want to be bullish and stay bullish or change on that. So quickly, I'm just labeling out a few more things here on this chart with both long-term, short-term, bearish and bullish, and marking out these labels on here and showing some of the potential profit targets as price moved up. And I am also going to lay out this on this chart on here real quick, because again, if you like or don't like seeing things shown up on the chart, I still suggest it's an exercise you should do. So I have marked out the actual entry price on a market on close, on a strong buy, with the calculated stop loss from the rules and the initial profit target. And from the buy trigger day on this chart, 65 weeks in the trade setup going into April and the beginning of May. So this isn't current date, but I did just pull this one up so we can see some results. On the next chart, it did take some time, a couple of months, before this one managed to hit a profit target. But at that point, of course, we're up and we can look to take the next trade in here. So we did pop back up on and pull up the next trade on here, which is again a swing buy in the defined uptrend. Price came back on that, and then we'll just look at how that one played out. Another 33 periods on that with take profit finally hit, and a secondary strong move up, take profit, and again, plot out the results. Although this is less trading over time, as you can see, we can still get some bigger winners and be 100% clear on when to get in, where to get out at a gain or a loss. So popped up a second one on here with, again, that's following out when to get in, where to get out a loss, when to take a profit. And this, we've seen a really large gain on here from these charts that popped up here in the queues. And then a secondary entry, again, one of Jake's swing trades, not stopped out, hits a profit target. And then we see the results of that trade and look to take the next trigger, which is a small b. This is an expansion contraction or JBXC continuation trade to buy. Label out the market on close and the stop loss from the rules and the profit target on here. Another 120 weeks out of looking at this chart on that platform. And so this is just, again, another bigger move and a secondary profit target, and all of that provided with another big gain. This is back in the fourth quarter of 2016. So I have gone back a fair amount of time. That once again plots a Jake swing trade, a buy at the 8-period moving average of the low of the previous day with its calculated stop loss and profit target and associated gain. Next trade and its associated gain. And of course, it does, in this case, plot up another swing trade and it, because of a strong dip in price, was a loss. So we're not going to have 100% gains. There are losses. The back testing on the daily and weekly charts have shown a higher percentage of gains. Even a broad cross section of testing, the entire S&P 500 showed more winners than losers and bigger winners than losers. So are there going to be losses? Likely on some volatility? Yes, there will be. And that is just a part of trading. So again, go ahead, Jake.
No, I'm okay.
Okay, sorry about that. So just continuing to pop out. And as I had mentioned before, up at the top, price has been moving up in general, and we have a new high in price at this point. I'm just going to go straight down to expansion contraction. And expansion contraction's value here is less than the highest expansion contraction within 60 days here. And this is associated with the point of pricing here. So price highs are higher. The indicators highs are lower. We've got a classic divergence in that. And I did label that out following Jake's divergence rules, but using expansion contraction. Pop the black line at the lowest point of expansion contraction. If you follow that to the right, it is an arrow. As you can see, when expansion contraction drops below the lowest point of expansion contraction, in between the two lower highs, that's the same kind of trigger that Jake's got with momentum and other indicators on here. And so I did pop this up to see what's the max profit on the one-to-one based on the range between those 2 points, just to see what a divergence trade would do. And over the next few weeks, price did drop down. It did hit the first profit target of, with Jake's rules, of half of the range, and also hit a price extreme. And in this case, as you can see, the full profit target would have been missed. However, at least in taking the first profit target following the divergence trade rules and at a price extreme, I'll also take some profit on that. There we hit 2 targets, and the third trade eventually went out break even. But even divergence is tradable following Jake's general rules and guidelines here with expansion contraction. So that, again, I'm just going to pop back up to see what are the benefits. The expert advisor that MetaStock has done is actually really good at identifying these here. Of course, today also gave you the clearly defined setups and the triggers. Rules to get in are the triggers, rules to get out at a loss. And there's more than one on those. And of course, rules to take profit, there are more than one. And of course, when we do trade these, when I talk about liquid trending markets, high volume, high open interest. In other words, very easy to get in and very easy to get out at a low cost for your price right now. And when I say trending markets, of course, we've now seen that expansion contraction on its duration of trends on a daily chart. The average is 30 days on an uptrend or a downtrend. Yes, there are 4, 5, 6 day reversals, but most of that data comes out in also having plus 100-day trends on a daily chart. So it's a very stable indicator in a liquid trending market and gives us the best opportunity to get bigger winners when they do happen. And if you're willing to add to winning trades when you have no risk on subsequent setups, you can maximize your reward in a strong trending market in that case, and ideally increase the net gain on a trade with the same risk. So we did pop through that pretty quick, just looking at the time, but if that's okay with Jeff, if we have some questions, I think both Jake and I are okay with answering questions. Are you there, Jeff?
Yeah, we don't have a lot of questions that have come through. If you have questions for Jake and for Brian, let us know in the chat. And I can also kind of talk a little bit about kind of how the indicator works and how the scanning works and all that kind of stuff as well. We had a question, and I had already answered this in the chat, but they were asking the individual webinars that you do around JBXC, are those recommended? And my answer was, of course they're recommended. So, but that was really kind of the only question that we've really had about things so far.
Jeff, do you have access to some live charts?
I absolutely do. course.
Why don't we show a few?
Okay, for sure. Give me just a second. Let me go ahead and just take the presentation here. We'll go ahead and show my screen. So there we go. All right, what is there any in particular?
Let's just take a look at the stocks that people love to hate, like NVIDIA.
Okay. Oh, wait, here, I've got to be in the right place.
Can we go full screen?
Yeah, it should be full screen. You might need to maximize your viewer.
Oh, yeah, I
if it's
see.
not looking, if it's not looking full screen for you.
Yeah, no, I got it. So you can see, looking at the expansion contraction, it turned green toward the middle of the chart and stayed green through the entire up move, only recently to turn lower. And that's the beauty, is that if there are big moves to be had, expansion contraction will catch them. So if we move, for example, to Tesla.
Is that another one people love to hate?
That's the one I love to hate. And you can see it does catch the big moves on the way down, catches the big moves on the way up. So it's a very worthwhile indicator in terms of timing. But again, we have to go back to the lowest common denominator, which is the user, which is the trader, because the trader is always going to want to find a reason to break the rules. Let's look at another one. Let's look at some of the cryptos. Can we do MicroStrategy? MSTR.
Let's see. What's the symbol for that?
MSTR.
I can do it.
Cool. And so here's MicroStrategy, as you can see, a more volatile stock, but you can see that when the big moves happen, expansion contraction is there on the way up, on the way down, and it'll catch most of the moves for you. Again, if you're willing to put out the effort to do it consistently, it does perform extremely well. And we can even look at an intraday. Can we do S&P futures, S&P intraday, 5 to 15 minutes today?
Yeah, for sure.
Yeah. And Brian, don't feel like you have to stay out of this, okay?
Okay, here we go.
So can we just do the day session, Brian, Jeff?
I don't do a lot of futures, so I don't. Let's see.
The ES1 is the day session.
ES what?
ES1.
Okay. So, yeah, I'm just not sure the symbology. I know I can do it, but I can't. Well,
No
maybe.
biggie.
Yeah, that isn't what I thought it was. I'm sure that Lynn is kind of watching, going, "Oh, come on, Jeff." I just don't know how to pull that one.
That's all
Steve
right.
wanted to know if we could look at UAL though.
Yep, sure.
Okay. Okay. And go ahead and switch that back to the daily.
Yeah.
Okay. Let's move up here. Pretty obvious from the chart.
Yep. Very, very simple. And again, the important thing is this: you will always know the trend. You will always know support and resistance within the trend. You will always know where you should buy, where you should sell. And those things are usually not available in most trading strategies because they want you to interpret. Interpretation is the enemy, in my view. Interpretation is the enemy of the good trader. You don't want to have to interpret anything. So let's take a look at the current Dow Jones, the Diamonds, DIA.
I got it. Okay.
And again, for me, the measure of a good strategy is, will it get the big moves and will it keep you in those moves for a long time? And the answer is definitely yes. You can see that the Dow Jones just started a move about maybe 10 days ago. It's been uptrend ever since. And it's been very clear when we transitioned from a red cone to a green cone, that's where we pull the trigger on the buy side. And if we don't do that, if we're too afraid of that, you can always find support within the uptrend or resistance within the downtrend. So I'm sorry.
Go ahead. Sorry.
Sorry to hog all this time. I'll shut up now.
No, you're totally fine. I would never I would never say words like that. Especially with you, Jake. But I did want to kind of talk a little bit about how this, for me, it's very visual, right? It's very obvious that you're switching long-term trends. It's very obvious that you're getting a strong buy because the short-term trend matches that as well. But when Brian initially sent me kind of the documents that kind of talked about the pattern, it gave me a lot of ideas in terms of kind of what we were talking about with regard to how I started, like with it being the Swiss Army knife. There's so many things that you could do. And it was to Brian's credit, it was so well laid out that I was like, well, we should put this together in a way that kind of allows people to really just have a dashboard view. I believe this is pretty unique in terms of the way that we implemented it. But if I look at Dow, I've got our expert commentary that's open right now. Right now you can see this triangle. This triangle just says we're pointing at this day. And so right now it's telling us that we're bullish. The strength of that trend is not trending because we're kind of narrowing down a little bit. Short term, we're in an upswing, which is consolidating. Range, we're currently in range expansion, and that is strong. Is there a short-term breakout? No. And it even lists out the minor support and the major support resistance level, tells us if it's overbought, oversold. It's not detecting divergence. If we're in currently a long-term trend because we're bullish, here's what we could be looking at in terms of the targets and the stop loss. And all of that is just spelled out for you. And it's spelled out for you in such a way that Brian laid it out so well. I was able to take exactly what he was doing and kind of put it together. Now, right here, you'll see this, and I love calling them the BSs on the chart. But I'm going to go ahead and kind of move this arrow. So now instead of looking at the current day, we can kind of see what it was saying when we had that buy signal. So since there was a buy signal, the buy signal happened because the long-term trend changed from bullish and was supported by a short-term upswing. And then it kind of gives you the same values, which I won't read through again. But I just really kind of, when I saw kind of all the stuff that Brian had kind of put together, I was like, I can implement some pretty cool things in MetaStock to kind of make this doable. So that's what I wanted to have to say about that. If you guys don't mind, I want to talk a little bit about how easy it is to find opportunities on a chart. Would that be okay for you? Yeah. And okay,
sure.
Because I think I've said it all the time. I keep coming in and talking about how much I love scanning in MetaStock, because even for me, I've been trading now for a long time. I've worked at MetaStock for a long time. And the number one tool that I use every single time I open up MetaStock is scanning. How do I find the opportunities that don't? How do I ignore the opportunities that don't exist? And how do I find the opportunities that exist? And how do I just focus? Because we're spoiled for choice in terms of trading in the US. If I'm looking at the options here on just the options list, there's literally 5,600 optionable stocks. That's too many to look at. If I'm just looking at kind of the ones that are part of major indexes like the S&P, the NASDAQ, and the S&P, there's like 500. There's like 520 of those. There's a lot of overlap. There's more than there's about 520 when you break it up. So if I wanted to just find a buy signal, here's a scan I can run against that list and find just the buy signal. If I just want to find stuff that's in a bullish or bearish trend, there's scans for that. If I want to find a sell signal, I can look for that. If I want to look for breakouts, I can look for that. I can even look for bullish and bearish divergence if I want to. So, and all I have to do is decide on the exploration that I want to run. I have to close this other exploration first, though, and then I just click on start. I can run through the market right now. It's going to go through those 520 stocks for me. It's going to reject a good percentage of them because they're not stuff that I want to look at anyway. And what I'm going to get back when this is done is just a list of the stocks that can kind of take a look at and say, hey, do I like this? Is this something that I want to buy? Is it something that I want to reject? But it just saves me so much time. There's a lot of stuff there. You don't have enough time in the day to look at all the stocks. You know what I mean? You had to have a way to narrow it down. And that's one of the things I think we do best. So right here, out of those 520 something stocks, 503 of them were ejected. 16 of them came back on the scanner. If I just want to see which ones have strong buys, it would be 4. eBay, Lam Research, Lamb Weston, Southwest Star Lines. Those are the ones that would have a strong buy. I could kind of take a look at them. I'm not recommending that you buy them. Obviously, you'd want to take a look at them and see if you actually like them. But I just love how well scanning helps me personally in the trading that I'm doing. And I really love the way that this was put together. It's something that we included as terms of a free indicator that's actually part of 19. But if you really want to take advantage of this and get the scanning and the expert advisor, and that's what the whole toolkit is for. So Steve says that, here's a question that I might need your help with, Brian, if you're here. DIA says the long-term strength is not trending. Is that because the channel is narrowing on the current market? I believe that is why it is. If we're kind of coming down from a peak, I believe this is the rating you're talking about, not trending.
Let's take a look at the chart.
Okay. Can you see it?
Yeah.
Okay. Here it is a little bit closer. So right here where it says not trending. Is that just because it's narrowing and it's not?
They're getting, the inner lines are getting ready to cross.
Okay.
Right. The long-term trend, right, with the green cloud in the background is contracting, and so is the short-term market, right? So short-term, long-term are contracting right now. Strongest part of the moves up or down are expansion.
Let's look at one that just triggered a couple of days ago, AMD.
You got it. Okay. Here comes. All right, there you go.
There we go. See it? Let's zoom in on that part. There you go. There's a clear cut buy signal. Two opportunities: either buy it right away, which is where the B is, or wait. Wait for what? Wait to come into the channel. Those two lines on the bottom underneath there, which comprises a zone of support. In addition to that, let's look at one that's going to bottom. I'm just waiting and watching this one every day. Uber, UBER.
Okay.
And let's zoom in on it.
Okay, here comes.
And what we're
This is
going
how
to
smooth this is when you do it with the splitter bar. Anyway.
We're just going to look at it every day or wait for the computer to tell us this is on our watch list. It will turn. It's just a question of time. We just have to be patient and avoid FOMO if you're missing out. There's two more. Let me show you. Let's show them. WBD, Warner Brothers Discovery. And again, these are not recommendations. These are ones that I'm waiting to trigger.
Okay.
I just want to show
we
you.
don't do any recommendations here.
No, we don't. Happen here. Let's zoom in on it.
Okay.
Okay, so we have gotten a trigger on the buy. It quickly got us out. That's fine. Sometimes you have to take 2 or 3 chances before you get a good one. And the last one I want to show is WBA, the Walgreens Booth Line, WBA. We're just sitting and waiting for this one as well.
Gonna get ready to zoom in on it for you.
Yep.
Notice what's happening. Be trained.
It kept us from pulling the trigger even before the big down move today. So it's rewarding us for our patience. It will turn. It's just a question of time, but it's on our watch list.
All
now
right.
I'm quiet.
Well, and that did trigger a sell 6 days ago. So of either 1 or 2 methods. So that is still in a defined downtrend. And if you were at least trading options, that would make sense. I don't recommend selling the stock unless you're familiar with all of the risks associated. But being an option trader, these are bear trades.
Yeah.
Okay, I have a question I'm going to look really quickly for. The question is why are we coloring the candlesticks, or what is the candlestick color, or why are the bar colors changing? Is that based on the JBXC indicator or the Williams AD indicator? It's a really good question. I don't remember.
It is a good question, and it's based on expansion contraction. So basically color codes the bars or candles, if that's what you want to look at, to identify strong up, weak up would be green to light green, or strong down or weak down, red or light red. All those might be a shade of purple. But
the solid red colors are the colors of the cone. The lighter red colors are the colors of the 2 lines within the cone.
Exactly. The idea is to trade reality at the right edge of the chart. So it just is what it is, and there is no question. It's all defined.
Right.
Very cool. I think that's where I'm going to wrap it, just so we can kind of talk about this particular indicator and kind of how to get it. It's Brian, such a great job. Jake, such a great job as well. I appreciate all the help you guys have had with it. That boot camp we did. When did we do that? A couple of weeks ago.
Yeah.
Really, really good. So let me go ahead and just kind of transition a little bit. Before I do that, I do want to say thank you, Jake, for everything over the years. Appreciate it.
Oh,
Brian, thanks for all the help with this.
thank
Much
you, Brian.
appreciated as well.
I'm going to take
Happy
my
to be
lunch.
here.
Okay. All right, very cool. Let me go ahead and do this. Let me go ahead and kind of move here a little bit. And we will move on just a little bit. So let me kind of do this. You guys should see my screen. Let me turn on my camera. All right. And then we'll just go into it. So again, with that expansion contraction indicator, long-term and short-term strength, expansion, contraction, divergence, so many different things that we can do. And I feel like we did a really good integration. I'm pretty proud of the way that this worked out in terms of helping. You kind of just can put it together, understand it, use it on the fly. It gives you all the information about what's going on with it, the major support, the major resistance, the stop, losses, the targets, all of that kind of stuff. The ability to scan, which I already showed you, the ability to test. And the interesting thing with this one is it tested really, really well. And so we made sure to include the system test so that you can kind of go in and evaluate how it works over a broad array of indexes. I believe this one we tested against the S&P 500 is what you're seeing here, if I remember from when I made the slide a few months ago. So in any case, we released this with MetaStock 19, so it's brand new, just like MetaStock 19 is. The normal purchase price on it has been $5.99, and it's been extremely well received. What we're going to do for you as part of the conference / Memorial Day sale, or whatever you want to call it, we're going to give you a bit of a discount on it. So it's $4.99 here at the event. That's a one-time purchase, and it's backed by a money-back guarantee. If you don't have MetaStock and you want to try out our software that's been rated #1 31 years in a row, you can do that. We'll include a free trial with it. It'll include that recorded boot camp that we sat down and did with Brian and Jake a couple weeks ago. It wasn't Friday, it was a weekend before that. And so you can do that. You can do it at metastock.com/JBXC. I'm going to actually type that out because you can give us a call, 800-882-3040. And you can also chat online with us at metastock.com/support chat. Awesome. Very, very good. Try it out. We do give these things on a money-back guarantee because we want them to work for you. We want you to be able to kind of play with it and see how well it works. You're going to like this one. And so anyway, unlike the other ones. No, I'm just kidding. They're all really good. This one's been really, really well received. 800-882-3040, metastock.com/JBXC, and metastock.com/saleschat. So very quickly, I do want to thank all of our sponsors again. I want to thank you for being here. I do appreciate Stocks and Commodities Magazine, CMT Association, and Technotrader for actually kind of sponsoring the events that we do. Technotrader has a whole bunch of mini courses that you can take. If you're interested in kind of going and seeing those, here is a link that I'll put in. Our thanks to all of our sponsors, but for this time, Technotrader particularly. So in any case, we're of course MetaStock. We've been talking about MetaStock. I just showed you how nice it is to run a scan and get some good results right now. But you can also do testing. Kelly showed that. We're going to be talking about MetaStock all week. The special we're doing is if you pay for a month, we'll give you a second and third month for free. Pricing on that starts at $69 a month. And you can also do that by giving us the call, metastock.com/conf promo, 800-882-3040, or metastock.com/saleschat. So without further ado, our next presenter has been called by our very own Greg Lewis, the a force of nature. I was trying to remember exactly what he called him. Oscar, we love Oscar. Only deals with real charts. You can join him in his trading room if you want to, and he just does such a great job in terms of having not only a really good view of the market, but also being able to talk about it in a super entertaining way. So we love Oscar, big friend of the MetaStock program, somebody we've been working with again for decades. Very, very good at identifying chart patterns and kind of understanding the market, probably because he's been doing it forever. So Oscar, there you go. Just as a point of legalese, forever may not be forever. How you doing, Oscar?
Good. How are you, Jeff? Thank you so much for the invitation. And a round of applause for everybody before me and all the traders that will present after me. And MetaStock, this is just fantastic that you would put this presentation together for all of us. So thank you so much.
Yeah, absolutely. Thank you for coming. It'd be a pretty boring show if it's just me.
So I'm just going to make sure I've got all my windows in place. That's not one of them. All right, good. All right, so am I ready to present, Jeff? Yes, no, Jeff, am I ready to go?
Yes, sir. I'm sorry. I turned off the mute button and immediately lost it. So, but yes, it's all you.
All right, thank you. So good morning, good afternoon, good evening, traders and omniacs from across the globe. Thank you for tuning in. A very interesting webinar from me today. So, I've been part of Wall Street, grew up on the exchanges as a kid since I'm 18 years old, 43 years, all over these markets. I live and breathe these markets, right? So when I do a webinar, I basically spend a few days coming up with what's happening right now in the markets, and then I present a bunch of charts for you so that you can see what's coming next. But this webinar is going to be different. What I did in this webinar, I don't know if you guys know who I am, so I'll just show you something quickly. Just about every night, I do a YouTube video, goes out to my fans all over the world, and in that video, I'll tell them what should happen the next day. Then we're live in a trading room going through those trades. So in last night and the night before's video, I did an offer. I said, listen, I'm about to do a live webinar. If you leave comments under these videos, I will take every single chart that you asked me to analyze, and that's what my webinar will be about today. So this webinar is about you. It's got nothing to do with me, and I love doing it. So everything I'm about to show you is a suggestion or a request from an Omniac who wrote on my YouTube video. So not my style, but hey, you know what? You Omniacs came up with great choices. So I've analyzed each and every one of those charts, and I'm going to go over each and every one of those charts for you right now. One of the first ones was Tesla, and how this year began with Tesla was me putting on the brakes to Tesla and saying, hybrid is the wave of the future. We are getting away from just EV only and moving to hybrid. The EV is overdone. The path is shown to be incorrect. And now Elon Musk and or Tesla should start to drop. And after I did this, it was January 2nd, somewhere right here. I offered 6 targets for Tesla. The first 3 were 212, 200, and 192. We were trading up at around 250 when I started calling for the downside. Well, guess what? 212 got hit, 200 got hit, 192 got hit. Fantastic calls from Omni. What happens next? I put out a second set of targets, 173, 164, 151. What happens next? We come down and hit 173. What happens next? We hit 164. And what happens after that? 151. Every target was seen. In fact, we almost called the absolute low. Pretty good, right? Rock and roll for Omni targets. Now, a lot of people are worried that Tesla's just going to fall apart. And for you bulls, I've got a gift for you. Are you ready? Watch this. For you bulls, I've got a gift. You know what we do have happening out there right now? If I can pull it here, I'll show it to you right now. Now, this will work. Check this out. Let's make it nice and dark so you can see it. We'll make it black so you don't miss it. And check this out. You bulls are going to love this, I promise. Boom. Look at that 40-bar algorithm running on Tesla. From here, it just goes crazy, and it works every single time. So let me grab this ellipse. Look here. Boom, done, right? Market cracks. Where's it get back to? Right there, and Wall Street comes in and hits it. Comes back down. What's it get up to? Right there. And what does it do? It gets above. Then it holds, and we're there now. Tesla has to be up $10 right now. I don't think I can update. I don't think it'll show me the update yet. We'll see if it comes in. All right, so no update yet. Bouncing off that average, Tesla up $10. So for you bulls right now, we've got a little bit of a move. The likelihood is Tesla will move a little bit higher. Maybe take out these highs here. We'll take it one day at a time. But for now, what I will tell you is if you're going to trade Tesla for the rest of this week, make sure that you're above this average. If you're above the average, buy dips. If you get below that average, sell rallies. So Tesla's up 1052 right now, bouncing off that average. And it's exactly what I had planned on showing you. I did the analysis over the weekend, reiterated the analysis again on Monday and said, wow, that's absolute. Let's show the webinar. Let's show the OmniX at the webinar. So if you're going to trade Tesla, use the 40-bar algo or 40-bar simple moving average. By the way, if you don't know this, a moving average is an algorithm. So it's simple because it's one set of calculations, but it's an algorithm. And if you don't think Wall Street is keying off this algorithm, boy, oh boy, you don't know what's going on out there, kids. They are keying off of it every time you get near it. Right now, they're keying off the buy side. You can buy dips in Tesla as long as you stay above the 40 SMA. The next chart that was requested was Mara. There's two types of Mara. One's a crypto, one is Marathon Digital Holdings. The crypto chart looked horrible to me, so I thought I'd show you this one. Mara Digital Holdings. Remember, none of these are my suggestions. These are my Omniacs around the world asking me to analyze charts during today's presentation. So I didn't get much from Marathon. I don't know really what I would tell you except for this. Check and see if this is actually a bear flag. If it is, you're going to know literally by today or tomorrow. If this is a bear flag, which it certainly looks like, right now it's a possible bear flag. If it turns right here, let me grab something. If it turns right here and starts to dump, then we know that we absolutely have a bear flag and you should start heading for the downside. So if you're trading Mara, this is your deciding point. This is where you want to decide what to do next. Now, traders, what I promise to offer you is very simplistic analysis that anybody of any level can understand and actually put to work this week to help make some points or money going forward. So I will keep the analysis very low level, very simplified, so none of us get confused. Can I dazzle you? Can I turn this around and make it so complicated that you think I'm some genius born on Wall Street and no one else knows what I know? I could, but that would make me like everybody else. I like to uncomplicate this mess so you can actually use the information I offer and it'll help you. So we're not going to complicate anything. You want to learn about this, you come see me. We're going to keep this simple so you can understand what you should do to make money this week. So whoever asked me for Mara, I'm not going to out anyone that asked me for these different stocks, commodities, and or cryptos, but I will answer your questions for you. The question in Mara, M-A-R-A, Marathon Digital, is that you are absolutely looking at what should be a bear flag, and if you start to fail here, you could then get short for the downside. Getting above that bear flag would negate the possibility of it being a bear flag, and then we'd go look and see what else is brewing right there. For now, we'll call that a bear flag possible and leave it off to the side. What was asked of me next? NVIDIA. Who doesn't want to know about NVIDIA? NVIDIA. Hey, if you like what you're about to see, please like and share. My name, livewithoscar.com. Come join us. We do fantastic work, and I don't charge anybody to hang out with me at my trading room. It's all free. You come join me and spend your life with me like everyone else does. So what are we looking at? NVIDIA. NVIDIA is just bouncing off this wonderful trend line. It is testing resistance up here. And if you ask me, it's going to best that resistance. Knock, knock, knock. It has been knocking on this door too many times. In other words, we've got this. You've got an instance where you went knock. The door didn't open. Knock, knock. The door didn't open. Came down. Knock, knock, knock. And now we're starting to knock further and we're hitting it again. So my work tells me to tell you we are projecting higher. When they report this week, it'll be for higher, and this market should move much higher over the next few days. Now, if we get this resistance and just get it out of the way and pretend it doesn't exist, what else is going on here? You're in a very smart channel. Let me just make sure that that's extended. You're in a very smart channel, moving higher. There is no reason why you should not continue to move higher inside of this channel. So that's what I was looking at for NVIDIA. And you know, you can do things on these charts that you can never undo like that, right? Very scary. Anyway, so NVIDIA looks like it's going to stay in this channel and work its way higher. And I think the news of reporting will prove exactly that. When they report on Wednesday, I believe it's Wednesday, up we go. That's what I'm looking for. Knock, knock, knock on the resistance. You cannot knock on a door in such a busy market in this arena this often without the door opening. My opinion, anyway. So that's your NVIDIA chart. Technical opinion. I personally have zero opinions about where markets go. I use the chart analysis, which inside of this chart is all the reports that are going to be released, the reports that have been released, government reports, reactions to such, our reaction as a bunch of humans around the world, what fund managers are going to do. Everything that's going to happen is in this chart. You know what's great about this chart? It doesn't have alimony payments. It doesn't have child support payments. It doesn't have a reputation. It doesn't care. It will tell you the pure news. All you have to do is read it with pure eyes. Now, that's the trick, right? Getting your opinion out of reading charts makes things difficult. If you can learn how to read charts without your opinion, whether you hate the company or love the company, has zero to do with where the stock or chart will go. I don't know if any of you would love Bill Gates if you met him, if you sat down and had dinner, and if you tried to marry your daughter, you probably wouldn't like his personality. But don't you love his computers? Same sort of thing. You know, you do not have to like what it's about to like the stock itself. So let's go look at the next one. Someone had requested crude oil. Now, crude oil, if you ask me, anytime crude does something like drop from 87.67 all the way down to somewhere like 76.70, that, my friends, is a worldwide instantaneous stimulus, which helps buoy the stock markets. It does every time crude drops. It's a reason to push markets up. When crude rallies too high, people get nervous, transportation stops moving, and it pushes markets back down. You've had a nice down move in crude, and it's helping to push the market higher. What else is going on in this crude chart? If you ask me, this is a bear flag, and the whole thing's built, which is wonderful. The whole thing is built below the 200-bar moving average. So let's see if I can get this into place for you. I think this is a bear flag. I think this bear flag is being built right below the 200-bar moving average. I think Wall Street is absolutely going to keep their eye on this. They see what's happening. They are not blind, I promise you. I grew up on Wall Street. These formations and all the geometry that I will show you in today's seminar, webinar, if you will, are all incorporated into Wall Street algorithms. It's how they know what's going to happen next. And it's all about geometry, I promise you. So you've got a bear flag under the 200-bar moving average. You just had a drop from 87 to 76. And what else? Well, you're in a channel. Look at this. There's nothing but bearish, bearish, bearish going on here. Can it get above the channel? Can it get above the flag? Can it get above the 200-bar moving average? Well, sure, it could. But all of them are putting pressure on crude right here at the same spot. If you ask me, that's enough to push crude down. You want more voodoo? Let's give you more voodoo. Let's move this away. Let's move this away. Let's move this out of the way. Let's get rid of all this proverbial voodoo. Some of you don't believe in this stuff, right? So we'll call it voodoo. And we're going to get it out of here. Because there's more voodoo to put on this chart to show you. Watch this. It's not the only things that technically look bearish. There's more. And when we get this out of our way, we'll show it to you. What else is happening out there? Well, this is a head. These are shoulders. And you've got a head and shoulders right here. So it is basically bearish, 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 bearish indicators, plus then the bear flag, if you will, sitting underneath, right, the 200 bar moving average. So I say crude continues lower unless something dramatic happens. Looking at the chart tells me crude moves lower. Now, I will tell you this, I am from Wall Street. Your key is going to be here. When you can get crude above the 200, the street pays attention. When you get below, they also pay attention. Wall Street, that is. So you are at a quagmire spot right now. They are watching right now. It's got reasoning to go down, not up, and that is what I suspect from technical analysis. I have no opinion myself. The analysis tells me to tell you likely lower in crude. I hope that helps for whoever requested the crude chart. Let's move on. Oh, silver. Hi, oh, silver. Whoever requested silver, please understand this is a bad one. This one is known to be the widowmaker. It will take the money from your pockets. It'll take the money from your friends' pockets. It'll take the money from grandma's pockets. It'll take the money from everyone's pockets. I know I started in this pit as a kid at 18, spent most of my life in that pit. In fact, I like this market so much that every day of my life, I keep a silver dollar and a gold Krugerrand in my pocket from the days of trading on the floor. Silver, I know it really well. I promise you, it'll take your money from you. Every now and then you'll get lucky. What does silver do? It trades in sympathy with gold more so than on its own. Gold rallied, silver rallied. Projection, 3475 to 3500 is a very short-term, near-term projection, but short-term is your projection there. All right, you got a short-term projection, and it is 3475 to 3500. Now, nothing goes straight up, but that is your short-term projection in July. So, what else are we looking at? Now, remember, these charts are all being presented because somebody requested each and every one. I don't know that these would be the charts that would have been in today's webinar if it was on me, but I've liked every one of them so far. Good job choosing charts. PayPal, PayPal, PayPal. I have to say, I spent an hour on this chart, and no matter what I did to it, I came up with almost nothing. Not much there, but at least there is the channel. What do I mean by that? Well, you've been in this bearish channel for a long, long time, and finally a bullish channel emerges, right? So now you're on the right side on PayPal, moving higher. But I have to be honest, I have nothing real to give you on this except for being that you're in the bullish channel. Let's look at it in the simplistic form. Maybe it'll make its way back to the top of the channel. Why would I say that? Well, it seems to go from the bottom to the top, just about the bottom, through the top, it's the bottom, almost the top, almost the bottom, almost the top. You know, let's see if it wants to do that. That's about all I can give you because there's really nothing here. I mean, I can make something up, but, you know, there's no need for me to do that, right? If you want the truth is there's really nothing to look at. And in fact, if I really wanted to beat up on PayPal a little bit, I would call this a bear flag right here. You know what I'm saying? I would think that we're in a bear flag right now. So I don't love PayPal. I just like the fact that it's in a channel. So maybe that is your bear flag. Maybe that's actually what's going on. I think if you use your imagination, you can do a shoulder to a head and a shoulder right here, a baby head and shoulders, and the bear flag. But for now, let's get rid of any of that thought. Let's say that doesn't exist, right? We won't call it this at all. What we'll do is we'll take the bigger picture, and on that bigger picture, we'll just call it the green channel moving higher, and maybe that will help. So for PayPal, for now, yes, it's moving up. I don't love the stock. I don't hate the stock. I wouldn't trade it personally, but if you want to know what to do, stay inside of this channel. Buy the dips on the low end of the channel, sell out on the high end of the channel. It's been that way since November of last year. So that's what I have on PayPal. Whoever requested PayPal, I hope that helps you a little bit. Next is Generac. Generac Holdings Has a target of 156, but I will tell you, I put that target on here before this bar existed. Now that bar jumps up, makes me look brighter, but I did the analysis before the bar existed. I came up with 156. That puts us up, you know, right about up here where, let me draw a trend line for you. That puts us somewhere about up here. And then we'll make it nice and thick so you can see it. Right about there at that blue trend line is what my projection is. Short-term projection, I'm not calling it a top by any means, but it's channeling itself higher. The big blue channel, right? You had this monstrous blue channel, and the market channeled itself higher. Boom, boom, boom. And then caught this channel, right? A new one started. Now, inside of that, an even steeper channel, and you broke out of the original first blue channel. So it's channeling higher. It's using a lot of geometry. Wall Street's bouncing off the geometry on this, and it's projecting to about 156 for the near term. That's your Generac. I hope that helps. Again, I was hoping to show you this chart when that day wasn't on there, but I updated this morning, and boom, there was a big bar. But that was the call when we were down here. But the webinar happened on Tuesday, not Monday, so I couldn't get you the information on time. All right, so that's Generac, and we're certainly looking for higher up at this blue line. Let's see what else was requested. Oh, Microsoft. Well, I'm going to start moving. I'm only not even halfway through these charts. You requested a lot of charts. Microsoft, what do you say about Microsoft but this? Round of applause. Look at that chart. Look at that market. Look at Wall Street just banging away on the 48-bar algorithm. Just loving it to death. So it's in a channel, right? Well, once again, we're using channels. We're using simplicity here to show you what's going on. It's in a channel which starts itself right about here. Boom. Also hits that average. Interesting. Rallies up. Where's it catch? The average. Rallies up. Where's it finally break from? The average. Down to the bottom of the channel. Jigger jags around the average, gets above, starts a new channel. Fantastic, right? That 48 bar is making all of this happen, and Wall Street is just keying off of it. So the channel is projecting higher. We expect this to stay inside of the channel and work its way up and eventually make its way up here to the top of this channel. So being that channels seem to be the in vogue on Wall Street right now, which means they're just going crazy on geometry, let them create the channels. We're smart enough to know how to use them. They're simple too. I hope this is helping you in some way. Remember, today's work is abstract for you so that it's simple to understand. You can go home and redo it yourself. I'm not trying to get into the Omni, the Oscars market navigational indicator, and how it comes up with daily day trades every day and where to get in and get out. Not for this. You've asked me for help. I'm going to give you help today. So let's see what else we can come up with. Ethereum. Wow, Ethereum sitting there out of nowhere, right in the middle of the crowd. You guys asked for Ethereum. Okay. I did not, by the way. I did not take the charts out of order of the requests. I literally lined them up in request order. So it might jump around a little, but they're great charts. So Ethereum on the 55-bar algorithm, moving average, whatever you want to call it, it has kept this thing in check every single time it's gotten near it. I have shown this to you many times on Bitcoin and Ethereum. Look at how well this average just keeps this market in check, in check, in check. Gets underneath, fails, keeps it in check to the downside after that. Then, boom, what happens next? You get above the channel, see the channel breakout, above the average, and the street pays attention. Wall Street always pays attention to the simplicity I'm showing you. I promise you, there's so much complication out there, but when you bring complication to an already complicated business like trading markets, you're just overcomplicating things. Now, yes, I've got way more intricate ways of getting in and out of these markets for day trading, but for abstract viewing, which way should they go for the next few days? This is the perfect way to figure out what comes next. I promise you, Wall Street was waiting when this happened and absolutely waiting when that happened. It doesn't happen by accident. It's not random. And it's not an accident. It is Wall Street keying off of particular areas and particular things that I've been trained to follow my entire life, which is what makes me so helpful when I teach people. And I'd be more than happy to teach you. Just make sure you come on down to livewithoscar.com into my free trading room. So listen, there are a lot of traders out there, or whatever you want to call them, analysts. How many of them grew up on the trading floor as a child and spent his entire life there? That is where we learned how these markets actually operate. That's where every entity who builds the markets called to. We got to know all of the facets, all of the assets, all of the different personalities. That's how you learn how markets move. You know what I mean? Then after that, you throw your analysis at it. But first, you have to know how they move. A handful of us on this planet have ever had such training. I am one of them. You are blessed to be in my presence. If you come hang out with me at Live with Oscar, I would be blessed by you if you would show up. But I promise you I can help you in 1,000 ways. Just come hang out with me. What's next? All right, so we just did Ethereum. And I do believe is soybeans. The next request was soybeans. Now, a lesson, if you don't understand abstractly how markets operate. Soybeans. Somebody writes to me, Oscar, look at the soybeans chart. Why is it getting so bullish? And I said, why? Come on now, don't you know how this works? This makes perfect sense. It's a summer market. I'll show you what that means. But soybeans is a summer market. So soybeans, corn, wheat, oats are going to get busy in the summer in the U.S. as opposed to softs, which are busy in the winter. We'll get to that. So check this out. What you have in soybeans is this monster average just killing it for us. Let's make it nice and thick. Look at this average just killing it for us, just guiding the market. Does anybody, if you're trading a fund that trades soybeans, could you possibly need more information than this average right here? You don't need grandma on the phone to tell you what she thinks with the Maloika. You know what I'm saying? You don't need any of that. This average is just perfect. And Wall Street is keying off of it. So what do they notice? They notice it's A, summertime planting season. B, bull flag is brewing. C, it's above the average already. Everything about this says it should move higher throughout the year. Now, does it have to go up every day? Of course not. It's soybeans. It's not going up every day. But soybeans is showing you that summertime, from spring to summer, is when the grains put in their lows. That is just a given, unless you have an extremely large planting season, over the top, more planting than usual type stuff. Your summer markets bottom in the spring and move higher. So you've got a bull flag here. You're above the 16-bar moving average. Don't ask me why they would key off on the 16-bar. My job is not to reinvent the wheel. It's to put the wheel on my car and drive very quickly with it. The wheel they're using is the 16-bar algorithm or moving average. Great. I love it. So Wall Street's using it on soybeans. So am I. There's a bull flag. Wall Street notice it. So do I. Projection from the bull flag, if it is a bull flag, there's always a question mark because you never know if a flag is a flag till it starts to produce. We're going to put a question mark there, but if it is a bull flag, your projection, short-term projection is 1,300 to 1,325. If the flag works, that's where you'll go. But you can see just how clearly this averages work. Right, Wall Street noticed it and just went crazy on it. And it's like a year and a half that it's been working. Great tip, right? Use that 16-bar average on July soybeans. What else? Okay, so a summer market, it bottoms, right? What's next? This would be considered not a summer market. This is a soft. It's a winter market. What happened to the winter market? Well, exactly when the summer market started bottoming, the winter market started comping. That's what they do. So the softs are coffee, sugar, cocoa mostly. There are others, but those are the big ones. Cotton. They are winter markets. They're strong in the winter. They get weak in the summer. Grains are summer markets. They go up in the summer, get weak in the winter. So if you didn't know that, simple, the softs are winter markets. Grains are summer markets. Coffee, sugar, cocoa, cotton, all that stuff, summer markets. Oh, excuse me. When it's winter in the US, those markets get busy. When it's summer in the US, these markets get slow and the grains get busy. So it makes perfect sense to have bear flags in sugar and bull flags in soybeans at this time of year. Perfect sense. If this is a winter market, should be going down. Summer markets go up basically from the spring through the summer. That was sugar, right? Okay, who is next? Cocoa. Look at this crazy. Even something as powerful as cocoa that went from 1,500 to 12,000 this year could not withstand when it finally started to get warmer. You see, the winter in the softs territory puts tops in. So this is a soft, it's called cocoa. And look at how it got bearish right around the time grains got bullish. Makes perfect sense that it should. It's another winter market. What else? I am telling you that Wall Street watches these markets and watches these algorithms like hawks. Look at this. Bounce, 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 bounce. Look at the massive break when you finally get under it. Breaks, what's it do? It bounces right to the average, drops. Just about hits the average, drops. That's a winter market behaving as it should in the summertime, right? Summer here, winter markets are busy when it's winter here, not when it's summer here. So that would work for coffee as well. I don't know if that's part of the presentation. If anyone asked for it, it would be. So this average, by the way, which is working so well in cocoa, is a 14-bar simple moving average. And boy, oh, I'm sorry, that's an SMA. And boy, is it working really, really well in cocoa. Now, are there cocoa traders on this planet? Not many, just like the amount of growers. There's 2 growers. There's 3 people that trade it. Just kidding. But, you know, it's not a busy market. But if you were crazy enough to trade it, this is what you would use to do your time. What else is out there? We just did cocoa. We did sugar. I think wheat is probably next. Yes, wheat was requested. My God, does Wall Street watch this stuff? Look at how right here, when the 12-bar algo started to kick in, Wall Street just went, that's it, let's start using it. And what happens? Boom, buy it at the algo or the average. Boom, buy it at the average. Boom, buy it at the average. Is it just the average? No, there's geometry in here too. Look at this. There's also geometry in here. You got trend lines. Let's make them solid. Right? You got a channel right here. It's working inside the channel, hugging that average, monstrous average. Wall Street's in love with it, and they're not going to let it go. So you've got wheat just hovering this trend line geometry and the 12-bar algo or simple moving average. Wall Street's not stupid. They watch. This is not random. It's not by accident. I can find what Wall Street's looking for on any chart, any stock, any commodity, any ETF. You give me 2 minutes on a chart, I'll tell you what Wall Street's looking at. It's what I do. It's why I'm able to show you. Do they shift? In a snap. Funds will shift from using this 12-bar algo, throw it out the window and find something else in a split second. When that happens, we find else. We find what they're looking for and continue forward. This is what they're using for now on wheat. Another summer market. Did you notice? Did anyone even pay attention to that? Look what happens here. As soon as we start to get near summer, the bottom comes in. In the spring, the planting season, look at how the bottom came in. Yeah, I want to make this a little thicker. Maybe it'll let me. I just want to illustrate for you. That'll do it. Check this out. Look at how the bottom came in when? Feb, March, April. Exactly what I was teaching you. Another summer market makes perfect sense that it would go up as a grain in the summer when you're soft, fish and cocoa cotton are coming down. If you didn't know that, make sure you do for next year. What else do we have out there? There's so much to show you guys. Oh boy, have we gone over the doctor yet? We have not. Look at Dr. Copper. Someone requested copper. I was so happy because, boy, I've been talking about copper for weeks and weeks in the trading room. And here's what I think about copper. Copper, like it's another cocoa vent. Whereas it quietly, silently started to run and no one paid attention, no one paid attention, no one paid attention till it was too far to stop it. And then Wall Street went in and kept buying it on top of the run that was taking place. That was cocoa. I think they're doing the exact same thing quietly in copper right now. No one's paying attention. Look at how expensive it is. And it's just quietly going, quietly. So it's exactly what we noticed all last year in cocoa, just quiet. Shh. No one said a word. It just started to go. And then, poof, well, copper is starting to do the same thing. It's an economic thermometer, and the temperatures look pretty high. What does this really tell us? This tells us our stock market wants to go higher overall. Economic activity is exploding. The price of copper is moving higher, and or I think there's people running it as well. That's another story. And that tells us that the temperature is hot. The economic temperature, the thermometer is showing us hot temperature. And the good Dr. Copper is one of those indicators that lets you know when things are starting to heat up. So good call for asking me about copper because it's a great indicator of what's to come. What else was requested out there? Gold. Yeah, we haven't seen gold yet. So look at gold. Gold is sitting at this infamous double top. It's as clear as the day is long. When we see a double top, we sell a double top, right? That's what's supposed to happen. Here's what I will tell you. If it is a double top, we're going to drop to 2,400, 2,375. Pull back. If it is not a double top and it gets through, you got 2,480, 2,500. So if it breaks through, here's your target. Now I'm going to make it a little thicker for you. If gold can get through the double top, you're going here. And these are short-term targets. If gold cannot get through the double top, you're going here. Let's make that a little bit. That didn't work. 18. All right. So here are your two projections. If it does not get through 24 to 2375, if it does get through 2480 to 2500. Now I'm giving you short-term stuff, right? Nothing far away. So that's how I want you to look at gold. We do know that double tops usually work. Let's let gold tell us if it works, then we're going here. If you break through it, yes, it goes right through. We go here. All right, so let's see. So no is no. If it won't go through the double top, it's a no. If it goes through the double top, it's a yes. That is what I've noticed for gold. Short term right now, top day. Another request from my Omniacs. Number chart are we looking at this moment? Bitcoin. So check this out. One of my favorites lately. I have been showing Bitcoin in video after video and saying, look, this Bitcoin is doing a great job staying inside this channel. And if it holds inside this channel and holds this average, it's going to take off. Then I did a video when we got to the average and said, look where we are. Do or die. If it holds here, it's going to take off. Then I did another video to say, hey, we are buying dips into this average. Then I did another video on this day to say, short-term target, 72,000. Here we come. Check this out. You want to see something insane? On this day, I made the call. I did my analysis over the weekend. So for Sunday, Monday, Tuesday, we're going to get to 72,000. And this is what happened. Look at what happened, kids. I mean, can anybody else in the world do that for you? Tell you exactly where the market will go. It hit our 72 target exactly right when we said it would hit, right at the spot. You cannot make that stuff up, kids. So we gave that out to you on this day, and it went right to the target. Bravo, technical analysis, right? That is pure analysis just doing its job. Now, if you ask me, this is a big bull flag. Representative of the flagpole is this upward move. This is your flag, hits the average, breakout is likely to occur. Now, where are we now? The top of the channel, top of the channel, top of the channel. Today's not the day to run out there and buy anything. We've made our projection. If you can get above the channel, bravo. If not, wait for it to get back to the average. But we did absolutely hit that target exactly what was called for. Viva la Omni is all I can say about that. The 85,000 target absolutely remains valid, but that's a long-term target. This is an ST, short-term target, and has already been hit. Bravo on that. I'm going to take a bow. Come on now, kids. That's pretty damn good analysis. Let's see what else is out there. We did copper, we did gold. Okay, so the next one is this. Now, this one is getting scary. At the height of inflation, at the height of the pandemic, at the worst time when all the trucks and all the ships were stuck, nobody moving anything, and we had supply problems, we got to a 140.55 on the measure of inflation, the Bloomberg Commodity Index. Since then, it has dropped all the way down to 95.19. That is not inflation. That's a measurement of deflation, right? Well, I don't know that I could call it a measurement of deflation anymore, because now let's take a closer look at what's happening top day. This is what our inflation has done lately, kids. We are currently at 107.25. We were at 95 and change. Right? Look at that. Inflation is coming back. And that, that's going to definitely present us with some kind of an issue at some point. Just want to show you that it used to be the measurement of deflation, but I don't know I'm going to call it that anymore. It's back to inflation. Now it's back to doing its job, which is measurement of inflation. It was turning into the deflation measurement. But now look at that, huh? It's starting to go. Keep your eyes on that, kids. It's not just going to turn around easily. So you've got a whiff of inflation, although that does help push up the stocks, because companies are charging a lot of money for products that they can make cheaper than they were able to make when it was 140.55. Now they can make them at 107, let's say, price. Let's just call that a crazy price of supplies. Well, how come the price in the store didn't get any cheaper? So they are making money hand over fist, and it's propelling the stock market. So that's one of the things that you do have going on there. What else was requested? I think the next one on the block was Chipotle. Check this out. Chipotle. This was part of a different webinar that I had done for MetaStock. I'd used this in 2 different webinars, and for MetaStock, I was teaching geometry. And I said, you know what? I'm going to teach you how Wall Street uses geometry. Here we are right here. Now, you have to humor me on something. Everything past this rectangle did not exist. Well, if I could get it to spread out. Everything past here has not happened yet, right? So watch this. We are here. None of this has happened. We are only up to this spot right here with the yellow, and I make a call. 3,000 we're going to 1402. The geometry tells us we're going up over 3,000. Let me show you the target. I put this here, and I put a target up there. None of these bars existed. Look what was done since that day. Went up. No, let me just pull this back a little bit. It went up, bounced off the geometry, went right to our 3,000 target. Bravo, like it was scripted. Think of the date when I gave you that target. I gave out that target in a live webinar on 1/6/23, January. It went right to the 3,000 target. You know what it did next? I put out a second target in the next webinar of 3150. Right, 3150. Bingo, bango, like it was scripted. This stuff will tell you where it's going to go if you know how to use it. Now, this call was made before your eyes, projected upon geometry. Target was put there before your eyes, and the next webinar, you saw it actually hit. And the webinar after that, you saw the next one hit. I don't have any special voodoo. I don't know anything that you don't know. My brain is not tweaked any different than yours. I read charts and just keep my thought process out of the reading of the charts, and it comes up with phenomenal information, which I love to share with you. What else was requested? Oh, yeah, there we go. Amazon. So what do I have to say about Amazon? What's there not to like when you look at a chart like this? It starts on the bottom left of your screen and basically works its way all the way to the top right. You gotta love that, right? Right off the bat, we know serious bull market, simple. Like ES, NASDAQ, and the DJI, the Dow, all big boats are floating higher towards their previous highs. They're all at their previous highs with double tops right now. Well, Amazon is a huge piece of the market, wouldn't you say? Huge piece of the stock market, right? Well, look at what Amazon is doing. Amazon at this moment is through the double top, is having a little bit of a pullback day, probably to come down here and check the support. It'll probably hit that support, hold, and hasta la vista is what you'd expect next. It looks fantastic. And I will say, if Amazon breaks to its double top, so is NASDAQ, so is the S&P, they're all going to go. So very interesting place we're at right now. Sort of a do or die spot, but, you know, not really for Amazon. It's already above the double top. So if you didn't see that, let me spread it out again. Top one to the left, then it comes back up and hits top two. Usually that will make a market start to drop. But instead it went, I don't think so, went right above. So now if you get a test back to the support, you can break out from there. And I think that'll help propel the market higher, the whole market itself. Traders, if you like what you're seeing, please join my chat room. No credit cards are required. None of them are needed. You're going to get an email. It'll go to spam, I promise you. Go to your spam, check the email. You'll join my site. I'll show you how to do that in a moment. Let's get through a few more charts. But if you like what you're seeing, make sure you hang out with me. I look at charts of this nature every day of my life. Let's see what else was requested. You guys had great requests, by the way. I'm loving this. After Amazon came Mr. NASDAQ. Now, if you look at this NASDAQ chart on the weekly, this is the weekly, not the daily, weekly chart. I don't care if you stood on your head backwards, looking in a mirror with your eyes closed, that still looks bullish, right? That is a bullish chart. It's been, and now this is a weekly, don't forget, weeklies are serious charts. It's been in this channel for a long time. What's it do every now and then? Does a sideways to lower consolidation, then explodes into a long-term channel, sideways to lower consolidation, explodes into its channel. Long-term, weeks and weeks from now, next 2 weeks, next 3 weeks, next 4 weeks, this looks fantastic. Anything can change, but longer-term view, whoever wanted me to show you the NASDAQ weekly, your longer-term view is absolutely unequivocally not bearish. Yes, you get pullbacks like you see inside these red channels, but that's okay. That's customary. That's par for the course. That's what happens when markets trade. Nothing goes straight up. But look at that. Huh? Beautiful channels. These markets look fantastic. I just got a message from my trading room that our profit objective number 2 in our NASDAQ trade on the upside was just hit. Bravo, Omni, for calling a nice day trade today. That's another story. Let's go back to a seminar webinar. To me, it's a seminar, even though it's a webinar. I'm doing this live, right? NASDAQ was the last one I chose. Let's see what else I want to show you. Now, the NASDAQ looked bullish, right? Well, I have to tell you something, kids. This is not even slightly pretty when you look at the transportation average. That NASDAQ was a weekly, longer term. Short term, top day right now, transportation average on a daily. This is not the same look. I mean, I just showed you a moment ago a NASDAQ chart that goes straight up, like inside a channel like this, right? It's going up, 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 up. Well, when we look at this chart, it's not going up. It's actually the opposite. It's going down, broke through what was a beautiful apex building here. If you look, you got a massive pennant flag right here, right? So massive pennant flag, getting tighter and tighter at the bottom, tighter and tighter at the top. It falls through the bottom, gets under the 200 ball moving average, starts messing with it, slightly above, creates a channel, falls out of the channel, retesting the average. This on its own merit looks terrible, just looks terrible. So is the transportation average trying to lead us lower? For this moment, it is certainly pointing lower, absolutely unequivocally. Can it turn around? Of course. What do we need it to do? We need it to get back into this channel. If you can get back into this pennant flag or channel, if you will, move this one out of the way. If you get back in here, all systems go. Likelihood is this will be called a false breakout, and the biggest move will come from the top, breaking out of the top of this. That's usually what happens in this case, but you've got to get back into the channel. Otherwise, of course, you break the 200 and down you go. So quagmire moment, hold the 200 back into the channel, beautiful thing. Break the 200, down you will go. And right now, I'm telling you, it does not look pretty. So that's your transportation average chart. Whoever requested that, I hope that helps. Let's see what else we have for you. The Dow Jones Industrial Average. Now, is that not the exact polar opposite of what I just showed you in the Dow Transportation Average? Polar opposite exact. This is exactly opposite. This is breaking out above new highs. Look, these are old highs. These are new highs. You're breaking out into new highs. You're above the double top, or at least testing the double top right now. That is completely different from the transportation average, right? So you've got some confluence and signals right here. I will tell you, there's textbooks about how the transportation average is the leader of indices. It just goes first. The other indices do what they want for a little while and then catch up. That's not in all ways. That's not every year. But that's a constant, and it's been constant as long as I've been in the business. The transportation average right now is pointing down. We need to get that back into the pennant, as I showed you, and away we go. Otherwise, eventually, it will drag the Dow down with it. It's just how that works. Now, none of these are day trades, right? I'm giving you abstract view so you know what to look for the next few days and weeks. Is there anything else that was left out there that was requested? I think that was probably the last requested chart from my Omniacs around the world. I hope that helps. I hope I answered some of your questions. Thank you for trusting me to do the analysis for you. Jeff, can I help you in any way before I cut out of here?
Yeah, we have time for just a couple questions if we go quick.
All right.
Nayan wants to know if you have a favorite grain like wheat, corn, soybeans, soybean oil. Do you have a favorite grain?
It won't be most people's grains, but my favorite grain is soy meal. I've always liked it. It really acts well with technical analysis. It is a great chart. I don't know what that comma's doing there. It is a great chart. It's a great market, and not many people trade it. But I've been trading soy meal since I'm a kid. I like soy meal. And if soy meal is moving, so are soybeans. So if you're more used to soybeans, you go with them. I like soy meal. And that's also moving higher because it's a summer market at this moment.
I like corn. It goes great with butter.
Corn's a good market. It doesn't move enough, but corn's a great market. It goes great with ethanol as well.
In fairness, I don't trade it. I just eat it.
I not one, but two on the top last night during dinner. Yummy. Fresh. Great.
Scott wants to know how do you arrive at your SMAs?
So I allow Wall Street to show them to me in a strange way. I go around and look at hundreds of charts and I look at the averages that they're using until I spot the one that looks like they're all collectively using, and I adopt it to be my own. In other words, I don't invent the average. I don't even try to find it. I look for what they're using and call it correct.
Cool. This one isn't a comment. It's more, or it isn't a question. It's more of a comment. It's from Gary W. And he's on YouTube, and he wants to say that Oscar is the best. Go back and watch all of his videos if you want to learn something.
Blushing, but I can absolutely help you when it comes to technical analysis. No doubt, I am really strong in that department. In fact, if you would like, traders, I am sitting right now in a live trading room. Literally, it's on live right now. Look, I'm waving to you on one of the cameras I'm not using because I'm using the other camera. And you would be in this room with me with all the other traders from around the world. And there I can communicate with you. I can speak on microphone and my camera. And guess what? You don't put a camera on, so you can be sitting there looking any way you please. It's only one way out, me broadcasting out. So you can sit there in your underwear if you want. Just don't tell me. And make sure that you join my live free trading room. Now, how do you get there? Go to livewithoscar.com. It is very simple, livewithoscar.com, and register. It's very simple. No credit cards are required. You will have to fill out username, password, and ask for your email, send code. The thing about that is it will go to spam. There's no way around it. It's going to spam. Go to your spam folder. Check that out. The next thing you know, you will be at livewithoscar.com in my free trading room. I also host once every few months. I host something called OmniCamp, where I bring in 3 to 6 traders into my home office and I teach them how to gauge the charts, how to do the Omni Oscars market navigational indicator, much more intricate than the abstract analysis we've seen this evening, or this day, I should say. But the Omni gives us day trades, where to buy and sell, where to get in, where to get out. And last month, this is not my figure, by the way. I have 2 entities that follow every one of my Omni trades. Last month, according to my 2 different entities, we made $26,000+ last month, one lot trading. If you took one lot of my trading recommendations, just one lot every day, you would have netted over $26,000 following the Omni. Now, that's not something I'm showing you here. That's called the Platinum service, the Platinum recommendations, and you can easily find me by going to livewithoscar.com, joining the Platinum service, join the site. But if you want to join me at OmniCamp, where I teach people how to come up with those day trades themselves, that happens at omnibootcamp.com. Simple. These sites are really simple. I make them that way on purpose. You literally just come in here, click, you'll fill out a form. It'll ask you, what time would you like to speak to me, blah, 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 and we'll have a telephone appointment just like that. So I'm easy to find. I'm always there, and I'm inviting you to come hang out with me, and it costs you $0 to sit in my trading room with me. So come join me, Omniacs from around the world, traders who don't know me. We can sit and converse, go over charts. I am very easy to find, and I promise I won't bite you if you come in my trading room.
Perfect. Great job, Oscar. Appreciate you, man. Also, thanks, Nyan, Scott, Gary. Thanks for all the good questions. Thanks for being here, everybody. Oscar, as always.
Thank you so much. Thank you. Thank you. Now, I have to finish with this. You know that, right? Traders, is something I like to tell my Omniacs. When you're in a trade and you got to stop in, and that market's coming to get you, it's getting there, you stop, and you're about to go in there and grab that keyboard and change the stop, and buy more. Don't do it. It's a cardinal sin. Leave the stop in, because that's why we put stops in. And instead, say this to yourselves over and over, because it's what helps a lot of people around the world. Here's the thing you say. You ready? 1, 2, 3. Stops are
in.
You tell them, Jeff.
So are emotions out then?
Emotions are out. That's Jeff,
I have that on a t-shirt. All right, very cool. Thank you, Oscar. Much appreciated. We'll see you again soon.
I enjoyed myself.
All right. Go ahead and do this. Just going to go make a few changes here. Yes. Okay. Oh, we go ahead and make me the presenter so you can kind of see something. We did sit down and we recorded a bit of a masterclass, and I thought it was great. In it, Oscar goes in and he talks about how to properly drop a chart, how to do trend lines, talks about technical formulations. All in all, about 3 hours of instruction. And if you enjoyed what you just got and what you just saw from him, you're going to love the training because he's very, very thorough. It was a really, really good session. So in addition to, as Gary suggests, watching all of his previous sessions, you can actually come and get this from us. You can. It's normally $4.99. If you get it as part of the conference, it's going to be $3.49. You can give us a call if you want at 800-882-3040. Of course, you can. We'd love to chat with you. You can chat with us at metastock.com/sales-chat. And you can also sign up for this at metastock.com/conf promo. I think I'm going to put all these links on a notepad so I can just copy and paste them. But great job. It was. I remember we did this over the course of a Saturday or two, and it was very good. He had a lot of questions. We did a lot of answers. $3.49 here at the summit. well worth it. Does a great job. In any case, let's kind of move on. Let's go ahead. Yeah, let's talk about Stocks and Commodities Magazine. I want to say thank you to all of our speakers, all of you for being here, all of the questions you've got. Thank you for everybody that's liked and subscribed on YouTube. Thank you to Stocks and Commodities. I remember about 13 years ago, I called up Stocks and Commodities and we talked to them and I was like, hey, we're going to set up this online event. It's going to be all day. We're going to just talk about technical analysis. It's going to be awesome. Do you want to sponsor it? And they've been sponsoring us since the very first one. I really appreciate the guys that I work with over there, Jason Hutchinson, Sean Moore. All of them do such a really good job. It's also a very well-respected, very great magazine. So if you're interested in finding out more about stocks and commodities, www.traders.com. That'll take you to their website. You can subscribe. Once you do that, you'll be one of their 1.3 million subscribers. You'll be able to see any article they've made since 1982. And that's over 17,000 articles. So if you want to do that, here's a link. And big thanks to Stocks and Commodities for kind of sponsoring this event from the get-go and kind of helping us with it. And big part, big part of really helping it work as well as it has. So from that perspective, let's go ahead and kind of just talk a little bit more about us. I just realized, Greg, are you around to help me?
I am.
All right. We're going to give away a prize right now. And I realized that I'm going to have to give away some prizes I've forgotten all day long. I've just been busy kind of getting ready for the rest of the week. And I have been asleep at the wheel when it comes to giving away prizes. So we are going to give away a prize.
Well, I'm rolling. I'm raring, I should say, ready to go. I did notice you pulled a comment off of GoToWebinar a while ago to do a prize, but how would you know their email address if you pull it off of GoToWebinar? Because they have to register.
That person is just going to have to get in touch with me. So hopefully she was still watching because I don't know. If they don't register, I don't know who they are. I did write down who it was, like their username, but that's all I got. So, but that's why we have you register for the most part, so we can know who you are, so we can get a hold of you.
Sounds good.
So the prize that we're going to give away right now, just in case you're curious, is Wendy's Kirkland. If you remember, Wendy came in Monday. She did a really good talk on her PPO and the Kirkland oscillator and kind of how she uses it to kind of do options trades. Very, very nice lady. She also does a newsletter, and I'm going to give away a complimentary subscription to this. It's going to be a 1-year subscription. The value of that is actually $468. And I have an official description that I'm going to read. You'll get a 1-year complimentary description to Wendy's flagship trading newsletter. This features a list of every stock flagged by Wendy Kirkland's weekly system that is being on the verge of a rally. It'll give you specific trade analysis, and it'll be posted online every week. So what I need from you, Greg, is to give me a number. And I'll give you exactly the number range that I need. I need anything between 1 and 7,981.
About 3,909.
3,909?
Yes, sir.
Okay. All right. The person that is the winner is actually from India. His name's Umesh. He has the last initial of R and a Gmail account. So if you're watching this from India, you should probably go to bed. It's really late in India right now. Like I think 2:30 a.m. But maybe you're watching the replay. If that sounds like you, congratulations, you just won. So if you're watching this on YouTube, in order to qualify to be in the drawing, what you want to do is there's a pinned comment at top. And if you click on that, you can register and that'll add you to this list. And then we might randomly pick you. Greg, big thanks for the assist. Also, okay. All right. Our next guest today is Steve Primo. Steve is another good friend of mine. I like Steve. I like the way that he presents. I like particularly the way that he talks and the way that he kind of explains things and the way that I understand him when he explains things. So Steve and I have been working for a number of years together. He's been a friend of MetaStock. Oh man, it's been a minute too for a while. And we're going to go ahead and get him running right now. Steve, how are you doing?
Hi, Jeff. Doing great. Can you hear me all right?
Yeah, you sound great.
Okay.
Let me go ahead and make you the presenter real quick.
Okay. Let's see. How's that?
I see it. I can hear you.
Okay.
I think we're good to go. I'm gonna get out of the way.
Okay. Thanks, everyone. Well, thank you, Jeff. And thank you, everyone, for attending today. This is a great conference. Here are a lot of great speakers. And today, I'm going to be speaking about the perfect trading strategy for volatile markets. Whenever you've been involved in these markets that either take off one way to the upside, to the downside, this is a great strategy that you can trade. And you're going to get the entry rules to this method today. Now, let me show you a quick example of how this works. Let's look at this older chart here. And as we can see in this stock PGR, we see that it's been going up, right? So it's looking pretty good. It's looking strong. But let's say your friend down the street or maybe some guy on TV says, you know, it's been in an uptrend, but it's gone up pretty well. Now's the time to sell it because perhaps it's overbought. You look at the indicators or more, maybe you go to that trading room and they say, yeah, you know what? I guess it is. So I think I'll sell. So you think it's going to be a great sell because you want to get in towards the top. Maybe you've been long or maybe you're more aggressive and you actually want to go short. Either way, you're betting for this to go lower. Well, here's what we're going to do today. With the entry rules that I'll be teaching you, you would not have sold this at all. In fact, based on this same bar, you would have been a buyer and you could have potentially captured the upward movement of 45 points. So you'll get the complete entry rules to this great strategy. And this is the topic of today's presentation, the perfect trading strategy for volatile markets. So welcome once again. My name is Primo. I am the president and founder of Specialist Trading. I've been trading now for 47 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years, I was a specialist. If you're not familiar with what a specialist is, they basically made markets in roughly about 50 or 60 stocks. If you ever Google those pictures of the guys on the trading floor, well, the specialists were those gentlemen behind those large wooden podiums making these weird hand signals. So in the old days, if you wanted to buy or sell a particular stock, you called the floor broker and the floor broker would walk up to the specialist who made a market in that, and he would purchase or sell you that particular issue. Now, I made markets in IBM, Waste Management, US Air. I made markets during the crash of '87 and the bull market that followed. I left the floor in the mid-90s to manage money and to also trade my own account. And just about 15 years ago, I teamed up with my sister site, Pro Trader Strategies, and we formulated Specialist Trading with one goal in mind, and that was simply to educate traders all of the things that I've accumulated in my nearly 5 decades of trading that have very high levels of consistency. And you'll see that attention to detail in today's educational presentation. Now, before we begin, we're always required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this method today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are, first and foremost, an educational company, all examples are strictly for educational purposes only. Now, another way to get more education from us on a daily basis is to follow us on Twitter. There's our handle right there at SPCLSTTRADG. You may want to copy that down. You can follow us either on Twitter or X, however you'd like to name it. Every day I post upwards of 5 or 6 different snapshots of strategies or signals that our strategies have generated. I also post little bits of financial wisdom. So there's lots of great free education on a daily basis. So please feel free to follow us on Twitter or X. Now, remember, as I stated in the opening statements, we are an educational company. So what does this mean? Well, it means that if you think I'm going to tell you what the market's going to do in the next week, is it going to go higher? Is it going to go lower? Or if I'm going to tell you today what the perfect stock is to buy or what you should not buy or what the perfect time frame is, well, that's not what we do at Specialist Trading. You see, we are an educational company, and our philosophy is that we should be providing you with this information so that you can make your own trading decisions. You see, it's been one thing I've learned in my nearly 5 decades of trading is that the traders that are still around trading, the ones that are consistent, that are still around, make their own trading decisions. They go to chat rooms or trading rooms. They don't watch guys on TV or wait for earnings or economic reports. They have a plan in place and they simply follow it. So this is what our service is. This is what we provide. And this is what my goal is, to teach you, not to trade for you, but to teach you how to trade with a specialist edge. This is the same edge that was taught to me by my mentors when I was first on the floor and what has sustained me now for 47 years. And hopefully we'll be able to do the same for you, okay? Now, I have a lot of slides to share with you. Please keep the questions till the end. I promise I'll get to each and every one of them, but if we stop, I'll for every slide and ask a question, we'll be here far too long. I'll step on the other presenter's time. I don't want to do that. So if you have a question, wait till the end of the presentation. I promise I'll get to them then, okay? Okay, with that stated, let's begin today's educational class. And I want to talk to you today about strategy 3A. This is our premier method for capturing those really strong volatile markets. Now let's talk about some of the highlights of this particular method. It's a continuation strategy. Now, if you're not familiar with that, a continuation method looks for a trend to be established. Sometimes it's been going up for a while, sometimes it's been going straight down for a while. So a continuation strategy looks for that. It confirms that it's in a strong trend, and then it deciphers whether it's going to keep going or not. And then we just simply jump on board. Now, the way we're able to do this is by applying a unique Bollinger Band setting. Now, usually this setting is proprietary. It's reserved for our students around the world. We have students trading this in over 115 countries who have purchased this method. But guess what? I'm going to give you the setting today, okay, for free. Now, it's designed to trade these quick, powerful trends. And you can apply it to virtually any market, any time frame, and any direction. I know a lot of strategies and things you've purchased in the past, they work great only on a particular set of requirements. It's either got to be a particular time frame or a particular market. Here's the beauty with all of our methods, including strategy 3A. Doesn't matter. You don't have to change something because you switched markets or time frames. The rules are the exact same. Now, with all of our strategies, regardless of what we teach, we always require, we don't ask, we require that our students first paper trade. The reason is because most of our methods are really simple. And because they're so simple, as you'll see today, students jump in too quickly. They jump in, head first, and inevitably they lose money because they didn't study the rules. They just got too excited saying, hey, I want to start trading this, okay? So you must paper trade first so that you really fully understand the process. Now, our edge here with all of our methods is consistency. Now, I know a lot of people think that consistency means that, oh, well, that means the strategy has a lot of winners. Actually, that's not the definition of consistency. Consistency actually is an awareness of losses. It means that you will have losses from time to time, but that's okay because a consistent method is one that's able to recoup those losses sooner than later, often on the very next setup. So what you want in a consistent method is a two-step forward, one-step back approach, almost like a stair step of your P&L. That will ensure that you are consistent and a consistent trader so that your P&L won't be just going straight up and then straight down the way so many methods have us, seen in the past, okay? Anyone can talk about this fly-by-night method that produces these tremendous home runs, and some will do that. But oftentimes, it's been my experience that those same methods will have tremendous losses as well, and they'll give back everything you just made. A consistent method doesn't do that. Consistency means a two-step forward, one-step back process, and all of our methods, including strategy 3A, are extremely consistent. Okay, so we're going to be talking about Bollinger Bands today, all right? Now, let's just give you a review. If you're not familiar with Bollinger Bands, if you haven't used them in the past, these are the standard Bollinger Band settings that you'll find on most platforms, okay? Bollinger Bands are made up of three lines or three bands, if you want to say. Now, but the middle band is actually just a moving average. It's a 20-period simple moving average. The upper and the lower band, called the upper band deviation and the lower band deviation, are the distance they are from that moving average in the middle. And usually they're set to +2 for the upper band and -2 for the lower band. Okay, this is just the standard setting. There's nothing you really have to learn here just to know that this is what it's based on. And on this generic chart, this is what the standard Bollinger Band would look like. Okay, there are three bands. The middle one is just a 20-period simple moving average. Here's the upper band set at a 2 deviation from the middle, and the lower band is set at -2, the same distance, this time to the downside, okay? Well, we're gonna alter things a little bit. These are the proprietary settings, and I believe this is being recorded, so don't worry if you're unable to write this down right away, but we're not gonna change anything with the middle band, which is the moving average. We're gonna leave that at a 20-period simple moving average. The only thing we're changing are the upper and lower band numbers, their deviation. We're going down to fractions. So we're going for the upper band from 2 down to 0.382. And the lower band is going from -2 down to -0.382. Okay, that's all we're doing. We're just changing the upper band and the lower band. Okay, very simple on MetaStock to just change that. I'm sure their tech support can help you put it together, but it's very simple. And let's show you what it looks like, what the difference is. Here are the standard Bollinger Band settings applied to a chart. Here's what they look like when we apply the proprietary setting. Okay, see the big difference? It's a lot smoother, and this is what's going to help us with our entry. All right. Okay, so let's look at the standard strategy 3A buy entry rules. All right, so let's go down step by step. Step 1, obviously you want to plot the proprietary Bollinger Band setting on your chart. Remember, it doesn't matter if you're looking at a 5-minute chart of the E-mini futures or a weekly chart of the British pound or a daily chart of Bitcoin. It makes no difference what you're looking at. Just plot the proprietary Bollinger Band setting. So as we look here at this older chart in Amgen, okay, don't have much idea what it's doing here. It looks like it went up, but now it may be a reversal. Who knows? Maybe it's overbought. But once we apply the Bollinger Bands, we get a better idea that most price is above. Okay, so what's that telling us? Well, this leads us now to step number 2. We want to look for 5 consecutive price bars that close either on or above the highest Bollinger Band. Okay, so we have 5 consecutive bars that are closing either on or above the highest Bollinger Band. So this is the highest Bollinger Band right here. Okay, we want to see 5 consecutive closes. Now, as you see, we had 1, 2, 3 consecutive closes, but this one closed just below. So the count has to start over again. So we look at the very next settings and we see that we now have a total of 5. 1, 2, 3, 4, 5 closes above. It doesn't matter if they touch or intersect the Bollinger Bands. All that matters is that they close above. So this leads us now, this is a valid setup. This leads us now to step 3. We're going to enter to buy when price trades. You notice I underline trades here. It doesn't have to close above, but when price trades 1 tick above bar number 5. So obviously, if let's say the high of bar number 5 is 50, when the price bar, the next bar trades at 50.01, that's your entry to buy. Okay. Now, if you're looking at futures, it's another tick of 25. Say the E-mini futures, it would be 25 cents or 25 points because they move in increments of 25. Okay. Everything's different. If it were the British pound, it would be a pip. So all we're just looking is a unit of measurement, an increment of measurement, depending on what market you're trading. So here we have bar number 5. So we're not going to buy simply because we have 5 consecutive bars closing above. It has to trade 1 tick above. This is going to be our entry point. So let's see how the trade unfolded. Well, the next bar, it didn't. So we're not buying anything yet. We're still holding on to the entry point as our unit of entering the trade. So we're just kind of waiting. And look what happened. On this bar, it did. Once again, it didn't close there. It closed below that 1 tick above entry, but that's okay. We are now long. And look what happened. The stock quickly went up 45 points, okay? I see this was all done without looking at any news. This was all done without looking at what the interest rates or economic indicators, the jobless claims were. This was all done without worrying about what the earnings reports were. Why? Because we teach that everything you need to know is in the chart right in front of you. Keep things simple. Now, I used to work on the floor. I was in charge of making markets of roughly 50 or 60 stocks. I needed to know when I first started all of the earnings estimate, or so I was taught that I was supposed to do that, right? And I can't tell you how many times I was following and tracking a stock that had tremendous earnings estimates, and they were exceeded immensely when the news came out about the earnings. And guess what? The stock went straight down. And I can tell you how many times that the earnings looked terrible, or there was terrible news on the market, economic indicators, or something fundamentally was terrible happening economically, and the stock went straight up. So there's not a lot of consistency there. We want things that are cut and dry. We want things that are black and white. When they trade above bar number 5, you enter. That's it. We don't care what the earnings are. We don't care what's going on with the market. If all the rules are met, That's how you become a consistent trader. So I was taught like everyone else, well, I've got to know what's going on in the world. I've got to know what's going on with interest rates. I've got to know what's going on economically. I've got to know what this guy is saying on TV. It wasn't until I dropped all these things and started to let go of them that I started to become a consistent trader. Now, it's up to you. We're not telling you that you can't trade that way, but we do not teach any of those things at Specialist Trading. In fact, those things, in my opinion alone, actually stand in the way of your success as a trader. I know they did. They stood in the way of mine. Now, let's go over really quickly the sell rules, because they're the exact same thing. We're just turning the coin upside down, okay? First thing, we want to plot the proprietary Bollinger Band setting on whatever chart we're looking at. Could be an intraday chart, could be a monthly chart. Makes absolutely no difference. Now, here's a chart of Adobe, an older chart of Adobe, okay? It's been going up, but let's apply the Bollinger Bands, and we see that we had some closings below, but now we've exceeded that. And now we have 3 consecutive closes above. Okay, so we need a couple of more for this to be a buy setup, but then look what happens. Some news happened. Okay, someone could say, well, Steve, I don't understand. Some news could have happened here. All right, how come you don't follow news? Obviously, it gapped down. Well, remember, we're not in the trade yet, so it doesn't affect us. Obviously, you know, we didn't have 5 consecutive buy setups here, so we're okay. Now, someone can look at this and say, wow, we gapped down on that news or whatever happened, and look, we're starting to bounce back up. So maybe this is a bottom. Maybe you go to that trading room and the guy says, hey, you should be buying this. It's going to come all the way up and fill this gap. Maybe. We don't know. We don't try to predict anything. We just listen to what the market's telling us. And the market is now telling us that we have 5 consecutive price bars closing either on or below the lowest Bollinger Band. Because if we look back, we see now that these 5 bars all consecutively closed below the lowest Bollinger Band. So that's setting up for a sell. And this brings us to step 3. We're going to enter the sell to go short, maybe buy some puts, whatever you'd like to do, when price trades, not closes, but just trades 1 tick below bar number 5. So here's bar number 5. So we're going to go short or buy the puts once price trades 1 tick below this. So let's follow the trade. Let's see what happened. Well, the very next bar, we would have gotten short. And remember where some guy in a trading room or some guy on TV was saying, hey, listen, this is going to bounce. We're way oversold. We got to fill this gap. Well, look what happened. You went short based on what the market was telling you, not based on any news or what some guy's saying on TV. And look what happened. The stock fell 45 points coming into last month. Okay, so now you understand the basic process of strategy 3A for buying and selling. Those are the entry rules. Let's look at some other examples, okay? Here's an example in PCAR. All right, can't really tell much by just looking at this, but we apply the Bollinger Band settings and we see, hey, we have consecutive closes, but we have to trade below this bar. We never did, and now we're inside the Bollinger Band setting, and now, as we follow it even more, now we're going above. So we switch from a seller's bias now to a buyer's bias. And what do we have? We have 5 consecutive closes above. So we're actually going to look to buy this if it trades 1 tick above right here. So if we track the trade, we see that, well, nothing happens in the next 3, 4, 5 days. A week later, we could have entered. All right. Now we enter there at this price and look what happened. 20 points to the upside. Okay. See how simple that is. It's so cut and dry. There's nothing you have to overcomplicate your trading about. Remember, my mentors taught me this. They said, Steve, it is the easiest thing in the world to overcomplicate your trading, but it's the most difficult thing in the world to simplify your trade. And strategy 3A is a very simple method. I've given you the entry rules right here. It's very basic. It's very cut and dry, very black and white, and anyone can follow it. You just have to study and understand the process before you jump in. All right, let's look at this chart here. This is in CVS. Can't really get much of an idea of what's happening. It looks like it gapped down based on maybe some bad news, but it's starting to just firm up. And maybe that guy in that trading room says there's major support here. Or maybe that $10,000 course you took said that this is where the institutional banks are buying. So you've got to be a buyer too, right? Remember, we don't listen to outside sources. We only follow the method. And what's the method telling us? Well, once we apply the Bollinger Band setting, we see that we have consecutive closes below the lowest Bollinger Band. So this is setting up for a sell. We don't care if the institutions are buying. I don't care. I used to trade with these institutions on the floor, and in my opinion, they had the worst track record of any other trader I traded with. So I would never rely on what the institutions are doing. I'm just listening to what the market's telling me. And the market's telling me that it may want to go lower, provided we trade one tick below this bar number 5. So let's track the trade. Let's see what happens. Well, it traded right there in the very next bar, so we're short. Now, remember, we're not talking about stops or where to exit because that's included in the course. I can't give away all the rules. It wouldn't be fair to our students around the world who purchase this. But you have the basic entry rules. Now, the stop placement is very basic, and so is the exits. We have different stops for different risk takers. We also have different exits as well. It's up to you to choose because remember, our job as a mentor is to provide you with this information. It's your job just to take whatever feels most comfortable and trade with it. Well, look what happened. The stock fell 20 points, and guess what? It bounced lower again, or I should say dropped lower again, coming into this last month on some probably negative news. But isn't it funny how we knew to sell weeks in advance? Because the market told us it wanted to go lower. As we look at FANG, we see that it's gone straight up. Now I can see how traders would say, hey, this is hard to want to buy this because look at this. We have a candlestick pattern here. This could be a doji top, which is signaling a reversal. Well, sure, maybe could be, but it's also above the Bollinger Bands, and we have 5 consecutive closes. So if you want to trade strategy 3A, you have to buy if it trades one tick above, and it did 2 bars later. And guess what? 27 points higher coming into April. Now, what happened to the doji reversal pattern? Okay. Here's another example of a sell. This one was in BIB, Biogen. Okay. You see how this bar intersected the Bollinger Bands? That's okay. As long as it closes below, it doesn't matter if they're touching. So we have 1, 2, 3, 4, 5 closes below. Here's our point of entry to go short, maybe buy some puts or some spread strategy with a downward bias. 2 bars later, we got short. We entered 25 points coming into last month, roughly just about a month ago. Okay, we have 5 consecutive closes above the highest Bollinger Band. Remember, they are intersecting the Bollinger Bands, but that's okay. As long as they close above, that's all that matters. And each one of these bars, even though they're touching, closed above. We have bar number 5 here. We would have entered on the very next day. This was just coming into just about 3 weeks ago. You could have made 17 points in just 2 days. This is how simple this is. It really is an easy strategy to trade, provided you follow the process. 5 consecutive closes below the lowest Bollinger Band. Here's bar number 5 in ZS. Okay. The very second bar, 2 days later, we would have gone short. And someone would say, but Steve, I got stopped out only because I got scared. So I got short, but it closed higher. So I figured it wasn't a good signal. This is why we always say, follow the process first. There's nothing that says it isn't a good signal yet. This is not a stop placement just because it closes against your entry. All right. We have different stop placements. Sure, if you would have gotten stopped out, then it's a valid exit. But there's nothing here that tells me to exit the trade. So this is why we say follow the process first, because look what happened. The stock went 30 points lower coming into just about a month ago. Okay, a lot of traders that are students of this will say, but Steve, what happens when the trend changes? Like, can't you get whipsawed? Well, remember, consistency is an awareness that you will have losses from time to time. That's okay. But if we look at this 4-hour chart of the yen, we see here that initially the trend was down tremendously, and then it went straight up. Well, a lot of students would say, well, gosh, I most likely would have lost a lot of money, right? Because it just changed on me. Well, not necessarily, because if we apply the method, here are the Bollinger Bands, prices below here, prices above. So all you have to do is go through the method, 1, 2, 3, 4, 5 closes below. There's your entry point. And you had 400 pips to work with that you could have potentially taken charge of in your favor, being short. Now, when price did change and started to go back up, okay, here it's going back up. Now we have consecutive bars above. So either you could have used that as your exit point, or if you took a profit somewhere here, maybe a couple of 100 pips or maybe 300 pips, and you said, hey, listen, now it's time to go long. Well, look, 1, 2, 3, 4, 5 closes. There's your entry. And you potentially made 400 pips down to the upside. This is the beauty of this method. It really helps you with these volatile markets. Okay, let's look at Meta here. Let's go through the process once again, just to explain everything easily. You'll look at a chart like this. This is an older chart of Meta, and you'll say, okay, it looks like it's going up, but I really don't have any idea. You know, that guy in that trading room didn't tell me anything, so I don't know what to do. Okay, that's the reason why we formulated specialist trading, because this is the way most traders trade. They rely on someone or something else to tell them how to trade. I mean, think of it. What if you were in a plane and you were going cross country, and over the loudspeaker before you take off, the pilot comes on board and says, hey, does anyone have a good idea how I should fly this? Tell me, give me your ideas, because I'd like to hear how you think I should do it. Or if you were, going to have some surgery, and before the surgery, you heard the doctor say, hey, to one of his nurses, does anyone know how I should operate today? Tell me what you think the best way is to operate. But for some reason, I mean, you think that's ridiculous, right? But for some reason, it's perfectly admissible for traders. This is your hard-earned money, which you've set away for trading. And most traders ask someone what they should do or how they should trade. And it doesn't mean you have to literally ask someone, but every time you wait for some economic report to tell you how to trade, or go to some chat room for some guy to tell you what to do, you're really giving your power away. That's what our job is as a mentor, as an educator, to provide you with this information so that you can take charge of your trading for the very first time. For example, looking at this, you would say, okay, well, now I've applied the Bollinger Band setting, and we were initially above. We didn't have enough bars closing above. We were below the highest Bollinger Band, but now we have 1, 2, 3, 4, 5 consecutive closes above. So this is setting up for a buy setup, okay, coming into the first of the years. But I can't go long. This is where traders mess up. They'll say, so I buy on bar number 5, right? No, you buy once it closes, or I should say trades 1 tick above. So we wait to see, and on the very next bar, it did trade there. So not based on any news, not based on anything economically happening within the world, not based on anything some guy said in a webinar or on TV, but based on your own decision to follow the method. You could have entered right here. You could have taken charge of your own trading and potentially captured 112 points in the next 2 or 3 months. This is how simple trading can be when you get out of your own way, when you simplify your trading, as opposed to overcomplicating it. Okay, let's recap what we shared with you today. Strategy 3A is a continuation strategy. As you saw, we look for a trend to be established by using that bar count, and then if all the rules are met, we jump on board. We do this by applying a unique Bollinger Band setting that I gave to you today. Now, it's designed to trade these quick, powerful trends virtually in any market, any time frame, in any direction. But please, now that you know the entry rules, now that you know the setting for the proprietary Bollinger Band, do not just jump in and start trading first thing tomorrow. Please, we require all of our students to first paper trade, because most likely you will do it wrong. You'll say, well, Steve said 5 bars, and I'll just buy after the close of the 5th bar. No, you have to wait for it to trade 1 tick above. Or more, maybe someone will say, well, Steve said, what was it, 3 bars I have to close below? I'll just sell short on the 3rd bar. No, it's 5 bars. So study this video, learn it in like the back of your hand before you jump in and first paper trade. Our edge with strategy number 3A is consistency, meaning that there will be small losses from time to time. That's perfectly okay. But a consistent method is one that's able to recoup those losses. That's what you want in a method. You don't want a method that hits a home run and then gives it all back on the very next trade. You want a 2-step forward, 1-step back approach. That's the real definition of consistency. So as we close here, ask yourself, do you think this strategy can help your trading for the remainder of 2024? I think if you answer honestly, it'll be yes. So what if I could give you some more techniques, some more tips, some more, even more strategy that could help you trade along the way? Well, I'm going to offer you, actually, because we have a great special offer for all of you attending today. This is our Secrets of a Stock Exchange Specialist video seminar. Now, some years ago, I was asked to be the head speaker at a conference in Colorado, and I spoke for 3 hours about a lot more different methods, a lot more different techniques, totally different from Strategy 3A, a lot different things, tips, techniques, things that I've accumulated in nearly 5 decades, and they recorded the presentation for us and gave me the video. So we are giving you this full 3 hours of trading techniques. This is plus we're going to also tell you more about more high probability trading edges. We'll talk about which indicators you should not be using. I go into the difference between a system versus a strategy. I talk about the #1 chart pattern you should be looking on all of your charts, no matter what you're trading. And here's the most important thing about being on the right side of the markets. But next to that are the complete rules to strategy #1. This is an entirely different method than I just taught you right now. In fact, the rules are based on entirely different parameters because this is a pullback method. A pullback method is different from a continuation method, whereas we were looking with strategy 3A to jump on board a trend that's already taken off. Well, with a pullback method, we're looking to buy at those lower levels before it takes off. And if it's going downward, we're looking to sell on those little bounces. Let me show you a couple of examples of strategy #1, okay? Now, obviously, this stock is going up. It's ARHS, okay? It's going up. But what a pullback method likes to do is we like to buy at these lower levels where prices sell off or pull back. These are the more opportune places to buy if you're trading a pullback method. So let's show you the actual strategy #1 buy signals on this stock. They're right here, right at the lows. And look what happened every time, days after that buy signal, the market went up and made new highs. Another signal again, made new highs. What happened on this last signal? So this is the beauty of trading strategy #1. Now, strategy #1 can work to the downside as well, okay? Obviously, we're going lower, but with each lower trend, we have these days where we bounce up, we bounce up, we bounce up. This is how sensitive strategy #1 is because we bounced up on this day and it generated a sell signal. And someone could say, but yeah, but you know, it's not really going down that much. And we have a bullish engulfing pattern here. It looks like maybe a reversal, a doji here. Are you sure you want to sell here? Why didn't we sell way up here? Well, look what happened. The stock fell 25 points in the next 4 days. So guess what? You're going to get the complete rules to strategy #1, a pullback method, our premier pullback method. Now, I only gave you the entry rules to strategy 3A, but with this course, you're actually going to get all the entry rules. You'll also get all of the stop placement. You'll get the money management rules. You also get all the exits. So this is also included with that 3-hour course that gives you a lot more tips and techniques, okay? So let's break it down. The entire session plus strategy #1 course on Pro Trader Strategies website, my sister site where they handle all the classes and the courses, they sell this for close to $1,000. There's that much information jam-packed in this. But here's what we're going to do today for the online traders conference. We're going to slash that price tremendously and discount it down to only $37. That is a tremendous discount, going from nearly $1,000 down to $37. But this is for a limited time only. I believe it's only going to last for a day. So if you really want to take advantage of this, this is something you have to jump on really quickly, or else the price goes back up to close to $1,000. Think of it. You're getting close to 5 decades worth of information, tips, and techniques that I've accumulated for probably less than the price of lunch for 2 on any given day. And you're going to get, and it's yours to keep. It's not something that is something that it has a time limit to. It's yours to keep, and you get the complete rules to one of our premier pullback methods, strategy #1. But guess what? We're not going to stop there. We're also going to throw in an extra bonus. Here's what it is. Along with your purchase of the Secrets course for only $37, we will include a 50% discount on any other product we sell. So if you become a student of mine with the Secrets course for $37, you're still going to get a 50% discount on any other product, any other thing you decide. We have upwards of 10 different strategies. We have so many more tips, techniques. We have indicators for trend following. We have great tools to help you become a consistent trader. This is a tremendous offer, and you owe it to yourself to take your trading to the next level. If you're having difficulty trading, if you're not seeing the type of results you were promised, if you're just stuck or struggling, I know exactly what that's like. Trust me, I struggled my first year or two. Even though I was on the trading floor, I couldn't make a dime my first year or two. It wasn't until my mentors taught me the things that I teach my students, like Strategy 3A, that I started to become a consistent trader. And it helped me sustain me now for going on close to 5 decades. So hopefully I'll be able to do the same for you. So take charge of your trading, take it to the next level. You owe it to yourself to take advantage of this great offer for only $37. Remember, that's $37. but it's for a limited time. Here's how to take advantage of it. Contact my sister site, Pro Trader Strategies. They're in charge of all the discounts and all the tech support. You can email them at trading@protraderstrategies.com. Probably the best thing to do would be to give them a call at area code 310-598-6677. There's absolutely no obligation at all. They will give you a quote. They can tell you more about different methods and strategies we have. Or they can set you up over the phone with that $37 offer. And in a matter of minutes, you will have a link to that video, and you can be watching it in the next half hour if you'd like. Now, this link you see on the bottom is the link that will take you to the info page, also the sign up page if you'd like to sign up online. It's not a live link, though. I think the conference is posting probably this link maybe in the chat box or the question and answer box. So you could either copy that down, or I think Jeff may be posting that. But here's the information that you can get that great offer. Remember, it's for a limited time only, so don't sleep on it. Take advantage of it. I'm going to leave this slide up here so you can copy down all the information, copy down the number. And if you have questions now, I'd be happy to. Now, I promised I would get them to the very end. So I don't know, Jeff, if you want to read them out or if you want me to take them, makes no difference to me.
Yeah, I did post a link in the thing for you.
Oh,
Nelson does want to know if you have any questions for Steve, please type them in the chat. But Nelson wants to know, does your Bollinger Band work on the 1 minute time frame for ES?
Oh, sure. Sure. It works on, once again, any market, any time frame. But just remember, be advised. I'm an intraday trader myself. I usually focus mainly on trading intraday because of my schedule and giving classes and teaching and mentoring. I don't have a lot of time. So the few minutes a day that I am free, I intraday trade. And I will use strategy 3A at times when I have these really strong, crazy, trendy markets. As you'll see, and you see most of them a lot in the intraday trading as well. But please remember, with any method, it could be one of your methods, something from another educator. The smaller time frame you go, it will open you up to more whipsaws because that's just the nature of going to smaller time frames. So just know that. It's still very consistent, but as we all know that when summer months come along, markets tend to dry up, and this is a perfect method for volatile markets. So once you see those big runs, and if you've been trading intraday for any time, you'll know that all of a sudden you see the bars start to trend in a strong up or down movement. This is a great way. Just apply the Bollinger Bands and you can start to see these setups right away. It's really a good method.
That's a question.
Sorry about that.
No problem at all. Let's see. So I think what we can do now is I'll actually talk a little bit about your add-on that we have.
Sure.
If that's okay. But let's see.
That's fine. That's another. In fact, that's included probably in that extra bonus. But go ahead. I assume you're talking about strategy 4.
Yeah.
Yeah.
Is that part of this offer?
Yeah. Well, no, it's not exactly part, but I mean, there's a bonus. I think their Pro Trader Strategies is including some type of discounting.
Okay, I gotcha. Okay. All right. Well, thank you, Steve. Let me go ahead and grab the control here. And I'll go ahead and make myself the presenter and go ahead and do this too. All right. And we do have a add-on that we've been marketing as part of MetaStock for a number of years. And because we're having Steve here at the demo and at the show, we wanted to do a special offer on that as well. Strategy number 4. It does include kind of the expert advisor, the commentary, the layouts, 12 training videos as well. So as part of the training series, there's 12 different trading modules that are available as part of it. You get the all of the training that's actually listed right here, all included. And it's normally $5.99. If you want to do it as part of the conference, special, you can get it. It's listed with all of the conference offers. Very, very cool add-on. A little bit different than what Steve talked about today, but it is something that we do back with the money back guarantee. You can try it, and I would recommend it. So $5.99 is the normal retail price for it. At the conference, like I said, it's going to be $4.99. That's a one-time cost. If you want to, you can get that, and you can get a trial with MetaStock with it, our award-winning software. 800-882-3040 or metastock.com/sales chart. So there you go. Brett wants me to post the secrets offer link again. Let me just, it should be right there. Let me grab it. And there you go, Brett. All right. Thank you very much, Steve.
You are welcome. Thank you. And thanks to everyone for attending today.
All right, here we go. Let's see. Go ahead and do this. Go ahead and do this. Okay. Big thanks. We have just a few extra minutes so we can give away another prize. That'll be fun. I'll take the opportunity to say thanks for all the speakers. Steve Primo did a great job. Oscar, we just had such a great collection of speakers, and my thanks for all of them that have come out and kind of talked a little bit to us today. Do want to say thanks to Stocks and Commodities magazine, great magazine, publishing magazine since 1982. www.traders.com. You can get some information about them. We appreciate them. Want to say thank you to CMT Association. Another great partner of ours, very great reputation, well respected. Tyler's going to come tomorrow and he's going to talk about how if you have assets under management and you want more, or how if you're looking to have a job as a money manager, or if you just want more responsibilities as a money manager, how CMT designation can help you. And CMT Association is a nonprofit. They do a lot of accreditation. You go to cmtassociation.org, or you can call them at 646-652-3300. So there you go. Let's see, Pro Trader. Oh, I see why Brett wanted me to repost that. My apologies. It was misspelled. I told you I can't type and talk at the same time. There we go. There's the offer for Steve. Thanks, Brett. Thank you, MB, for pointing that out. I appreciate you. All right. And then also a final thank you to Stocks, or to TechnoTrader. Martha Stokes has come in and she's given a couple of talks. TechnoTrader is a great organization, a sponsor of the event. We appreciate that. You can find out for the mini courses and all that kind of good stuff right here. So technotrader.com, technotrader.courses -- just click on the link. It'll be a good way to go ahead and get started. We are, of course, MetaStock. We've been talking a little bit about MetaStock all day long. We're going to give away another prize. Gregory, are you available to kind of help me out a little bit? Oh, all right, very cool. I need you to, let's do another number. So this prize that we're going to give away is the Macmillan newsletter bundle.
That sounds great.
Yeah, it's a 1 month of Larry's top newsletters, the Option Strategist, the Daily Strategist, and the Daily Volume Alerts. Larry came in and he talked yesterday about one of the most influential books on options trading. A lot of people consider it the de facto book you should read on options trading. He does a newsletter. The value of this prize is $7.28. What I need from you is just a number. If you give me a number anywhere between 1 and 7,981.
432.
432.
Yes, sir.
Okay. All right, and that is. I'm going to fully dox this person. His last name is Trader, and his first name is Amon. So sorry, Amon. What a cool last name that you've got, though. No. You did win. I don't have a country for you, but what I'm going to do, all of the prizes will be sent out next week. So if your last name is Trader and your first name's Amon, there's a good chance they'll reach out to you tomorrow or sometime next week to help you get that prize. So I'll go ahead and send your information over to Larry Macmillan and his company next week. He'll get that sent over to you. So there you go. Thank you very much for the assist, Greg. All right. He says you're welcome. All right. If you haven't had...
I apologize. You're welcome. I assumed it was implied. I assumed my silence implied you're welcome. I didn't want to bug you too much.
Oh, no, you're cool. All right. Just another spiel for MetaStock. We are MetaStock. It's been rated #1 in its price category for 31 years in a row. I love the ability to scan. I use it a couple times a day, every day, including today. You can test market ideas. You can use it to use the forecaster to kind of find probable price movements. You could get the real-time alerts, the signals. Pricing on it starts at $69 per month. If you've been using MetaStock for a while and you haven't upgraded yet, you should. Over the weekend, I went to Philadelphia and I went to Pennsylvania, and we spent a couple hours just showing everything that's been added into MetaStock 19, and it's huge. Everything from even just like kind of the look and feel is brand new. You have a dark mode. You've got kind of a new ability to look at layouts. The amount of changes that they added has been immense. In addition to that, we added a very, very cool new Ichimoku system that's free of charge. We added an ETS trading system that's included. We added it's been a massive update. And even a gap identification system we put together as part of this. So if you've been using MetaStock for a while and you want to get the upgrade, get in touch with us. Happy to talk to you about how to get it. If you're new to MetaStock and you want to try the software that's been rated #1 in its price category for 31 years in a row. The offer that we're going to do, we have 2 versions of MetaStock. We have an end-of-day version, which we call MetaStock DC. It's the one on the bottom right here. We have a real-time version. The real-time version is called MetaStock RT. It's the one on the top right there. Pricing for MetaStock DC starts at $69 if you're here in the US, $59 if you're overseas. If you're interested in real-time, MetaStock Real-Time actually includes MetaStock, everything we've been showing in MetaStock, plus a premier news service that, just to give you some numbers, 3,000 reporters in about 300 different news bureaus provide news to the information. The initial investment to get the product created was $1 billion, has 30,000 research reports, some of the best fundamental and macroeconomic stuff that you can get. The software that's actually included, we call it MetaStock Zenith, but it was developed to be a competitor to Bloomberg. If you're not familiar with Bloomberg, Bloomberg's like $1,800 a month or something. Like it's a lot. And we can get that with MetaStock as part of a promotion for just $265 per month. Now, the end of day is $69, the real time is $265. What we're doing here is if you do a month, we'll give you a second and a third month for free. So if you pay for the first month, we'll give you the second and third month for free. What we'll also do is we'll set you up with one of our support people. We'll give you what we call a white glove installation appointment. And no, that's not because they wear white gloves, but we might pick some up. Somebody asked that on YouTube earlier. They're going to kind of sit down with you. They're going to make sure you're comfortable with the program, make sure you can understand how to use it. If you ever have any questions, you can call them, you can chat with them, you can send them an email. They're very responsive. It's not uncommon for them to get a 100% on their reviews every month from customers. So they do a really, really good job. That's all included. We're going to include a training video that actually kind of helps you get up and running. And yeah, the cost for that, if you go with the DC version, $69 for 3 months, that'll get you run until August 21st. It's like $23 a month. At the end of that time, if it's helpful for you, you can keep it. We hope it'll be helpful for you. It's something I use every day. It's something we've had customers that have been using for decades. It's won 31 years in a row. It's the best software in its price category. Metastock.com/conf promo to sign up. Metastock.com/sales chat if you have questions or want some more information. 800-882-3040 if you want to talk to somebody on the phone. So $23 a month if you don't like it, or $69 for 3 months, basically. If you don't like it, if it's not helpful, you can just cancel it. You're not out anything. But there is a reason it's been rated #1 in its price category for 31 years in a row. Give it a go. All right. John, are you okay if we start you just a little bit early?
I sure am.
Okay, good. Because I think I just drew that out as long as I could.
I was sitting here in the flanks. I'm like, you know what? You can throw it over to me at any time. I always talk too much anyway.
All right, very cool. Yeah, we're running just a little bit ahead of schedule, which is a little bit interesting. But let me kind of give you a little bit of an introduction to John. I've known John for a while. We were working on formulas when we were back in the Gateway office, which would have been 15, 20 years ago, at least. I remember, like, one memory that stands out for me for John is the name of their company is Acorn Wealth Corp. And I remember that we had a conversation about why John called his company the Acorn Wealth Corporation. And this was a long time ago. But I remember kind of the gist of the conversation is he likes to start people as acorn and let them grow into oaks. And he likes to show them how to trade and train them how to trade. And I remember that very vividly because I was like, wow, that's really cool. So there's my introduction to John. I've learned a lot from John, including like, why do I draw a blank whenever I try to get specific? John, in any case, let me go ahead and make you the presenter, John. Thanks for coming in today.
Oh, my excuse me, my pleasure.
Are you in an RV yet?
I am. Can you see from the background?
I don't see you. I know your camera's on, but the way mine kind of got a little funny, and I can't see the cameras right now. So.
Okay. Yes. No. We are. We actually rented our home out for a year, and we actually moved into the RV for try and live in it for a full year. So about 2 months in so far.
Oh, nice. Okay. Everything going okay?
Oh, it's been incredible. I've been studying I've been diving deep into technology. I've been and studying the AI and the VR world and things like that. And so the RV is pretty big. We've got a bedroom and shower and bathroom and 2 TVs and stuff. So it's decent size, but it's not the same as having my big office. So I went and bought these MetaQuest 3 goggles and put those on. And now I'm wearing them, not today, but when I'm wearing them, I actually have 6 screens, about 52 inches each, all projected in artificial reality. Augmented reality around the room, and watch the hockey game up in the corner, and got 6 monitors. It's amazing what technology is capable of doing. So it doesn't feel enclosed at all.
Can I break in? This is Greg out of Texas. I got a quick remark for John. I lived in my trailer for a year, worked out of there for 1.5 years. If you have any advice, I'm here for you. Also, if you're interested in a used Starlink transmitter receiver, message me.
It's so funny you say that, because last week when when the Aurora Borealis came out, we took the Starlink satellite down to the beach, and we set up a $250 Walmart projector screen, 120-inch Walmart projector screen, put the Starlink in the sand, and we watched the Canucks get beaten by the Oilers. And then as the game came to a finish, the sky lit up purple, green, and blue. It was spectacular. And then in the morning, I went to get the Starlink and came back up to the RV. And as I was pulling it through the door, I closed the door on the pin of the Starlink cable that connects to the modem. And I'm like, oh, there goes my internet. So no internet. Had to come into town, rent a hotel room for 3 nights, and order the new cable. Starlink cables cost me $300 US to replace the network cable, because they own the proprietary pin.
Oh, wow. Greg, can you confirm that you can see John's screen? I think my GoToWebinar has gotten a little glitchy.
I can see his screen. It says Acorn Wealth Corp, #1 most powerful pattern, and I can see John, and I can see you.
Okay, perfect. I still see Steve Primo's screen, so mine's just glitching a little bit, so no problem. John, we'll let you get underway. I'm going to jump out and restart my part of the room, at least, so I can see your screen, but I'll be here if you need me.
Right on. Thanks, Jeff, and thanks for the introduction. And it's super exciting being back here again in the MetaStock event. And as Jeff said, MetaStock's been growing and growing, and we're just rolling out today and tomorrow this new system I'm going to be talking about today into MetaStock. So it's kind of really cool timing. But yeah, I mean, welcome everybody. It's a pleasure to see you all, and virtually. But just before we get started, this is of course for educational purposes only, not a recommendation to buy or sell any securities discussed. Acorn Wealth is not a registered financial advisor in any jurisdiction or province, so always be aware of the risks before trading. And of course, past returns discussed do not guarantee future results. However, that we will discuss perhaps, well, actually, which we will discuss today, are being held by myself, Acorn Wealth, or the employees and contractors of Acorn Wealth, or there may be positions we're looking to get into. Okay, so yeah, I mean, like as Jeff said, I mean, we're not new on the block. Like MetaStock, we've been around almost 20 years. So this is something that I've lived and breathed my entire life. I got into the equity markets when I was started looking at equity markets when I was 15. So my first job for 6 months was working at a video store, which is my other passion: videos, movies. Flying. I'm also a pilot, actually going through my pilot's license at the moment, so I'm not technically one yet. And the stock market, those have been my three passions in life. So when I left the video store at whatever it was, 16 years old, I then got my first job in the equities market, working as someone working in the kind of one of the very first kind of algorithmic trading softwares back there in 2000. So what are we, 24, maybe even longer than that, years ago. And helped with like designing algorithms and working with SQL and databases and things like that. And then never looked back. I've been in the market all my life. And specifically, what area of the market I've spent the last 20 plus years studying is patterns. This idea that every single stock and the way that things move in the market isn't chaotic. It's not random. It's not guesswork. It's very much patterns, organized chaos, if you will. And this fascinated me. And I found that a lot of things that I looked at had individual patterns. So I went as far as looking at the individual fingerprint of every single stock and doing millions of calculations on every single stock over 2 years, 5 years, 10 years, 15-year periods, bull markets, bear markets, and back testing each individual stock against millions of calculations on all kinds of markets, bullish, bearish, and so forth, to find out which one worked best for each stock. And then this is where I started 20 plus years ago. And so I've always had a passion for this. And this is what kind of had me hooked. It had me at hello, to quote Jerry Maguire, movie reference. But when you go beyond that, and that's because patterns was really all I focused on at the beginning. And I did that probably for a good 10 plus years before I got into even looking at relative into fundamentals or earnings or bonds or quarterly reports. Before I even knew what half of that meant, I was well into my trading career focusing only on patterns. But then I would find a lot of stocks that technically would do well, as a pattern. They'd go up 10, 20%. Great, some good money. And then that would be it. It would kind of fizzle out. And then there was other ones that I would watch that I'd found with the exact same pattern, with the exact same technical appeal, that would do much, much better. That would go up 20% and then go up another 100, sometimes 500, or 10 baggers even, when they just keep tearing and tearing and tearing and tearing. And I thought, okay, well, I'm leaving money on the table here. What's the difference between these patterns that only do 10 or 20%, or even some that fail, and the ones that just do extremely well? And this is where the evolvement of and the marriage between technicals and fundamentals was born, but not fundamentals from a perspective of looking at what the Fed's doing or things like that. I don't really have much of an interest in reading the news because I'm not a fundamentalist at all. But I do believe fundamentals are important. And so the way that we incorporate fundamentals is by looking at what the smart money's doing. What are the insiders doing, the hedge funds, the institutions? Where are they putting their money in? And in that order, insiders being the most important, because there is no one that knows more about a stock than the insiders. No one, not Warren Buffett, not George Soros, not the Fed chairman. No one knows more about a stock than the CEO and the CFO and the directors. So I'm not going to second guess what they think about their own company. And so I feel that the best way to get fundamental analysis is by looking at what the only people that do know the fundamentals are doing with their own money. And what people do, to me, is far more important than what people say. If you agree with that, put a 1 in the chat box. Show me, don't tell me, right? And that's important in everything we do. So that's kind of the marriage of the two. And so what we're looking for ultimately as a system, not an indicator, not one scan, but as an entire system, is looking for where all of the things that we can control, all of the things that are within our control, which are at the very, very best, that we have the highest probability before we decide to risk a single dollar in the market. And you see the screen here, I've got this image of aces, because I use the analogy here of, imagine if you were in a card game in Vegas. Jeff and I have played many of those, the annual conventions that we've seen each other at for the last 15 years. When you go to Vegas, the house always wins, doesn't it? The house always wins. There's a reason they say that, because they do. Why? Because they have the odds in their favor. That, you know, when you spin that roulette wheel, the devil's wheel, if you know the meaning behind that, it's a cool story. When you spin that roulette wheel, they know that they're going to win at least 52 times out of 100 or whatever those odds are. And that slim difference in probability, repeated over thousands and millions and hundreds of billions of times, is why they built the palace on the sand kind of thing. So the thing about a card game or anything like that is that you have to pay money and then you find out whether you have a winning hand or not. In the stock market, we get to look at our hand first before we risk money. In the stock market, we get to look at the pattern. We get to look to see if this company's got the insiders loading up in the background or whether they're selling and jumping ship. I mean, if the CEO just sold 100% of his shares and the directors, I'm not going to buy them off them. I think that would be crazy. There are things like that add probability, right? Simple question. Would you prefer to buy a stock with the insiders putting $5 million of their own personal cash into the stock all at the same time? Or would you prefer to go long a stock where the insiders were all selling? Right? Put a 1 in the chat box if you go with the buyers. Put a 2 in the chat box if you don't care if all the insiders are selling. I'd be surprised if we see any 2s in the chat box. There's nothing that would sway me from that. Nothing. Because it's just an unnecessary risk. It's an unnecessary question mark. And does the insiders all loading up guarantee the stock's going to go up? No. Nothing is guaranteed in life. Certainly not in trading. But is that an extra tick in the box that could certainly suggest that maybe they are buying because something really good is about to happen? Maybe they are very confident in their stock. I do believe that, yes. And these are things that I can control before I risk a single cent. And so I put the question out to everyone in the audience: if there are things that we know or that we firmly believe are going to give us a higher probability of success, why don't we wait for them? Why would we compromise the quality of any trade or especially investment? Why would we cut ourselves short? And I think the reason for that is because either A, we don't know any better. A lot of people just don't know. B, we are impatient. A lot of traders, especially, we're adrenaline junkies. We're chasing the next, it's like a casino, the next ding on the machine, the next spinning wheel, the dopamine, right? We're impatient as a breed. But that's the biggest fault, because with a lack of patience, you don't wait for these ideal setups to come around. The third reason I think people fail in this is that they don't know how to find it. So we need to know what we're looking for. We need to be patient and wait for them. And when we need to have an efficient way of finding things. And that is what a system is all about, something that can provide all of those qualities. And that's what I've studied my entire adult life. And I love it, right? So you start to look at kind of where we're at in the current climate, and say, oh well, are we in a bull market, or are we in a bear market? Well, I mean, ultimately, it doesn't really matter. I mean, as traders and investors, we can make money in both directions, and perhaps more importantly, it's not a stock market anyway. There's no such thing as the stock market. It's not a bull market or a bear market. I challenge you to try and get away from that terminology, because it's not a stock market. It's a market of individual stocks. Unless you're just buying the S&P, then you may be buying the market. But if you're investing in individual stocks or options on individual stocks, then it's what those stocks are doing that actually determines your success. So bull market, bear market, you can make money in both, but more importantly, there's individual pockets of weakness and strength in every market. And so if you take a look at where we're at in the current market, or who wants to have a quick look at that, put in the chat box right now. If you are bullish on the market right now, type bull. If you're bearish on the market, type bear or growl, whatever you like. Here's some of the data. So I like to follow what people do, not what people say. And even more, I like to follow the data instead of the stories. So let's get rid of the stories and the headlines and the geopolitical events, as important as they may be, and let's focus on data. What is the data saying about the market at the moment? Well, the data is saying that over the last 1 month, last 4 weeks, you can see I took the screenshot today, May 21st, what has not the market done, but what have all the stocks in the market done? Over the last, it's got 7,182 stocks up and roughly 4,000 stocks down. Okay, so where's the movement mostly going? Up. Now, if you just threw darts at a dartboard and you were invested in the averages, the average, kind of the middle ground of where most stocks were, most of the movement in the market for the last entire month combined has been kind of in the middle. And so that's what the median means. So if you took 100 people and you lined them up from the shortest person to the tallest person, the person in the middle of that pack would be the median. That's what that essentially means. Now, but what about the average? What was the average performance? So if we take everyone's height and averaged it out, this is what we get here. 13.55. So over the last month, the average move for all stocks in the market has been up 13.55%. That's the average move, 13.5% for the last several weeks. Now, I'd like to ask you this question. How many people here have actually seen their portfolio grow by 13.55% in the last couple of weeks? Put a 1 in the chat box if you have, in which case congratulations. Put a 2 in the chat box if you haven't and are wondering why. All right. Again, congrats to those who are putting 1s and the 2s. Here's where this kind of starts getting interesting. See, the average move of the market has been mostly made up of outliers, not just to the bullish direction, which in this case is stocks that have gone up 30+% or more. Stock can go up an infinite amount. That's why it says plus infinity. So you got quite a lot. 900 out of 10,000 have gone up significantly. So too on the downside, you've got roughly around 700 stocks that have gone down significantly. So if you look at the market, really a lot of that movement that we're seeing has been derived from certain slithers versus all stocks. That's the kind of point I wanted to kind of share with you in this data. If you take a look, go back to some of the kind of other key points we've seen over the last 2 weeks, you can see that, for example, this was the beginning of May. This really shows that, right? And the first week of May, the average movement for all stocks in the market was 24% in 1 week. And I can almost guarantee that everyone here didn't make 24% that week in their portfolio, right? In fact, I talked to a lot of traders in a webinar back then, and a lot of them would have actually lost money. Why? Well, again, that average was taken from that certain pocket of strength where stocks in a certain area were going up so much, were so strong that they lifted the water for all boats. You know what I mean? That they lifted the average up so much just in that small slither. And so you can see that it's not enough just to be throwing darts at a dartboard. I mean, if you could maybe get away with that at the lows of 2008, you could make, or 9, you can probably get away with that in the lows of 2020. You may have even gotten away with it at the end of last year. But when you're in a market that is already now at all-time highs, when you're getting into frothy territory like this that could go higher, but it's harder to find those diamonds in the rough, we really need to come back and be looking at where the quality is instead of quantity. Quality trades, not quantity trades. And this is valid in the markets like we're in today, and it's valid even in market drops. So if we go back to the markets of this was the beginning of April, where we had that nice pullback in the market. Well, even when 6,000 stocks were down and only 3,800 stocks were up, which you'd consider a down market, right? Even then, there was such strength in some areas that the average move of the market was still up 3.86% because of the strength in the few, right? So who finds this interesting, by the way? I hope I'm not getting too technical and boring you, but if you're enjoying this, let me know, and we'll keep going. I talked about what people do. Well, what I'm sharing with you is what I do. It's what I look at every day, right? Now, I mean, if you take a look at the April 12th, I'm going to bring this to your attention, talking about diamonds in the rough. So here is a day where the market's dropping sharply. The market was down from 52.20-ish to 51.20, about 100-point drop on the S&P that day. What was I doing? Was I going short because that's the direction the market's going? Was I going long? Well, I can tell you, it was actually both. So as the market went down 100 points that day, we can come back to this in a second. As the market dropped 100 points, I actually went long and short. 2 completely different directions in the same day. I was short Coca-Cola, I was long GERN, I was long CNXA, I also bought puts on RSP, which is the equally weighted ETF for the S&P 500. I went long and short. Why? Because I don't trade the stock market. I trade my strategy, in which case this is the smart surge strategy. And again, this is something very exciting because we're just rolling this out now into MetaStock, and very, very cool. So next time you see me, I'll have all my MetaStocks slides replaced. But so it's quite an exciting day for in our community, and you too, hopefully. But when you see these setups, what my strategies and what I'm talking about here is the culmination of all of those years, all of those many, many, many late nights the algorithmic nature of how money moves in the market. And what that's kind of really all come to a head just recently in the development of this strategy is really being able now to find and fingerprint exactly what I'm looking for. And so what I'm looking for when I search for trade setups is something that doesn't look like the market. I don't want to buy something that looks like the market at all. Otherwise, why not just go and buy an ETF? Why not just go and buy the S&P? If you're looking for average performance, buy an average, buy the averages. I'm looking to find those stocks that are the diamonds in the rough, the quality, not the quantity. And so I'm looking for things that look nothing like the market. In fact, that's why when the market's going down, it's one of my favorite times to scan for longs. Why? Well, what quality do you want in a long more than anything in an uncertain market? Well, I want the quality of it being able to perform even when the market's down. To me, that's perhaps the best quality of any long that they could have. The ability to go up even when markets go down. That's like armor. That's armor I want on my portfolio. So this was a great example of that. It was going straight up as the market dropped. That's one quality. Second, other than being unique, we're looking for specific volume profiles. We're looking at 3-day, 5-day, 10-day, like different time frames of volume to look at if a certain kind of algorithm we've developed that identifies smart money. Right, that volume, the algorithmic firms, high frequency trading institutions, that kind of buying that's going on behind the scenes, that's what we want. See that that's occurring. We're also looking at other things such as how much the stock is able to move, where it's closing in its range, is it making new highs? We're looking at all these qualities that otherwise, and what I used to have about eight or nine different indicators on my chart to accomplish, stochastics, on balance volume, Clement channels, right? Analysis paralysis. And that's fine if you've spent 10 years studying all the indicators, but for most people, it's way too much. And your mind and your brain just simply can't calculate the relationships between 10 different mathematical equations. It just can't. But a computer can. Technology is pretty amazing these days, as I was talking about earlier before we got started officially. And so when we see this green arrow, this is saying we have a smart surge here. We have something special. That was one of the stocks I showed you before that I bought. There it was on the daily chart, or on the 12th and 13th and 14th, 3 days in a row. It was signaled off. And there it is on the hourly chart. For those of you that trade intraday and day trade, there it is on the hourly chart as well, right? But before I bought it there on the 12th, you can see it picking it up also on the hourly time frame. So what we're looking for here isn't any time a stock may go up, or we're not looking for every turning point. We're not looking for every turning point where a stock might go down. We don't want a lot of signals. We don't want quantity. What do we want? Quality. So this is the situation of one of the longs I took that day. Now, at the same time, on the same day, I was also shorting Coca-Cola for a nice little in and out. Why? Well, you had a bearish upward channel broken down through support. It's a nice, easy pattern to learn. But then if you zoom in on the hourly chart, and you can see, aha, what have you got there? A bearish smart surge, which is looking for those same qualities, but in the bearish direction. And so there we have it. And that was what I was waiting for. That was what I was looking for, searching for. And so as you can see at the open on April 12th, shorted 1,000 shares of Coca-Cola at 58.79. Now that might seem like a lot. That's a $60,000 position, but my risk, my stop loss was only an $80 stop loss. So I had a $60,000 position, but my stop loss was $80. As soon as I lost $80, I would have been out. How did I have such an incredibly tight stop? Well, because I shorted it right at resistance, the rule of the pattern, right? The pattern, if it had gone any higher, would have been proven wrong. So when I know the rules, and when I have probability on my side, I can execute with confidence. I can take larger positions if I want to, like I did with this. I don't have to, and I don't always. But and I can have a very controlled level of risk, and if it does go my way, a potentially terrific return. In this case, it was an $80 risk from a stop loss perspective for a whatever it was, $800 reward, $600 reward, exiting there at the end of the day. So I just use it as an example because I want to show you the, this is something that I live and breathe every day. I love this, but you know that this is going two completely different directions in a crashing market that day, and still going long. Right, this was another one, GERN, and that was alerted on our smart surge 1, 2, 3, 4, 5 times before it then broke out the channel. That was where the execution was, I think, there around $3.50, and then up it went and sold that one as well. So, by the way, you might think, well, these are lower price stocks like Coca-Cola isn't. GERN, get lower price stock, but it's still pretty liquid, right? That's what I care more about. I don't really care whether it's a 5-cent stock or a $50 stock. What I want to know is, can I get in and out for the price I want? Is there liquidity? So this is a $2.14 billion company. Well, it was when I bought it, and traded an average of 17 million shares a day. Well, I'm not worried about my little trade, you know, anything compared to 17 million shares at $3, you know, so it's just under $60 million worth of money going in and out of it each day. I think I'll be fine. So, you know, don't let price fool you. Look at the value. Look at the price times volume. And so that was a nice little move as well. Anyway, that just kind of to bring you full circle around what this, how this starts to look. It's getting away from this idea of constantly be chasing the headlines and looking at, is it a bull market, is it a bear market, are the rates going to do this, are the jobs report going to do that? You know, if you look at the market today, I think more stocks went down than up. I think it was 60% maybe went down. Don't quote me on that. I was looking at it before the market closed. But despite the market being up today, most stocks were pretty weak. So I mean, we've got to look for those diamonds in the rough, the quality, not the quantity. By the way, I thought I would share this little quick photo because I was showing this to a friend right before we started the workshop. That's actually from right behind me about an hour ago. That was talking about bear markets. Bears walked right up to the picnic table behind me, and with 2 little baby cubs. So a little bit on point with our topic today. But this is. But I say that because this is what I love to do. I love being out in the RV, and I love being out in nature. I mean, we've got one life. That's it. Then it's gone. We can't buy another one. Not yet, anyway. You know, and so time is precious. And one of the weaknesses I had early in my trading was spending so much time chasing dead ends, and so much time with analysis paralysis, and so much time going endlessly through the research process and following false prophets and things like that, which is wasting your most valuable resource. Instead, the game changer for me was getting rid of all that noise and then focusing in on one strategy. One strategy. It's better to do one strategy really well and be ignorant about the stock market as a whole than to be a genius about and know everything about the economy and know everything about the market and be a big know-it-all, right? Which I was at one point, but not be making any money. book smart or street smart. There's a lot of book smart people. You see them on TV all the time. They sound very smart. But I'm not sure when you look at some of the things, the studies that have been done on this, a lot of these things on the talking head programs don't make money. So to me, especially if you're going to be out on the road or if you're going to be doing anything with the time that you want to, you need to have a strategy. You need to have rules. You need to have a way of finding them. You need to have a system. Right, and this is, again, why I talk about this word over and over. The smart search strategy, smart search system is about bringing all these things together, right? And there are several things that we need to have when we look at a system. And I call them the 3 Ps. Right? So for those of you who have been around with me and Acorn for the last 18 years, you'll have heard me say it since we began back in 2007. The 3 Ps that I studied all these patterns with, I spent 6 years full time studying just patterns. Again, no fundamentals, no nothing, just patterns. And I'd look at which one do I want to specialize in. I don't want to be an expert in 143. So which of these 143 patterns should I specialize in? What's going to be my niche? What's going to be my business as a trader? Well, how do we qualify that? How do we decide which pattern to focus in? Well, firstly, and perhaps the most common thing that people jump to is probability. I want a high probability strategy. Well, that's great and all, but probability on its own is worthless. Why is probability on its own worthless? Well, there was a company that, I can't remember what they were called anymore. This was early on in my days. I signed up with this company. They had a 93% success rate. We have a 93% success rate, guys. Why wouldn't you sign up? So I did. Yeah, I can't remember how many thousands of dollars it was. And I went in and I thought, well, how can you go wrong with 93% success rate? So I started buying all these stocks that were alerted. And what do you think happened? It didn't work. Lost quite a bit of money. In fact, almost all of them lost. And I thought, well, how the hell did that happen? And then I started doing a little bit more digging into this, and I realized, they never sell the losers. So if you never sell a loser, it's hard to have any losers, isn't it? You got me, right? The only losers were the ones that went bankrupt. So probability on its own means nothing. What you need is probability and profitability, the second P. And profitability, by that I mean what is the risk versus the reward. So if I've got a stock that I can find, let's just say at support at $10, and I am absolutely convinced that it's going to go to 12. It's got all the things that I want in a chart and so forth. I really like the company, whatever the case might be. So let's say we've got a 20% potential return there if it hits the target. Right. Should I take the trade? Well, we don't have enough information yet, because what is the risk? What is to take that opportunity? If we took this trade and our stop loss was at, say, $9.80, where we've got a 20-cent stop loss for a 20% for a 20-cent stop loss for a $2 reward, well, that would be a hell of a trade. And those ones are actually hard to find. 10-to-1 risk reward ratios are quite rare. You do find them, but not every day. So that would be an extreme example of a phenomenal trade, like the one on Coca-Cola. I was able to get that exactly at resistance. So it was a phenomenal trade because I had a roughly 10-to-1 reward to risk ratio. I only need one winner to pay for 10 losers. all my trades were that good, one winner pays for 10 losers. You could get it right 2 times and get it wrong the next 8 and still be making money. But most people wouldn't think a 20% win rate was very good, but it's profitable if you do it that way. So you see what I mean? We need to be thinking about both. And so in this case, if the stop loss was down at 8, would that be a trade worth taking? No. Now we're risking $2 to make $2. Well, now you have to get it right 70%, 80% of the time, which is hard to do. Some people can, most don't. Even the best hedge funds in the world, some of the highest, most profitable high-frequency trading firms, some of the most profitable algorithms out there are only correct 45% of the time. But they've got risk-reward right, so they just do it over and over and over and over and basically print money. So if you were to think which of these two things is more important, probability or profitability, which is risk management, risk reward management, which of these two do you think is more important, number 1 or number 2? Number 2. Certainly that's my opinion. It's just my opinion, because you can have a great system with this without probability, but you can't the other way. You can't have probability without profitability. You can have profitability without probability. But in my almost 20 years doing this, and the 6,000-7,000 people that we've worked with over the years, almost all of them, which I've talked to at least once personally, I just know people don't think that way, because we're emotionally geared. We like winning, but what we should like is making money. And so it's about putting these few things together as a system and enjoying it. It should be fun, right? And so this is where the smart search system failed early in its development, because I started working on this. It was almost one of the first systems I started on back in 2003, and I loved this system. I really figured I'd figured out something no one else had, and I loved it. And the problem was that it was so hard to find. Then this is the third P, predictability. Can we find it? Because in any kind of big breakout, in any kind of big move in the market or stock, what's the number one problem with a breakout? Number one problem. What's the number one problem with any breakout? Right? Think about, let's just say Head and Shoulders, for example. How does it work? It goes up to resistance, back to support, and then it breaks out. And why is a Head and Shoulders pattern so dangerous or potentially profitable to the downside? Because it's a fake out. It's a head fake. It breaks out, which means it draws traders and investors alike in to buying as it breaks out. Smart money then have a ton of buyers to sell to, and they dump their positions or even short into that. Stock pulls back. Trader or investor A, who's just bought in thinking it was a great trade, now gets stopped out. Stock pulls down, hits support, rallies back up again. And trader A goes, oh, again, I stop out just before it moves. Oh, you know what? I'm going to get back in. Even worse, I'm going to double down. I'm going to make back those losses from the first trade, because I know this is going to be a good one. It was just a little bit of, a little bit of noise. And then they buy back, and then it gets really nasty. It's a quick way to wipe out an account. I know. I wiped out 3 accounts early in my trading days. Expensive lesson to learn, but one I'm glad I did. So the goal, however, is to try and learn this without erasing tens of thousands of dollars, which to me was my entire life savings at the ripe old age of 20 years old when I wiped out my last account. So thankfully I learned that lesson, but it's a painful one, and most people quit. And so what's the problem with breakouts? Fake outs. And so finding a really genuinely good diamond in the rough, a quality setup, is difficult because there is so much noise, and especially in a noisy market. Where are those stocks? Right? Where are those stocks that make up this? Or, if we're going short, this, because they exist on every day. We see these diamonds in the rough in both directions. Those are the ones we want. And so for me, this was a process of manually going through thousands of stocks that I was spending about 8 or 9 hours every day looking for just one, and it was tough to find. But now we can, as Jeffrey talked about before. MetaStock's a terrific program for scanning, and that's why we have done so much work in the past. It was probably one of the first programs to really ever give you that customizable capability of building in your own algorithm. And so we've been working on that for the last few weeks to bring it into MetaStock now, and so it's quite exciting. But that's the game changer, the third P, predictability, being able to find it. And being able to find it is valuable. On average, we find about 5 to 10, but on the lower end, 5 to 8 smart surges a day. 5 to 8 out of the 10,000 stocks in the US that I scan. Now, if you want to scan other markets like the Canadian markets or the Australian markets or the stocks in Germany, you can do that too, as long as your program supports it. And of course, with MetaStock, you do have that capability of accessing all those worldwide exchanges, which is really one of the great things about it. So it's only limited to your imagination and the quality of the tool that you have. And so this is a game changer. And the smart search system is probably makes up at least, I'd say, 80-90% of the stocks that I've been trading for the last, since October, since when we started to do the early releases. Stocks like TSM. Now, this specific one I didn't buy. I bought the next one. I'll show you that. But TSM, right? Markets rallying, markets taking off, semiconductors on fire. TSM, Taiwan Semiconductor, up from $85 to $110. Is it too far? Is it time to sell? I mean, the stock's up 50%. In most cases, that would be time to sell, wouldn't it? In most cases, if you made 50% in a couple of months on a large cap stock like this, you'd be over the moon. You'd think, oh, I'll take some profit here. In most cases, you'd be right. But in this case, it was actually one where everyone running this scan in our community and trading room that we host, we're looking at this as a new time to buy. The difference was it was a smart surge. It had the qualities that even though it was already up 50%, we'd been able to detect that smart money was accumulating in the very specific way that we need it to, for it to be a quality setup, and was likely to run further. And it ran another 50, well, just under 50% from there. That's one of the cool things, is that now we can start scanning for this, and we can scan for it in MetaStock, TradingView, Thinkorswim, Incredible Charts, TradeStation, Wealth Charts. It's terrific. It's not just the #1 breakout strategy, but it is my absolute favorite strategy for these market conditions. And in any market, you're going to have risk, in bull markets and bear markets and sideways markets. But what this is about doing, as we started off talking about earlier, is this is about taking calculated risks. Nothing is 100%. Only my girlfriend, she's right all the time. Just kidding. But the taking calculated risks is about understanding how to measure risk. You can't measure risk if you don't know where you're getting in and where you're wanting to get out. You can't measure risk if you don't have a target and a stop loss. You can't measure the reward and the risk if you don't know where to get in and where to get out. This is the problem I've always had with a lot of mutual funds and things like that. I said to a mutual fund advisor about 20 years ago, and it always stuck with me. He said, oh, I manage, I won't say the fund's name, but he said he managed, I think it was $200 million in Canada, $200 million of funds. And it was the aggressive fund, the active fund. And the market had been very active at that time when we had this conversation. Anyway, he was signing up for our one-on-one mentorship. He was wanted to work with me for 12 months and learn the stock market. And I said, don't you know about the stock market if you're managing $200 million? And he said, well, but we're not buying and selling like that. I said, well, what is it? And he said, well, we just buy. We're always buying. Never really trying to time the market. Never trying to get out. I said, so it's just buy only. Just keep buying anytime, all the time. He said, yeah. I said, well, that's crazy. How can you ever realize a profit if there's never an exit strategy? If the exit strategy is when you need the money, well, that's not much of one, is it? And so, you know, this all comes back to having rules. And that's what a system should give you. With a smart surge, there is absolutely where the rules tell us to get in. An aggressive entry, a conservative entry, which was called type 1 and type 2. There is a first target, there is a second target, there is a stop loss. All of that should be predefined, in my opinion, before you even have a single cent at risk. We do this by setting up what's called a bracket order. So I'll pre-program my trades to say, if the stock goes above this price, buy it. And then if it goes to there, sell half of it. And then if it goes to the second target, sell the rest of it. And if it doesn't work out, because sometimes they don't, if it fails, get me out right here. And now I have a defined risk and reward. And I always want to make sure the risk is worth the least reward. It's easy to say, a 10%, 20% stop loss? Yeah, no worries, because it could go up 100%. Well, maybe. What if it only goes up 10? So, you know, it's great to have the ones that run, but the way I work and the way you can too, if you decide to be part of this program today, is we teach you how to build every trade around the minimal expectations. The plan for the worst, hope for the best. So that's kind of a big mantra for me. But we do find some great ones. Garmin was a beauty. That was one I was in from 116 up to 120. Bang, right? Smart surge 1, 2, 3. Triggered around through 118, so automatically triggering on the way up, and then hitting its target, which was up at 120 and change. What was that? 128, and I sold all of it. Now, that was a nice 8% move. Very happy with that. It did later go up another 27%, which was another potential new entry point. I didn't trade the second run, but caught the first one. CGC, Canopy Growth, that's been on the tear. 1, 2, 3, 4, 5 days in a row from $3 to 11, and then went further up to 14, I think was the high after that. Again, I mean, these are things that would have been on your scan every single day for 5 days. And it works in multiple time frames. Daily time frame. TGTX was another one I was in. I loved that trade. Yeah, actually, there's a screenshot from my brokerage. In fact, you can see set and forget right here. Bought it at $13.03, was up $1,300. So certainly not the size of my Coca-Cola trade, but so I bought that at $13. My stop loss already raised to $17.93, well above what I paid for it, and the target at $18.93, which you can see it hit. Now, it's important to mention that stop losses don't guarantee an exit. Things can gap down, so always be aware of the risks and talk to your brokerage about how stop losses work if you're not familiar. But yeah, daily, weekly, on all time frames. And that's what the big upgrade that we've been working on for the last 3 months, and again, why today's event to now be releasing this in MetaStock is quite exciting. I'm going to fast forward though, because despite my 5 minutes of extra time, I'm sure I'm running into my own time deadline here in the next 10 minutes. So we'll see if we have any time at the end. We'll come back to it. But this, to me, is fun. When you enjoy something, you are far more likely to do it consistently. And when you do something consistently, it's more likely to get a more consistent result. So, I mean, if you want consistency, use the same scan. Use this, like, find the stock the same way. Trade the risk reward the same way. Create consistency if you want consistency. Jumping from one mentor to the next and subscribing to 50 gazillion newsletters and listening to every talking head under the sun is to me a recipe for disaster. I just know because I've done it. I've beat my head against that wall. It's not fun. It certainly wasn't profitable. This to me is fun. I know exactly what I have to do. I can sit down, open my laptop, and be done within an hour max. And that's if I've got a lot of research to do. Because I'm just running two different scans, looking for the longs and shorts. And I think that's awesome. If you agree, let me know. Let me know in the chat box if this is talking to you. Because this is not just about giving you more time. This isn't just about seeing the bears in nature and looking up at the sky and seeing the aurora borealis, things that money cannot buy. But those things are actually free. All it costs you is having the time to do it. But it's not just that. It's about the fact that I think by doing it this way, it's actually more profitable because it's taking the noise out and allowing you to focus and enjoy something that is simple but sophisticated. Very much so. That's the Smart Surge system through and through. And so the program we put together for all of our MetaStock community here is it's only been done twice before. Once when we released it to our Acorn members, and then once again recently when we did it for another special, very, very special event we were part of. So this is the third time. You guys are seeing it for the third time, and this is the same program we offer to members of ours who've been with us for years. Some of them have been with us 14, 15 years. So first and foremost, what you're going to receive is the lifetime access to the Smart Surge indicator, lifetime access to it. So all the upgrades, everything that we are working on for the next release, all of that's included for MetaStock, Wealth Charts, TradingView, Thinkorswim, and TradeStation. Ninja Trader's next. And I'm working on TC2000 as well at the moment. So that's probably going to be the next one, actually. TC2000 next, and then Ninja. So if you do buy today and your program isn't listed, you will still get that upgrade to when that is released in Ninja Trader or TC. But the indicator without the scanner would be worthless. It would still be valuable, but finding it is key. So we're also providing you the scanning system that we find these crazy good breakouts. They are crazy good breakouts. That's how we find them. It's a click of a button focused on if you want to trade optionable stocks only, include that. If you want to trade mega caps only, add that. If you want to trade stocks in Australia, that's fine. You're only limited by your imagination or more acutely what your software can do. And if you are using MetaStock, there is really no limit, right? We've got a quick start course that I just recorded, which I take you from the very beginning of setting the program up all the way through running the scans and picking out setups. You get to look over my shoulder and see exactly how it's done in that quick start course. And then for those of you that want to go further and learn more about patterns and some of the patterns that Smart Surge is built from, the Advanced Finding Flags course is just incredible. It's a $2,000 course on its own, and we're including that complimentary today, which is anyone who wants to kind of step into the shoes of my shoes of the research and all the journeys I went through in discovering this. That's what this course does. It teaches you how it's built, why it's built, and all the things that are built into the scan that make it so special. It's a $2,000 course. So the value is truly spectacular. It's over $10,000 in value. You've also got your own personal VIP coach to help you, white glove service, as Jeff mentioned earlier. We're big about that, and they'll be with you for a full 12 months, a full year, to help you practice and anything but. Can't give you financial advice, but anything but that, they're all yours. and we're including all of that for only $9.97. So that's, I mean, the value is huge. And on top of that, we're also going to give you access to our Smart Money Alerts, which is my 5 favorite trades I publish each week of setups that I'm looking to set and forget, which combine the pattern and the insiders together. And we send those out at the beginning of every week. We're just about to send a new video out tonight. So this will be a great way to kick off your journey with us. 5 alerts every week, live trading room every Tuesday, Thursday. That's at 4 p.m. Pacific. All that's included, and you're getting all of that for 12 months as well, including your own personal coach. So there it is on the screen, and I'll put the link there in the chat box, acornwealthcorp.com/meta. All right, now I don't know if we have 4 minutes left, or if, Jeff, you let me know if you're there.
I am here, of course.
Okay, I wasn't sure if I'm reaching at 5 to the hour or 3 to the hour or on the hour.
Whatever. Yeah. I don't see a lot of questions, so if you have questions for John, let me know. The only real question I have is, why would anybody want to use anything other than MetaStock?
Well, that's the thing. I was rushing to try and get the charts updated, because there's some really cool things. I love MetaStock. It's really great, and the new improvement. Because I've been working with MetaStock now, again, like 15 years, I think, Jeffrey.
Yeah. No, I'm kidding. But we did bring up the comment earlier that if you fish for a compliment, you'll usually get one. So
yeah,
I'm really glad you're supporting the MetaStock platform with this. I'd love to see it here.
Oh yeah, it's good. It's so cool. I was the last update that was done in MetaStock. I think it was 18, or maybe 18 RT or 17. There was one where it was the one where the really big kind of graphic update happened, and I was already so impressed with MetaStock since we started back, again 15 years ago. But the effort that MetaStock has continued to put into developing just a really top-notch tool is great, and they continue to do so. And the heat maps and the profit maps that came out, I remember when one of your colleagues was talking about that in a Vancouver conference, and we were there with them doing
I remember that. I think I was there.
Look how far we've come, and for us, this to me is one of our most exciting things we've done in 20 years, because I love to teach, because I love to share things I think just people have to know, especially when you're managing something as important as your money and your retirement and your income. I mean, not doing it right is worth tens of thousands, because doing it wrong will cost you much more than that. And so I love teaching for that reason. But now the tools that we've developed with the help of platforms like MetaStock has been able to take take me 20 hours to explain up here and put it into a chart. That is invaluable. So thank you so much for making that possible. And it's a real thrill to be here again today. So again, guys, I'll leave that up there. It's acornwealthcorp.com/meta. And
we put that in the YouTube chat as well, too. So
yeah. And options, stocks, the whole thing, we talk about it all, currencies, cryptos. But my favorite, however, is stocks with massive insider activity behind them in both directions. So you'll get to see all of that starting today. So thanks again so much for being here. And I will see if the Bears come back.
All right. Very good, John. Let me go ahead and kind of take this back. Thank you again for coming with us, spending some time with us. Appreciate it. Let me do this. Let me go ahead and dismiss. Yes. I'll go ahead. Oh, yeah, I logged back in. So I need to actually do something here to change my name. So big thanks. I want to thank all of our sponsors again. I will go ahead and talk about TechnoTrader for a minute. TechnoTrader has been a big partner of MetaStock for a number of years. We appreciate Martha kind of stepping up and doing a sponsorship. They do a lot of mini courses that you can take advantage of. I'm going to go ahead and kind of put this in here in the chat. I'm just going to grab it right here out of the thing, so I had to type it in. As we know, a little bit earlier, had a little bit of a problem with typing some of the URLs in there. So let's go ahead and kind of avoid that. Anyway, if you go to that link, you can get some free mini courses. It's available. You can grab them right now. Martha is a CMT, a chartered market technician, a very, very talented and great technician. So do it. Do it now. Go. We'll wait. While we're waiting, Greg and I are going to do another prize. Greg, are you ready for some assistance? Or to assist me, I should say. Greg? All right, let's see. How about Tushar? I see your microphone is on, Tushar. Maybe you can help me.
Sure.
All right. We're going to give away hello, this is Tushar Chande. I'm going to give him a proper introduction in just a second. Tushar, I'd like you to help me give away the prize of the day.
Wow.
We're going to give away 3 months of MetaStock. Have you heard of that software?
Tell me about it.
We're going to give away 3 months of data. We'll give the real-time version out, as well as the data, as well as 3 months of Learn MetaStock, which is a really cool training website that'll help you learn about it. And all I need from you, Tushar, to give away that prize is I need you to give me a number. And I need that number to be anywhere between 1 and 7,981.
How about 1876?
1876. Is there that sounds like a year to me.
Yes, it is. It has some significance. Let's put it that way.
Okay. Bob S. With a Yahoo address. So Bob, what's going to happen is I'm going to go ahead and kind of as soon as I get Tushar started, I'm going to go ahead and put you on a spreadsheet. And then when I get around to it next week, which will probably be early in the week, but after Memorial Day, I'll drop you a message. We'll need to collect a little bit more data, it looks like, so that we can give you some real-time data. It's a requirement from the exchange, but I'll just reach out to you so we can get that all done. So if you also want to get an extended trial for MetaStock, that's where you can pay for a month and get a second and third month for free. Go to metastock.com/conf-promo, metastock.com/sales-chat, or give us a call at 800-882-3040. So without further ado, a good friend of mine, Tushar Chande. I remember, I'm just going to kind of introduce Tushar in this way. Tushar he worked with Stanley Kroll a couple years ago, and he created an indicator called the stochastic RSI, as well as there's some other systems that are kind of general purpose that have been out there for a while. And the reason that I recognized Tushar when he gave me a call was how well his systems had performed in system tests that I had run over MetaStock for decades. So Tushar got a hold of me and said, hey, I want to kind of design some stuff out in MetaStock. I have some ideas. I was all over it. So Tushar has written a couple books, The New Technical Trader and Beyond Technical Analysis, the great books. But what a gifted technician. And we love having him in here. Very, very smart. I love he might not talk about it, but I love I think it's an acronym that he uses about getting out of a profit early or getting out of a losing, I don't know. It's kind of like Tops Cola, that's it. Right. Take our profits slowly, cut our losses always. So anyway, I'm glad you knew what I was talking about, Tushar. Let me make you the presenter.
Okay.
I can see you. I can hear you. You sound good.
See my screen?
And I see the workshop screen. So
okay, great. So I'm gonna I'll start off my presentation. Good. Everyone see that?
Yeah.
Okay. So thank you everyone for hanging around. It's been a long day, I'm sure. I hope you've been enjoying the speakers that have been lined up a little bit before me. I'm having so much fun. Now I'm inspired to go out and get a camping van now because John was so inspiring, and now we know what the definition of a bear market is. Whenever you see bears in his backyard, it's a bear market. So that makes our job easy. All right. What I'm going to talk about today is my complete toolkit for MetaStock, and we'll kind of do more of a deep dive, sort of trying to get a sense for how things work and so on. So let's get started. The usual disclaimer, main thing to remember is that risk of loss in trading and past performance is not necessarily indicative of future results. And then I have one other disclaimer here that the charts here are for explanatory purposes, so they may not exactly match the templates that are in my package because they were done a while ago. So don't get hung up on slight differences in how the charts look. And then you can check out my YouTube channel. I put various things on based on whatever is catching my interest for the day. Sometimes I'll talk about some new indicators I'm experimenting and so on. So I hope you'll take a chance to look at it. Okay, let's dive in. So here's the problem. We have a needle in the haystack problem. So if you think of this haystack as an exchange or as a collection of opportunities, somewhere in here is an opportunity that's really great and that really fits our style and purpose. And the problem is, how do we find it? And this could be any exchange or any instrument anywhere in the world. And the short answer is that my package will help you do that. So it essentially answers two questions. If you're new to trading, and I know it's very overwhelming, the only question you need to worry about is it trending? So tell me something that's trending that I can trade it. So I'm a trend follower, and it doesn't matter what time frame you're using. You can be a trend follower on a 5-minute time frame. So the first tool you can use is something called a Chande trend meter, which basically gives you trend strength. The second question is, okay, give me a system. Now, a system is a complete set of rules that tell you when to get in, when to get out. And if you've been listening to the two previous speakers and the ones before, they've all been urging you to be systematic. So what does that mean? So let's dive into that a little bit. So in this particular package, I have 3 types of systems. I have a trend following system, a long-term system, which is sort of difficult for people to visualize because everybody's trading on a shorter and shorter time frame, which means you should be counter trend and trade on a longer term time frame, and then 2 counter trend systems. So that's kind of the general layout, and we'll go into great detail, and hopefully all of it will make sense to you. So I'm going to start by diving into some testing. Now, let me give you a disclaimer about testing. Testing means different things to different people. There's MetaStock gives you one set of tools. I have my own home cooked different set of tools, and there's all kinds of limitations with testing. So testing is not everything is cracked up to be, so you have to be a little careful. But this gives you a flavor of what I'm talking about. So this is a long-term system. I have and I tested it on QQQ stock. So there's no optimization in the system, and there's no selection bias in terms of which stocks I pick. But obviously, I picked tech stocks, so to that extent, there's some bias. I use 10 years of data, so there's no handpicking there. And in this particular test, 51 of 101 stocks were profitable over a 10-year period, and this kind of gives you a sense of what's happening in the upper panel. I've sorted them from the worst loss to the highest profit. And this is sort of the signature of a typical trend following system. You have a bunch of stocks in the middle that don't make money, and then you have a few losing stocks or trades, and then you have all these big winners on the right-hand side. And it is these outliers, these very strong winners, that help shape your overall profitability. And the average winning stock, for example, the average losing stock here by the stock as a whole, not a trade, was about minus $1,300. The average winning stock was, say, $11,000, so quite a big difference there. And the net profit was $487,000, with total trades of 622, with about 50%, 51% being profitable. So again, I think some speakers have mentioned this before. You need to have a combination of things. That is, you need to have a certain level of profitable trades, and there's also the ratio of average winning trade to average losing trade. So you need to have some level of profitability, if you will. Okay, so let's look at the next one. This is the swing system, which is another counter trend system. Again, 10 years of data on the QQQ stock, so I have no control on what's in there. Now here, if you look at this upper panel, I've not sorted it, so you can see that they're mostly green bars. And if you look down here, 86 of 101 markets were profitable. So pretty much everything is profitable over a 10-year period. The average losing stock was about minus 4,000. The winning stock, average winning stock is about 16,000. And the net profit was significantly higher, like 1.3 million. And here I did a little more digging, and we had about 10,500 trades. So lots and lots of trades. So you can believe the statistics. We're not hanging on just a handful of trades. And about 44% of the trades were profitable. So again, not a huge number, but the average win-loss is maybe around 2 or maybe a little bit higher. And then lastly, there's the volatility breakout system. Again, you see that there were a couple of big outliers, and the rest were more or less small losers or small winners. About 48% were profitable. Obviously, the percentage is wrong there. I just copied it from the previous slide. And the net profit was about 174,000. So rather than get bogged down in, is it profitable? What does testing mean? Let's sort of give you an overview. Like, what are the implications of what I'm showing you? The first is that this is testing over a long time period. So we're not talking of 10 trades over the next 2 months or the next 2 weeks. And then I used a portfolio of stocks. So we're not relying on 1 or 2 stocks. There were maybe 100 stocks in the portfolio, but there was no optimization. So all these systems are completely robust. There's nothing in the systems that are specific to these 100 stocks, and you can use them on any instrument and any market or any time frame. And the really hard part is systematic execution. So you got to ask yourself that if you want to be systematic, are you willing to take every single signal for your target portfolio and execute it faithfully without any deviations? And I did that as a professional manager for like 20 years, and I tell you, it's a non-trivial problem. It's very difficult to systematically execute a trading program where you have completely pre-specified rules on where you're going to get in, when you're going to get out, and what your trade sizing should be. But to do it over like 15, 20 years is a tough problem. And you have to ask yourself, are you willing to do it? So if you're serious, you got to commit to being systematic for a long period of time. And that's what the other speakers are hinting at as well. And of course, very important to understand that this testing I showed you does not include capitalization. That is, I haven't really talked about a drawdown analysis and portfolio volatility. So I'm just wanted to point out that, would you be willing to trade a relatively large number of stocks for a long time, being systematic? And of course, you'd have to add money management and all that, but just psychologically, it's a really difficult thing to do. But that's the path to profitability. So we're back again. What's in the package? We have the Chande trend meter, which answers the question, is this thing trending on whatever time frame? And then we have the systems. And you kind of have a general sense for what the systems do, and I've shown you some limited testing. Okay, so let's look at the first tool in the package, the Chande trend meter. So in the upper panel, we have the trend meter. Basically, you have a scale from 0 to 100. And in the lower panel, have NVIDIA. So you can, I think we all know what NVIDIA is up to in their earnings tomorrow, etc. But what I want you to recognize is this. When you have a strong uptrend, you get values above 90, close to 100, and there's nothing down below here. All the readings are up in the upper half or the upper edge of the indicator. Now, this is Amazon. And again, we have CTM in the upper panel. And what I want you to see is that there was a general downtrend in Amazon in 22. And during the downtrend, we got readings below 20 and below 10. And there was nothing here, nothing above 80. So that's the thing about this indicator. When you have a strong uptrend, you're not going to get anything like below 20. And if you have a strong downtrend, you're not going to get anything above 80. So it gives you an instant answer to the question, is this trending? And of course, the next part is trending higher or lower, and you can tell that by the value, whether it's near the top of the panel or the bottom of the panel. Now, MetaStock has a fantastic scan engine, and this is an example of the package gives you a scan that's built in. And this is a scan I did for the QQQ. We got 101 stocks, and I just sorted them by value of the trend meter. Now, as a practical matter, whether you're at 99 or 96 or 95 or 94, they're basically the same reading. There's not that much of a difference. But so this is a way for you to hone in. So you can start with 100 stocks and only have 36 to focus on. So that's a tremendous reduction in your workload to say that I only want to trade things that are trending. Now, on the right-hand side, you can see that this is a daily chart here of Costco. Now, what I want you to recognize is that in the upper panel, we have the trend meter, and the trend meter went, say, above 80 and above 90, and the value of Costco is below the 100-bar breakout. This is this dashed line. So I don't want you to get hung up on values like, oh, this is a 100-bar breakout or whatever. It's very complex, and I'll show you what it is. But what I want you to recognize is that you can use a scan engine in MetaStock to answer the question, is something trending? And you can pick whatever universe that interests you, whether it's stocks or ETFs, or you might prefer energy stocks or whatever. Now, this is an example of the long-term system. So this is NVIDIA still, daily data. You see that we have these 3 green lines here. These are sort of bands, and I want to be outside the band as a measure of a long-term. Here we are taking a breakout near the 100-bar breakout, and then we have these trailing stops. I've shown red dots and purple dots, sort of 2 different levels to exit. The system is built to exit on the red dots. So in terms of if you're a new trader, just give me a system. Here it is. You have a long-term breakout. It gives you, and on the left-hand side, I have the summary of the commentary. It gives you a trailing stop, gives you the high-low close, gives you the trend meter, so you know it's trending. And essentially, the question you have to ask is, suppose you want to trade NVIDIA, would you be willing to take this breakout, sit through all these ups and downs, and everyone and his brother saying it's overbought or whatever, and then get stopped out here? Then would you have the commitment to re-enter and then get stopped out again if you had to, and then maybe you will get a new entry over here? So even though NVIDIA is going higher and has gone higher for a while, still trading it as a different proposition. And you could do it with a long-term system, or you could have found it with a scan without knowing anything about NVIDIA. This is NVIDIA daily data, but I have the volatility breakout system, which is one of the counter trend systems. So if you look in the middle of the chart here, we have the like a green dot here, and this is the green arrow. So that tells you that's where the entry was. So there's only one trade on this entire chart, but met the volatility breakout criterion. That is, we had a big gap up, and it buys above the high of the gap up bar, and I'll again discuss it in a minute. So the point is that you could, the same stock, in the previous slide, we had a long-term system trading it, and now we have a volatility breakout system trading it, and we got only one trade versus many more trades. And then again, we have the commentary that tells you the breakout level and trailing stop, so you don't have to invent any of those. They're all ready for you. All you have to do is systematically put in your stop every day. This is NVIDIA daily data with the swing system. So this is a different logic. And this system buys strength after weakness. So you see we have more trades. If you look at the left edge of the chart, we have some moves up here, and then some moves over here, some moves over here. And of course, it caught this move as well that the volatility breakout system had. And then we also have an entry within after the most recent lows in mid-April. So the point is that the same underlying price action can be captured by systems with different logic and different trading horizons and different exit plans. And so you can capture different types of market action using different trading systems. And then again, the commentary gives you an entry point and an exit point and so forth. And then here I have the swing system applied to S&P 500 or the SPY daily data. And this is somewhere down here, we have the October low. And you see we got the bounce up from the October low, then we got stopped out. The red dots are exit. So it's very important to realize that the reason I'm showing you these red dots is that when we first get the entry, we have no idea where this trade is going. So all we're going to do is use the red dots as our reference, and we are long until we get stopped out by the market coming down and going below the trailing stop or the red dots. And then we had 3 trades that caught the entire up move really well. And then we also have an entry 2 days or 3 days after the most recent April low. So this is a counter trend system that buys strength after weakness, but it's not just a matter of the entry. There's also an exit. So the entry and exit work together because you have to somehow manage the speed of entry and the speed of exit, and you don't want one to get too far ahead of the other and so on. And if you look at the strip down below, here at the bottom of the chart, there's green bars and red zones and light green zones and so forth. And that sort of is another categorization of the trend strength. And if you look at it, for example, during the decline from July down to October, it right away said that it was mostly red most of the time. So, the downtrend was an effect. And then starting in November, it picked up the breakout and it stayed green almost for the whole duration of the breakout. So that's another way to sort of get a sense for what's happening in the market. Okay, so let's summarize. I showed you testing. I showed you like a brief preview of what these systems do. I have the trend meter, which answers the question, is there a trend? And then there's the three systems, the long-term system and the two counter trend systems, right? So the first question is what to trade. And you can do that with the trend meter to find something that's trending strongly. And if you're a counter trend trader, you'd want to have something that has a low CTM value. If you're a trend follower, you want something with a high CTM value. And the second part of it is how to trade. And then you need entry rules, exit rules, and trade sizing rules. And if you've been listening to people today, they've all been referring to the same things. And what I want to point out is that it's easier said than done, right? Because you have to commit to these rules. And then some trades will be positive, some will be negative. You don't know in what sequence the trades are going to come. So unless you are really, really confident and believe in the system, you won't be able to trade it. So every day the market will ask you, what do you believe? And you can only trade what you believe. So if you don't believe in the system, you won't be able to trade it. And which is why I've shown you some test results and so forth. And if you get, I encourage you to get the package and experiment with it, play with it. You don't have to take my word for it. And the most important thing to recognize is that there's no optimization. So it's not like I've specialized system for bonds that won't work on soybeans, or I've specialized system for soybeans that won't work on oil. Or if I'm trading oil, you can't trade NVIDIA with the same rules, etc., etc. So it's very important. So if you are new to trading and if you're learning to trade, make sure you understand this slide, that what to trade and how to trade. Do you have an entry point? Do you have an exit point? And how are you going to size your trade? So again, summary, what's trending and how systems. Okay. So again, in summary, you know that we have the trend meter, then we have the long-term system, the volatility breakout system, and the swing system. Okay. So if you think of it as entry logic and exit strategies, what this chart shows you is that the trend following long-term breakout system has a volatility stop as the exit strategy. Then the counter trend systems have what I am calling a delay channel exit strategy. And the CTM can be used with either breakout, either trailing stop. So when you think of what are you getting from this package, you're getting some entry rules and entry logic, and you're getting some exit rules and exit logic. And I've given you some pre-packaged combinations of entry rules and exit rules because of the speeds have to match. But in theory, you could combine any entry condition with any exit condition. But make sure that before you start the trade, you know what your entry condition is and what your exit conditions are going to be, and of course what your trade sizing will be. Okay. And then for all in the package, there are scans and commentary available. So there's a scan for each of the trend following systems and the counter trend systems and the CTM, and there's a commentary for everything but the CTM because there's really no commentary required for the CTM. All right. And then this just gives you like an overview on the left-hand side. This is what the results of the exploration look like, which I'm sure you've seen before. And on the right-hand side, there's sort of a description of what the commentary looks like. And that gives you a sense gives you like an entry point and an exit point and some little words to tell you is it a long position, is it 10 strong, weak, so on. So, you can go to somebody's class and, spend 10 weeks learning this and that, or you can just take this and start using it from day one. As I think Steve was saying, everything is cut and dry. There's no judgment required. There's no discretion in terms of should you use it or should you get in or get out. Everything is laid out. It's up to you to follow the system. And as you saw in the testing, it works great sometimes. It works not so great sometimes. But over a period of time, a long period of time, you're likely to be profitable. Okay. So to summarize, the design philosophy is very important. There's no optimization. The same parameters for all. This is very critical to understand that there's no optimization, because the rules are more likely to work in the future if they have no reliance on the past. So you say, why is this important? We don't know what's going to happen in the markets in 5 years. So you need to have rules that are not somehow designed or rely upon some unique things happening in the market now or today, and they do not. So there's no optimization. The universal, you can use on any exchange instrument. The entries are trend following or counter trend, and they're only trend following exits. So there are no counter trend exits. And this is what Jeffrey was talking about, top scholar. So we want to take our profit slowly and cut off losses at once. So this seems obvious, but this is trend following philosophy. And if you listen to John, he was saying the same thing. He had a whatever $80 stop on a $60,000 trade. So the idea is that he is willing to take his profit slowly, but he wanted to cut off losses at once. So it's very important to keep the top scola, which is really the trend following philosophy that you can use, of course, ideally on the time frame that makes the most sense to you. Okay, so we're going to take a small break. Hopefully, what I've said so far will make sense to you. And I think one of the most important parts of this package really is the Chande trend meter. So I want to spend some time showing you what this means. And it'll when you think about what some of the earlier speakers have said, it'll make sense to you why it makes sense. Okay.
Would it be a good time to interrupt with some questions?
Oh, absolutely. Let me just, yeah, go ahead.
All right. Michael just asked in chat, when you're doing your testing, do you test your profits with or without fees?
Will you repeat do you test your profits with what?
Do you test with or without trade fees? I think he means commissions, but
oh, of course, no, you have to include commissions. I mean, I have my own homebrew software because remember I was a professional money manager, so I have my own tools. And basically, what I do is I roll up everything and look at it on a monthly basis. I have a monthly equity curve, and I do a very detailed equity curve analysis and a win-loss analysis. And if you look at some of my earlier talks, I explain why the various ratios are important. And of course, you have to include slippage. I mean, there's commissions plus slippage. So particularly for futures contracts, slippage is a definite factor. And depending on when you're entering, you may get a lot of slippage or not a lot of slippage. So depending on type of orders and market conditions. So yes, I definitely consider both slippage and commissions. And of course, for the particular test I did, I just showed you the defaults in MetaStock, whatever they are. But for my own trading, I just trust my own software because I've traded millions and hundreds of millions of dollars with it. So
perfect. And then the last question, I'll let you go on.
Is go ahead, absolutely. I'll take a break and have some chai because it's still tea time on the West Coast.
Okay. Matt wanted to know what does the price charts on the colors mean? So why does it change from blue to green and so on and so on?
On which chart?
On the charts earlier, there are some charts that are blue, and there are some like.
Yeah. I think the short answer is it's arbitrary because there's no particular significance. I've done these charts at different points in time, and whatever the defaults were. I'm sorry, I should be more consistent, I guess.
Oh no, you're fine.
I'll be consistent next time.
With this one, just looking at it, blue means that it's in trade.
Yes, so that's a good point. It depends on how the default is set up. So, for example, for the NVIDIA, let's get back up here. Yeah, like here, for example, it's in trade, so it turns blue, and rest of the time it's not. But like for example, here we have the blue dots for the long-term system, so you know that you're in the trade. Otherwise, it's just sitting around, just doing green for up bars and red for down bars, so to speak, or up closes, down closes. And here there's no change. We don't have a signal yet, so and this is CTM, there's not a system, so it's just doing the the usual green and red colors. Yeah, it's a good question.
Yeah. All right, it's back to you. Thank you for allowing me to get in the way.
Oh, please feel free to ask questions. This is the end of the day now, so I appreciate everybody being here and answering questions. Okay, all right. Let's get back down here. Okay, so the CTM has 5 different time periods and 5 different classes of tools, so channels and so on. And the big okay, so let me stick to the. So this is all the various things that you have to look at to construct the trend meter. So suppose I told you like there's all these different lines, they mean something, they're on different scales, and look at 100 charts and figure out what this means, right? It's just a mess of lines, you have no idea what it means. And how do you weight it, how do you combine it, what parameters do you use, and so on and so forth. But luckily for you, I've sorted it all out. So this is Costco, the lower panel has daily data for Costco, and then these are all the various lines that go feed into the trend meter. So imagine taking all these crazy lines and converting it to one line. That's very important. You just have one line to look at, and the trend meter, of course, is a scale from 0 to 100. And here for simplification, I've just drawn lines at 80 and 20. And then you see that, for example, when the market is, when Costco was trending, you get values above 80, close to 100. And then here, when it was sort of going sideways, you had the CTM was in neutral area. So we have 5 different time periods, 5 different like patterns and channels and bands and whatnot, and oscillators, and how do you combine them, right? And how do you weight them? And I weighted them so that 70% is trend persistence and 30% is trend strength. So you can either look at each one individually and squint and say what's going on, or you can have one single indicator. But that just gives you a sense that developing this indicator was a complicated problem. And I think one of the earlier speakers was saying that they had a zillion 10 things on the chart, and how do you figure out what's happening? And this is more than 10 things on the chart, but if you can reduce it to a single line, hey, even I can figure it out. And of course, the whole idea is you can scan it. The real value of the trend meter is you can scan, and the scan has been built into the package. And when you scan it, now you can rank it. And obviously, there are some quirks. You could have 5 or 6 or 10 or 20 objects out of 500, all with the value of 100. And so then you have to find some other way of differentiating between them, like volume. Or there's no real difference between 98 and 95 or 98 and 90, but there's a real difference between 95 and 85 or 95 and 65. So obviously you have to be a little judicious, but it gives you a way to reduce your workload and to answer the question consistently across all instruments, because now you can compare a bond ETF to a currency ETF to a agricultural ETF to a metals ETF, all on the same scale. And you can compare, say, Mumbai to Tokyo to, say, New York. And so it's tremendously valuable that way. Okay, so I wanted to show you the Costco chart. So this is what the Costco chart looks like. So when we had this very strong trend here, you see we had values above 90. And then let's go to the next chart. So we had this big consolidation here. And you see during the consolidation, we never got above 90. We only got above 90 when we had a breakout outside this gigantic triangular consolidation. And then a couple of places where it dropped below 20. So if you were trying to trade Costco, of course, you could try to get these swings, or you could say as a breakout style trader, I don't have to do anything. And when it broke out of this triangular consolidation, remember, it tried to break out here, it didn't quite get above 90. And then you had this breakout, and sure enough, you got above 90 or well above 80 anyway. So it's a way to characterize the market with a single number. And if you remember all those many lines that were on that chart, you can draw more lines, and then your problem will be how do you combine them. And then the red dots, of course, are the volatility exit. So you must have an exit when you trade. This is a bit of a close-up look at Costco. And what I wanted to point out was when we had this breakout here, right, we first went above 80. We didn't really know where it was going to go. There's absolutely no idea. So that's where the value of the trailing stop is. So as some of the earlier speakers said, you have to shut out the noise and just look at the chart, trust your chart. In this case, trust the CTM, it's above 90, it's trending. You have a trailing stop, so your position is protected. And for example, here, I'm sure there was a cry of overbought, blah, blah, and nothing happened. Then you have another little overbought situation, little correction here. And then could the system have caught the exact high? The answer is no. And we're not trying to catch the exact high. We just want to capture as much of the trend as possible. And remember, the only way we do that is by using the trailing stop. So it's very important to have good stop discipline. And here what I've done is I've put the two different, remember we had the delay channel stop and we had the volatility exit. So here the green line is the volatility exit, and then the red dots are the delay channel exit. Now you say, well, what does that mean? Well, remember, if you go back to the previous chart, that's there. That is a breakout here where we first got, over there. So that's the same point here. You could have taken the green line, which was, the volatility exit, and gone all the way from, say, here to there. You had taken the delay channel exit. You would have gone up here and been stopped out once. Then you'd have to re-enter, and then you'd have stopped out somewhere over there. So if you change the exit, it affects where you get out of the trade, and it also affects the amount of the trade sizing for the next trade. So here, the advantage of using a looser exit is you could take a large position all the way to very close to the top of the trade, whereas here you'd have to have, with the red dots, you'd have had 2 trades over the same amplitude, or the same move itself. So it does make a difference how you combine the entries and exits. And this is a visual example. Now here, I've got E-mini NASDAQ, we've got daily data, and a relatively long time frame starting in January 23. What I wanted to and of course, remember the market bottomed October. What I wanted to show you was that this is an exchange, this is an index, and yet when you have a strong trend, you get values above 90. But of course, the indexes tend to be a little more choppy than an individual stock. And then during this decline, you see that we came straight down. There was no doubt that it was not trending higher, and we didn't really get, well, maybe barely got a little bit below the lower 20 area to show weakness. And then when the market started rallying, it got above 80, above 90. So you can either listen to the experts and the guys in the room or whatever else as various speakers have been referring to, or you can look at the chart and you can use a trend meter. And the trend meter is unbiased, is not affected by emotion, is not affected by whatever else people will be saying on TV or in your chat rooms. It's just giving you a single number. You had all those different lines, but it's boiling it down to one number. So you can apply it to an index. And then here, I still have the E-mini NASDAQ, but I'm on a 5-minute chart, and it works exactly the same on the 5-minute chart. Again, we have a little bit of an uptrend here, and then you can see that we have values above 90, and then a little bit of an uptrend, values above 90. So it works the same way. And again, during a sell-off, let's just say one more thing. So the CTM is a snapshot, right? It doesn't tell you how long the trend is going to persist. That's not its job. Its job is just to tell you on this bar is it trending or not trending. So for example, here, market went down. So on this bar, it doesn't know that it's going to rebound. It's just going to say it could keep going lower. So it's giving you a reading below 20. And then when the market rebounded, the values rebounded. So in a sense, you're getting a snapshot looking back about 100 bars and some complex combination in between. Okay, so let's summarize. It's for apples to apples comparison. It's based on closing prices. It's on a scale of 0 to 100. You can use 80-20 or 90-10. It looks like other oscillators by design, but it's completely different. Another important feature is plug and play. You don't have to worry if you do the 14-day RSI or a 28-day whatever, stochastic or whatever. You just plug in put in the indicator, you're done. You don't have to select any values. And as I've shown you, near the top, near the bottom, it kind of goes flat. It'll stay above 80 for a long time, or stay below 20 for a long time. And you can use it on any time interval. And just as a rule of thumb, if your chart interval should be 1/10 to 1/100th of your holding period. So that just gives you a sense for how you should use your time. Okay. So what I'm going to try and do now, I'm going to just run through the systems and give you a quick understanding of how the systems are constructed. So if you want to use them, you can kind of have some confidence. So the volatility breakouts is a 1-bar hurdle. It's just looking for a gap up. This is Tesla, but it's looking for a gap up, and then you enter on a high above the high of the gap up day. And that's it. And then you have a trailing stop. This Tesla was in a consolidation, got a big 1-day jump outside the triangular consolidation. It's in, then you have a trailing stop. So this is Tesla with the volatility breakout. This is the entry. We got a big gap between this and that. You enter above the high, and then you have a trailing stop. And this got you out, say, 3 days or 4 days after the absolute high of the move. Now, again, remember, when this happened, we have no idea where this is going. So that's why you need a trailing stop. And then this is a more recent example, Apple. We had a strong a gap up here. So again, the entry would be like over here, and then you could use a trailing stop to get out. This is an example of doing a search. We have the scan, so you can run a scan for volatility breakout. This is a scan I did earlier today. You can pick whatever you want. And it picked out, the first on the list was this Ether strategy ETF. And you see there's a big gap up. Now this chart is interesting because we had a big gap up here, but it didn't go above the high of the gap up day, and it reversed. So we'll never get an entry. So we have a gap up today. So until we get above the high of, say, today, we won't have an entry here for this particular system. So this is an example of finding opportunities using the scanner where you already know what the entry rules are and what the exit rules are going to be. And then you can adjust your trade sizing based on your risk profile. And in terms of the swing systems, the swing system is a multi-bar setup. So we have a signal line, which is a green line, and we have a trailing stop. And generally, we need at least one close above the trailing stop. And then we want to buy above the high of the day where we had the close. But you can play all kinds of games here in terms of where you want to set the entry bar. and how many closes you want or how many lows you want or whatever. But the idea is that you have a trailing a signal line and a trailing stop. This is Abbott, again, same thing. We have a close above the signal line, then we have entry above the high, so you'd be in here, and then eventually see we had a little consolidation and then a breakout above. Now, it's very important to understand that we are going against the trend. So you need really good gap discipline, and trailing stop and gap risk is an important problem. So for example, because you're pushing against the market, you have a downtrend, you get a little bit of a bounce, you're in. Now the downtrend reasserts itself and you could have a gap down against you. So that's one of the biggest risks of this model. But then again, you see that it was able to catch the swings as they emerged. So this is important to understand, that you need to maintain good gap discipline. And then this is another failure mode. This is Verizon. And there was a series of entries and exits. And this also happens during an index where you get 3 or 4 losing trades in a row. But you saw in the testing that out of 10,000 trades, about 41% were profitable, and the overall system was very profitable. So it's a counter trend entry, but because you're pushing against a downtrend, the trend can push back and knock you out, and that could happen multiple times. So clearly, if you get say 4 or 5 losing trades, you need to step out or drop that particular market and wait for it to recover. And then again, this is a more recent example, Apple. This is sort of the signal line. You see we got a signal here very close to the low. Now we have a trailing stop, and then the commentary and the help with the thing gives you a trailing stop here, and that tells you some value of what the short-term trend strength is. So again, it's all ready for you to use. You don't have to think about it, and just use the scans, and then of course you can choose what you want to trade. And then this is an example of the swing system on NVIDIA. So for example here, coming off the little pullback in December, we got in. Got this first leg and got the second leg, and we're also in on the most recent move up towards the all-time highs. And tomorrow should be interesting. So again, here we have the swing system commentary, tells you that the short-term trend is weakening, so give you a little sense for it, and then gives you a trailing stop. So you know where the trailing stop is going to be, so you don't have to guess where you should get out. And of course, remember that we talked about slippage. So even though, for example, hypothetically you had the trade on and you put a stop tomorrow at 8:13. And let's say for whatever reason the market doesn't like the earnings report, it could sell off here. But if you're not trading after the market close, you may not be able to get out, and it could gap down on the open on Thursday morning. So you got to sort of have to understand how these stops work, and just having a stop in the market is not enough, because it could gap open below the stop. So your loss could be greater than what is indicated with the trailing stop. But on average, it'll average out. So if you use it over and over and over again, on some trades you lose more, on some trades you'll get out very close to the stop. So on average, it'll knock out the effects of some adverse movements. And then this is a long-term breakout system. It needs very strong persistent trends. There's a high level of smoothing, so it's slow to enter. You want to be restrictive, and it'll be slow to exit. I showed you examples. We're not trying to catch the absolute top of the move, and you need patience. Are you going to sit through all these reversals and listen to all the market noise? So this is Fortinet. The bands give us the starting point. The 100 bar is the entry. You see that the blue arrows tell us we're in the trade, and then it went all the way to the top, and then we got out on this little bit of a reversal. Now you can imagine that you can talk yourself out of the trade 100 times during this thing. So you really have to have commitment. And this is an example of where it came very close to hitting a stop but did not. So, it has its own challenges, using a long-term system and holding a position for days and days and days. This is an example of the ARC Innovation ETF. You see, one of the problems with the strategy is that you could have rapid reversals. So it entered here above the band. So we definitely have an uptrend. We had a nice strong uptrend all the way. But we have these quick reversals. So the quick reversals can get you out, and you could still have, you have a losing trade here. But on the other hand, we don't know what the market is going to do. So you kind of have to play the game. And if you get stopped out, you get stopped out. But you can set your stop differently. And I'll show you an example of that. This is an example of AMN Healthcare. The reason I want to point this out is it started off on the left-hand side and then had this one big reversal because they had a new CFO or whatever. So you need to have your stop in the market. So even though on this particular day, you could have got some slippage getting out, depending on how liquid the stock is, you had to have your stop in the market, because otherwise you'd be way below. where your stop needs to be, or where you want to get out. So stop discipline is essential and important for the system. And then the stop is calculated where you use some highest high of X days and you subtract some multiple of volatility that does that number. So the larger this number, the bigger this term that we're subtracting. So the looser the stop. So larger the number, wider the stop. So this is an example of that. We are still with AMN, and this is the exit point. I've shown you purple dots are 4x and red dot are 6x. So we can say, wow, on this trade it would have been great if it could have been 4x. I would have saved some money. So you kind of have to decide what you're comfortable with. Over a long period of time, a looser stop works better than a tighter stop because of all the, the average win, average loss numbers will all be more in your favor with a looser stop. But on any given trade, you can convince yourself that you should have gotten out earlier, or should use a tighter stop or a looser stop. Again, I did a run today on QQQ. It found two stocks with a long-term breakout scanner. Netflix was one, Qualcomm was other. And this is you should be able to recognize this. We have Netflix down below. We have the 3 bands. We have the entry on the 100 bar channel that got stopped out. And we have another entry on the 100 bar channel. Blue arrow tells us that we have an uptrend. And then the trend meter is near 100. So this is an example of finding a trade today that got filled today. And that's an example of how the system works. And now we don't know where Netflix is going, but if you believe in the system, then you'd have to buy it with whatever risk parameters you have and hold it until you get stopped out. And then this is an example of the Netflix trade again, just to show you what it looks like. We have a trailing stop over there, and then we'll just follow along and see where it goes. So this is it's a systematic trading, but it's difficult because even though I can give you everything in terms of entries and exits, you have to execute. And execution is a different can of worms. This is just a scan for volatility breakout. Again, it works brilliantly. You can find whatever you want. As an example of CCLD, again, we had this breakout, but we didn't go above the high. So technically, we don't have an entry. But you have to keep searching if you like the strategy. And then again, this is the same in terms of the commentary. You get all these different values that you can look at: the breakout level, the trailing stop, and so on. Okay. So I think we can start summarizing here. You must have what to trade and then how to trade in terms of entry rules, exit rules, and trade sizing rules. And I did it for a very long time, and I had everything totally canned and automated. And still, you have to sit through the market, one day at a time, and that is its own challenge. The package itself is very easy. It's very simple to use. It's very powerful. You don't need 15 lessons. If it's trending, find the markets that are trending now. So the CTM will tell you this is 100, this is 95, and this is 20. So clear sorting mechanism, no ambiguity. We're looking at a lot of different things inside. So all those multiple time frames, multiple types of indicators, all that work is done for you. And gives you a single number, can't be easier. And for the systems, they're all trend following. So top scholar, take our profit slowly, cut off losses at once. This is what Berkshire Hathaway does. So it's not, the question is, are you doing it with $1,000 or, $10 billion, $100 billion? Same thing. Across the board, trending, multiple time periods with a trend meter, long-term system, it's a trend following entry with a volatility exit. And you have the counter trend entry and the delay channel exit. And you can mix and match the exits if you wish. Just a summary: volatility, exit. These two have the delay channel exit, and with the CTM, you can use either exit. But if you want to use the trend following system with the delay channel, yes, you can. As I showed you with an example for Costco, of NVIDIA rather. And check out my YouTube channel. I try to put something about once a week, maybe sometimes longer, talk about a variety of topics, something with the market or something with economic data, PCE, and so on and so forth. It should be interesting. Should be entertaining, hopefully. And then, so to summarize, I hope you'll get the package. It's very easy to use, very simple to understand, and it's very powerful. It really encapsulates a lot of market knowledge in terms of how actually things work. And as I showed you in the early testing, we're likely to be profitable over a long period of time, but it requires a different mindset and doesn't have the same pizzazz of trading on a tick data or 1 minute time frame and it went for however many dollars. I mean, we're talking of making hundreds of thousands of dollars. We're talking of making $600 or whatever. All right. If you have any questions, I'm happy to answer them.
We are currently caught up with questions. So if you have any more questions for Tushar, let us know. We do have a special on this this particular add-on too. And you can get it. I'm going to go ahead and type in the links at www.metastock.com/Chande. That's Chande A for add-on, not Shandea.
Thank you for clearing up the mystery. I was wondering what that was.
Yeah. Sometimes it gets pretty funny too, actually. But in any case, let me go ahead. I actually kind of want to reiterate just how well you've done with this thing. Because I do think you did a good job in helping us put together. Your pedigree in terms of a system designer is actually exactly what I expected, to say the least. But before I do that, I want to say thank you for coming. Thanks for spending some time with us.
Well, thank you.
Thanks for all that good stuff. Can you see my screen?
Yes.
Okay. All right. In that case, I'm just going to basically kind of wrap up and just talk a little bit about what the add-on is. Thanks a bunch, Tushar. I appreciate it.
Well, thank you for inviting me, and thanks everybody for sticking around. Have a good evening.
Yep. All right, very cool. Let me go ahead and do this. We'll just talk a little bit about what's included. With it, he includes some very unique indicators. He just went through them. Here's a list of them: the Chande trend meter, the wide stop, the Vidya, and the SMA envelope. And that one kind of powers this 350 system. He kind of talked in detail about what they are. All these three unique methods. So you've got your long-term, your swing system, and your volatility breakout system. And they do a really, really good job of kind of the goals of what they come out with. So with the long-term system, it's more trend following. It looks for high levels of smoothing. Since it's longer term, it gives you a little bit more room on your stops. The stops are a little bit wider. And it's designed for somebody that wants to be a patient position trader. So with the swing system, you buy strength after weakness. The swing moves last for several bars. It uses tight stops and looks for follow through after a breakout. And then you've got your volatility breakout system, which I really kind of like the way that he looks for breakouts. We've talked a lot about breakouts over kind of the last little bit, but what this is looking for specifically is average true range and a breakout of that, and uses a trailing stop. With the breakout systems, there's a higher risk of reversal with it, and I kind of like how he kind of did three different unique systems. All of them have explorations that you can use. All of them have expert advisors that'll give you advice with it and kind of tell you exactly kind of what's going on with the system, what the stops are. All of them have system tests that you can use. You can go in, add your fees to them if you want to, all of that kind of stuff. So $4.99 is the normal cost of this. That's, again, a one-time cost. $3.99 is the seminar special, webinar special, conference special, whatever you want to call it. That'll include the 30-day money-back guarantee. We did sit down with Tushar. We recorded a boot camp training that's available. It was 2 parts. With it, Tushar shows you walks you through the systems. And after that, I actually kind of go in and just say, here's how you run a scan. Here's how you do system tests. Here's how you kind of open up a chart. And just kind of a boot camp for people if you're new to MetaStock. We get a lot of people that come in because they're interested in the complete toolkit. And they might be brand new to MetaStock. And so I kind of try and give some advice in terms of kicking that off. So there's several ways you can do this. You can give us a call, 800-882-3040. You can go to metastock.com/saleschat. And you can also go to metastock.com/Chande. And that link should be right to the right of the webinar here, or off in chat in YouTube, off to the right as well. So I do want to thank all of our sponsors again: Stocks and Commodities Magazine, CMT Association, and TechnoTrader. If you haven't yet, make sure to go ahead and get your TechnoTrader courses. Very, very good offer there. So, I clicked on the link and it took me to the page. Of course, MetaStock, all of the offers, including all of the specials on the add-ons that we've had, the extended trial, everything you can find at metastock.com/conf-promo. If you have questions, you want to talk to us, metastock.com/saleschat. If you want to give us a call, 800-882-3040. big thanks for being here all the way till the end of the day. We have another great show tomorrow, kicking off. Actually, who are we kicking off with tomorrow? I was ready. I was looking at the schedule. Here it is. So tomorrow we're going to kick off on Wednesday with Price Headley. Price Headley's been rated a top market technician by Timer Digest several times. He was inducted into the Traders Hall of Fame. Very, very big impact in terms of my trading. Then we're going to go to Scott Brown. Vince Vora, another huge person that's had a lot of impact on my trading over the years. Melissa Armos going to talk to us about gaps. Tyler Wood, I've been promising how Tyler Wood's going to talk about CMT and the chartered market technicians. We've got Jeff Tompkins, Dan Passarelli, Buff Dormeyer, and also Norm Hallett. So another day packed full of speakers. I want to see you here tomorrow. Thanks for being here today. Have a good night. Have a good rest, and we'll see you tomorrow.
Hi, Kelly Clement here from MetaStock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTubebook, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those 2 things. Thanks for joining us, and keep on trading.